Good morning, ladies and gentlemen. If you could take your seats, please. We're going to start the third day of our conference. I wanted, just before we begin, just to say a word of thanks, because we didn't get a chance right at the beginning of the event to thank all our sponsors who've supported this event. There are far too many to mention by name, but I just wanted to say that we're extremely grateful to all the people and organizations who supported this event, and of course to all those who attend both physically in person and the many who also join us thanks to the streaming that we've had throughout the event. This morning we're going to be focusing on the economy. It's a very challenging time for the economy, as we've been hearing from time to time, and of course you're well aware. We'll talk, of course, about the challenges of inflation, the challenges of the global economic management, which every country is grappling with because of the pressures that have been brought about by the war. This morning we're going to hear in particular in the first session about Greece and the Eurozone and the financial landscape. We're then going to go on to financial markets in a changing world and global environment. And then we're going to look at the challenges that COVID still poses for the economy and other areas. But this morning, the first two sessions intensely on the economy, and it's therefore my great pleasure to welcome and to invite onto the podium Christos Staikouros, Finance Minister of Greece, Klaus Regling, Managing Director of the European Stability Mechanism, and Pavlos Mylonas, the CEO of NBG Group. Please do join me on the stage. Okay. Well, I'm going to go here. So, if you go here. Yes. So, Finance Minister, never an easy role, but I think for all finance ministers now it's becoming especially challenging. But we hear, and I'm sure you'll give us some forecasts yourself, but we heard at the opening of our event that Greece at least has the possibility of being perhaps a little bit more positive in its growth than some other European countries. Our forecast from the Economist Intelligence Unit was not to downgrade Greece, unlike many other countries in terms of its economic growth forecast, not least thanks to the tourist revenues, which I'm sure are very welcome for you in your role as Finance Minister. But over to you to give us your view of the outlook for Greece in this very difficult environment.
Just as a snapshot, you know me very well. In the last 3 years, we're quite conservative in the Ministry of Finance. So most probably, even in 2022, we will have a growth rate above 3.1%. So I would like to thank the Economist once again for their honorary invitation to today's insightful event which gives us, we have birthdays today as a Greek government, the opportunity and the challenge to share some thoughts regarding the financial landscape in Greece, but also in the Eurozone. After, as you mentioned before, 2 years on crisis, on severe crisis in the fields of health, energy, and geopolitics. These crises are shaping a much more unstable world in which our governments are called upon to work together and develop timely, effective, and far-sighted policies. Amid this crisis and these turbulent times, the Greek economy has demonstrated a remarkable resilience and important achievements as confirmed by all stakeholders, among others, ESM. This is based on the implementation of key policy reforms on 6 fields, on 6 areas, on 6 pillars: fiscal policies, social welfare, financial stability, labor and product markets, privatizations, as well as the modernization of public administration. Over the last 3 years, despite these challenging circumstances, we have voted 333 laws in the Parliament, omnibus laws in the Parliament. Thus, we have achieved major economic goals. I will pick up 5 goals. First of all, growth. The economy is growing. The economy is growing strongly. We achieved a V-shaped recovery back in 2021, while the GDP figures for the first quarter of the year were very strong, 7% year-on-year, indicating, as I mentioned before, that our current projections for 3.1 growth in 2022 may eventually turn out to be quite prudent. Not only prudent, quite prudent. But the second is much more important compared with the first. The composition of growth is much more important. GDP composition positively changes. While the share of non-tradable services is declining, the share of investments and services is increasing. Indeed, gross fixed capital formation increased by around 13% year-on-year in the first quarter of the year, while exports of goods and services increased by 10% over the same period. The third factor has to do with the labor market. Labor market developments have been positive. Unemployment continues its decline, being at the lowest level since 2010. Labor inactivity falls, employment increases by double the size of inactivity reduction, while the reduction in unemployment rate among women and youth is more pronounced compared with the reduction in the headline unemployment rate. The fourth factor has to do with the banking sector, and Pavlos can confirm this. NPLs. The NPL ratio has been reduced from 41% in June 2019 to 12.1% in the first quarter of 2022, from 40% to 12%. And finally, public finances. Public finances have resumed their improving trajectory. Both the budget balance and public debt are recording a significant decline. Indeed, public debt to GDP ratio declined by 13 percentage points in 2021, probably, according to the discussion that took place at the EWG level, the strongest one-year reduction ever recorded in the history of the Eurozone. We also expect further improvement of our public finances in 2022, with the primary deficit shrinking further to 2% of GDP and the debt to GDP ratio falling by another at least 13 percentage points. All these developments prove the effectiveness of the applied economic policy and the credibility of the Greek government, as reflecting, among others, in the multiply upgrades of the Greek sovereign from credit rating agencies, as well as the historic decision regarding the exit of my country from the enhanced surveillance mechanism. However, as you mentioned before, we still face lingering uncertainty, significant challenges, and downside risks, relating mainly to energy prices and inflation. These require persistent reform efforts at the national level, as well as decisive solutions at the European level. We are committed to continue implementing a prudent, reform-oriented economic policy agenda based on 6 pillars. On titles, first of all, providing one-off support measures, especially for the most vulnerable part of the society, households and enterprises. Second pillar, following a credible fiscal path, mainly based on GDP expansion with higher permanent tax revenues, enhanced by growth-friendly reduction on taxes and social security contributions. Indeed, European Commission projects that Greece will present the highest primary surplus among 1% among all EU member states in 2023. Third pillar, implementing a smart debt issuing strategy based on low average annual gross financing needs, proactive liability management, and regular market operations so as to maintain substantial cash buffers. Fourth pillar, enhancing liquidity in the real economy through 3 routes: banks' credit expansion, the development of the loan facility of the Recovery and Resilience Plan, as well as the implementation of the new insolvency framework, which is truly state-of-the-art. Fifth pillar, utilizing public property through the implementation of the Asset Development Plan, as well as of structural reforms. Indeed, we have completed a number of important reforms to digitalize public administration, to reorganize the pension administration, Panos is here, to simplify the framework for investment licensing, to provide a modern corporate governance regime, to establish tax incentives in order to boost research and development, as well as to increase the size of the firms. And finally, sixth pillar, to rationally utilizing the available European funds. The National Recovery and Resilience Plan, Greece 2.0, is in full swing. Today, 230 projects and sub-projects have been incorporated into the implementation phase of total face value around 10.2 billion euros. It is evident that despite difficulties and international volatility, Greece has turned the page. We will certainly continue to work hard in order to overcome the difficulties and strengthen Greece and Europe as a whole. Thank you.
Thank you. So just before we move on to Mr. Regling, pick up one point about that. You said at the beginning, you implied that your forecast of 3.1% growth was actually very cautious and that there might be quite an upside to that. At the same time, you also listed, I think very realistically, the challenges that could pose a threat on the downside. So where is the balance between these two? On the one hand, potential for higher growth, but on the other hand, to some extent beyond your control, things that could throw you off course.
This is why we try to be very prudent on our fiscal policy in order to balance between the positive macroeconomic side of the Greek economy, on titles, growth, investments, consumption, reduction in unemployment, higher deposits, 40 billion euros higher deposits in the last 2 years, and on the other side, much higher inflation. This is why we take advantage of the fiscal space that has been created and will be created going forward, and we will try to add some targeted one-off measures to the most vulnerable part of the society in order to stabilize the situation. So we will try to find a balance in this way. Indeed, our estimations is that we will take measures of around 8.5 billion euros up to the end of 2022, 3.1 of them billion coming from the budget.
Okay, well, I'm sure we'll return to this theme in the conversation. Now, Mr. Regling, you've graced us with your presence here year in, year out at this conference. We're very grateful for that. You have 3 months left of your current mandate, so this may be the last time that you appear at this event in this capacity, but of course you'll always be welcome to join us here.
If we find the next director.
So we're very, I think, more than ever interested to hear your views as you approach the end of your mandate.
Yeah, thank you very much. And it's always a pleasure to come here, and it's really encouraging to see how Greece has developed since I came here the first time, which was around 10 years ago. Greece has come a long, long way. But I think you invite me normally to say something about the euro area and then a few remarks also on Greece to complement what the minister said. And I want to start by picking up the question that you raised in the program that says, can we come out of the crisis with a more cohesive and resilient Eurozone? And my answer to that is yes, because that's what happened before. So I think it can happen again. The euro area became much more resilient through our responses during the euro crisis. I know it was painful, but I think the response was appropriate overall, and the euro crisis is more resilient today as a result. And also the European Union became more resilient through the policy response to the pandemic. Now, of course, we face the war in Ukraine, rising energy prices, commodity prices, high inflation, supply chain problems, and all that is putting a massive strain on the economy, on consumers in all European countries, and of course, in the majority of countries around the world. Such developments naturally lead to a lot of volatility in financial markets. What we see now is that markets are adjusting to a new interest rate environment, and we know that volatility, which can sometimes also lead to overshooting, is a typical byproduct of such adjustments. I'm sure that Mohamed El-Erian will go into much more detail on what we see happening in financial markets on the next panel. But despite all that, I do not see any immediate threat to debt sustainability in any euro area member state at the moment. And I think we should remember that higher inflation, rising interest rates, and market volatility are not just a European phenomenon, it's a global phenomenon. But there are 3 reasons why the euro area is fundamentally more resilient today than a decade ago, and why I think that worries about a new euro crisis, and that's what I sometimes read in the media, are exaggerated. First, there are no major macroeconomic problems in the euro area today, no massive imbalances that triggered the euro crisis 12 years ago. We don't see that today. We have no fundamental problems in individual countries in terms of competitiveness, trade deficits, or weak banking systems. So big difference compared to a decade ago. Second, the interest rate burden in percent of GDP and the public budgets of all euro area countries today are at the lowest level for half a century, despite the significantly higher debt levels. And it's the interest burden in the budget that is also a burden on the economy, not the debt ratio as such. This means that countries pay less money on their public debt today than 10 years ago, and it enables them to carry higher debt. And third, the euro area is more resilient today with its many new institutions which were created during and after the euro crisis. Unlike at the beginning of the last decade, there are now institutions that safeguard the financial stability of the euro area. And here I'm referring to the single supervisory mechanism, the single resolution board, the European Systemic Risk Board, the European Banking Authority, and so on, and of course, including also the ESM. In addition, the strength of the labor market, high savings from the pandemic, the improved situation of the banking sector overall, rising public investment, and especially the recovery fund of the European Commission, Next Generation EU, will all help stabilizing effects on the euro area economy. A few remarks on the Greek economy, but I agree very much with what Minister Staikouras said. Greece has indeed made significant progress, even under the difficult circumstances caused by the pandemic during the last 2 to 3 years. Greece also reached a milestone, he mentioned that in mid-June, moving from the enhanced surveillance to a post-program surveillance framework, the same that we have for other countries that received financial support from the ESM. And this is an important step towards normalization after many years, although some significant challenges remain, and you also talked about that. We see that there is good progress in the implementation of reforms, and Greece should complete those still pending. Economic fundamentals, such as the banking sector, unemployment, competitiveness, have become much stronger, and growth in the first quarter of this year was indeed remarkably strong, as was mentioned. Greece is also better protected from market volatility, partly because of the ESM. The debt service that Greece must pay out of its budget on its debt level is relatively low. It's actually lower than in some other euro area countries where debt ratios are below the one in Greece. And the reason is that the bulk of Greek public debt is with official creditors. More than half of the Greek debt is with the two institutions that I manage, the EFSF and ESM, and requires only AAA low interest rates. And maturities are long, close to 20 years on average. And we, in addition, have hedged a certain share of Greek debt through derivatives on swap operation, which has fixed the interest rate at that share of the public debt at low levels for the next 30 years. So all that helps. And the Greek authorities have entered additional interest rate hedging operations so that effectively most of Greece's debt is at fixed rate with long maturities. That means Greek public debt is now much less affected by general interest rate increases. And Greece has a sizable cash buffer, as we heard. This means that it does not need to raise money on financial markets when volatility is high. Most of the commitments that were taken by the Greek government at the end of the last ESM program in 2018 have been fulfilled. Of course, as Greece's largest creditor, the ESM will continue to monitor the situation, and we do that in great cooperation with the finance ministry and the government. I'm confident that reforms will continue, also because of Greece's ambitious reform agenda supported by Next Generation EU. Greece will get substantial amounts of money from the Commission's Recovery Fund, and Greece has made strong commitments for reforms that will strengthen growth, and all that is positive. But if I believe the risks of a new euro crisis are exaggerated, as I said, that does not mean that countries do not have to be prudent with their public finances, especially the ones with high debt levels. We know that additional fiscal costs will come from demographic trends and aging, and all countries should build fiscal buffers to be prepared for the next crisis. So when asking, as you do in the program, the question, will we come out of the crisis with a more cohesive and resilient Eurozone? Then my answer is yes, we can. But it will also depend on how well the Recovery and Resilience Facility is implemented in all the member states and how much progress we are able to make in completing the architecture of our monetary union. From the last crisis, we have learned that making monetary union more resilient pays off in the next crisis. And that is why I hope we will be able to continue our work that we do in the Euro group, our work on completing things like banking union and capital market union, because that will also be important for the resilience in the future. Thank you.
Thank you. Well, I wonder if in all your 10 years here, that isn't the most optimistic assessment that I've heard you make in many ways, that you seem to be quite relaxed about the short term anyway, and when you turn to the risk factors, you mentioned demographic change in particular, but that plays out over quite a long period. It's not an immediate concern. So it's encouraging to hear you being broadly upbeat about the progress and the immediate outlook, despite all the pressures. I wonder if I could just ask you. Yes,
let me be clear here. I'm not relaxed about the economic outlook, because I think the risk factors are high. We hope that the baseline scenario materializes, but there could be a risk scenario. Doesn't depend on us. Therefore, it's hard to predict. If the energy supplies from Russia are cut off, there will be serious consequences. Where I am more optimistic than what I read in many media is on the situation inside the euro area. Because when I read, and I talked about that because the ECB is now starting to raise interest rates and normalize monetary policy, that will lead to the next euro crisis. There I don't agree with that. On that, I think, and I talked about it, the situation has changed so much. We have taken so many measures in the past to be better equipped. There are not these fundamental disequilibria inside the euro area. So on that aspect, I'm quite confident, and one should not exaggerate. On the economic outlook, it doesn't depend on us, but we have to be prepared.
And I think we want to prod that, and I'm sure the next session as well will look at that and the impact of interest rate movements and so on. But I wanted to ask you, before I move on to Mr. Mylonas, that just to reflect on these 10 years, it's been an extraordinary time to be engaged with Greece and to see Greece emerge from this extraordinarily deep crisis. You haven't always been the most popular figure in Athens, I imagine. What lessons have you drawn from this, and how would you describe the change that you've seen in Greece over this decade?
Well, the changes are tremendous, but the main lesson would be that the mistakes that happened in the decade before the euro crisis was triggered, that should not be repeated in the future. And I'm quite confident that lesson has been learned, because the macroeconomic problems that became very visible starting in 2009 and then in 2010 and 11, and not only in Greece, also in countries like Portugal, Ireland, they accumulated during the first decade of monetary union. They did not come as a sudden surprise, and that should be avoided in the future, and I think we have learned that lesson.
Very good. Now, Pavlos Mylonas, you also a regular at this event. We always talk about non-performing loans with you. You've heard the numbers that the minister has mentioned, from 40% down to 12%. From where you sit, is the situation as much improved as that suggests?
First of all, let me thank you, Daniel, and your team, Joan, Daria. You've created an event which now is on everyone's calendar, not just in Greece, but I think pan-European, so congratulations. Now, I usually focus mostly on banking, but in a world of such high uncertainty, unfortunately, or fortunately, banking and macro are interlinked in a way that I need to focus my remarks mostly on the macro and in Greece, where I am cautiously optimistic, as are the other two speakers. And let me explain why. First of all, on energy supply and security, Greece has very low dependency on Russian natural gas, only around 5% of its total energy consumption. This can be substituted by reduced consumption, which we should all be doing, and I recommend that as a man who lived through the crisis of the 70s, who knows what reduced energy consumption means in each household. We can increase lignite production of electricity in the short run, and clearly Greece, as the minister said, has a huge pipeline of renewable energy sources, and we should be increasing our production of electricity from renewables from around 40% today to 50% very quickly in the next couple of years. Second, we will not see a very large decline in real disposable income. And let me explain why. We have a fiscal policy, which the minister described, and we also have the momentum that has been created for the economy in the past few years, and we should see good employment numbers, employment growth numbers. Let me start with the fiscal. The government has designed a very smart policy which should cover around 2/3 of the energy costs of low-income households. Low income I define as monthly wages of around 1,000, 1,100. Employment growth, which is in double digits in the first quarter and should be about 4% for the full year, combined with wage increases of around 3%, should offset the residual amount of the energy costs as well as a large chunk of the higher food prices. So I think our estimates internally are that real disposable income should not suffer large declines in 2022. 2023, different question. We also have a negative terms of trade shock from energy, but people don't understand or don't forget that we have a positive terms of trade shock from tourism. Tourist prices are up 10 to 15% this year. It's our largest industry and offset tremendously the impact from the energy crisis. We also have large volumes of tourism. This year will be the best year by far for Greek tourism. Firms are profitable. Profits of firms as measured from the national accounts data seem to be at historic highs and should be able to absorb the increase in input costs. Why are we different from the rest of Europe? Why isn't the rest of Europe seeing the same things? A, we're in a different phase of the cycle. Greece has been hardened by almost over a decade of restructuring coming from the Greek crisis, the pandemic, etc. So the firms that are left are the hardened veterans. They can survive most shocks better than more flabbier firms in other countries. Collateral values, which is a key driver of activity, are at lows. We had a 6% decline in real estate values during the crisis. We are nowhere near recovering, so we are at undervalued real estate prices. Also, the crisis has led to low leverage in firms. Firms in Greece, the performing firms, are under-leveraged, and I'll get to that later when I talk about the banks. And finally, on the fiscal, I won't repeat what the previous two speakers said. Inflation leads to good tax buoyancy along with activity. The debt also leads to good debt dynamics. We always need a little bit of inflation to reduce the debt rapidly. And as Mr. Regling said, we do not have a problem on servicing the debt. Only 40 billion are tradable GGBs, and the debt service on the GGBs is, as well as the European debt, is a few billions in the next couple of years. So this all supports low risks of fragmentation for the Greek debt. In the baseline scenario I just described, banks will have a good year. We'll be financing investments, corporate loan growth is in double digits, and the pipelines are strong. We also have the RRF funds, which we will channel, and then there will be the RRF grants that will go directly to the economy, and it's about $3.5 billion this year and $4.5 billion next year. So all this is the good baseline scenario. In a bad scenario, the banks are in solid state. NPEs, and I don't like the ratios because I think the denominators are small. NPEs, net of provisions, are only $6 billion. Less than 30% of CET1 capital. $6 billion. It sounds 12%, but it's only $6 billion in an economy of $180 billion. Profitability has improved for banks, and its core profitability, excluding trading gains, et cetera, close to 10% of CET1 capital. Very strong profitability. So far, many months into the crisis, zero delinquency increases in the early buckets, 0 to 30, 30 to 60. So firms seem to be performing well. And even if we have the increase we will have the increase in ECB rates, 150 basis points, 200 basis points over the next 12 to 18 months. The low leverage, loans to GDP, 55%. Even with 200 basis points, that's only about 1% of GDP higher debt service per year, can be fully absorbed by the profitability that I mentioned, which will increase by about $4 billion this year. So I'm very cautiously optimistic, even the downside. So to conclude, Greece seems to be outrunning the bear market recession, and the key risk is that the Russian bear doesn't upset things down the road.
Well, again, very, very strikingly optimistic assessment of where things are. And you're also bullish about the investment appetite and the investment pipeline. Can I just ask you about that, because that's crucial for the growth. Do you see any signs of that becoming a bottleneck? Can you keep up in the banking sector with the kinds of demand for investment that you're seeing? If I'm a Greek enterprise, am I getting the access to capital that I need?
The two constraints to get capital from a bank are liquidity, and clearly all banks in Europe have excess liquidity, and the second is capital. We have no constraint on either. Actually, the banks are having quite a battle among themselves trying to meet customer demand. So we are seeing a lot of projects come on stream, and there's the financing there from the bank. So that is definitely not a bottleneck.
Very good. Well, listen, I'm waiting for this supreme optimism to be punctured, so I'm going to open it up to questions. Joan, I see your hand going up. I'm guessing you're going to perhaps challenge some of this optimism, but let's hear from. I'm not sure is the microphone working?
Yes, I think so. Well, thank you very
Joan
much.
Hoey, sorry, from the Economist Intelligence Unit.
Thank you very much indeed, gentlemen. I am not necessarily challenging, might do that in the next session, but yesterday, this is a question for the Finance Minister, Mr. Regling mainly, but also Mr. Malonis as well. The French Finance Minister said yesterday that there's no such thing anymore as frugal states, and that the stability and growth rules on debt and public finances no longer made any sense and needed to be reformed in light of what's been happening over the past few years with the pandemic and now the war. So I just wanted to ask you for your response to that. So I don't think he was necessarily challenging the 3% deficit rules, although I don't think France aiming to meet that for quite a few years yet. But I guess the upshot of that is, maybe to challenge whether we might be too sanguine about the risk of fragmentation in the Eurozone when we have debt divergence of more than 100 percentage points among some countries, and we have divergent fiscal policies, and some countries saying we're no longer frugal states, and we're moving rapidly out of an era of extraordinary low interest rates. Is the risk not slightly higher, maybe, than suggested?
Let's go to you first on that one.
Okay, just some comments on titles. Investments. FDIs last year stood at 5 billion euros, the highest level ever recorded in Greece. And in the first 4 months of 2022, they stand at 3 billion euros, so most probably we will have a new record in 2022. Second comment, we have run in the Ministry of Finance stress tests regarding energy prices. We have cash buffers in order to absorb even stress tests in these scenarios. Third comment, debt sustainability. All stakeholders confirmed that Greek debt is sustainable. High cash buffers, among the highest at the European level, low annual financing needs, official sector, significant part of debt on official sector, and fixed rate. Fourth comment, we follow a prudent fiscal policy. We stood at -7% of GDP back in 2020. We reduced it to -5% in 2021. We will go to -2% in 2022, and we will reverse the situation to +1% in 2023. This is the definition of a prudent and credible fiscal path. And regarding the European environment that you said before, we have to complete the banking union, as Klaus mentioned before. We have the third pillar, the famous EDIS. We completed the first 2 pillars during the Greek presidency back in 2014. And after 8 years, we cannot complete the third pillar. We have to go ahead with the Capital Markets Union, and we have to see what you asked me, and Klaus mainly, fiscal rules. Back in November 2021, the Greek government shared with my colleagues at the Eurogroup level the propositions regarding the new fiscal rules. We believe that the revised fiscal framework should ensure that debt reduction paths are not excessively front-loaded in the aftermath both of the health crisis but also the energy crisis. Fiscal policy is counter-cyclical and productive investment is protected. This should also include defense expenditure. Moreover, we support a framework fostering national ownership of fiscal adjustment paths and a medium-term approach in fiscal surveillance, the establishment of a central fiscal capacity as a necessary feature of the monetary union, upgrading its capacity to manage the business cycle, and finally, the adoption of an expenditure rule, although one needs to be very careful regarding the technical aspects of that design. Thank you.
Thank you. Klaus Regling, can you respond specifically to the question on the...
Yes, I think it's true that the last 3 years there were no frugal states in Europe, and it would have been wrong to be frugal when the pandemic hit. I think it was absolutely necessary to have a huge fiscal stimulus program, otherwise the economic cost would have been much higher. But now we have to live with the higher debt ratios in all countries, and that makes countries more vulnerable. But given that the interest burden, as I mentioned earlier in my introductory remarks, are the lowest now in the last 50 years, I think the debt carrying capacity overall is higher than it used to be. And therefore, I think it's important not to only look at debt to GDP ratio, but really look at the interest burden in the budget. And I mentioned that Greece is a good example. Greece has the highest debt to GDP ratio in Europe, but it does not have the highest interest burden in terms of GDP of euro area countries. That's the result of the debt structure. But that's what really counts. That what is the burden for the economy and the budget. So I think one has to go a little bit beyond just looking at debt to GDP ratio. The French finance minister confirmed indeed that he is in favor of keeping the 3% deficit limit, the traditional limits that we find in the Stability and Growth Pact. everybody in the Eurogroup agrees that we need the Stability and Growth Pact, we need fiscal coordination, but we also need to reform what we have had in the past because it doesn't work. It has become too complicated. There are methodological problems with measuring output gaps and structural balances and all of that. So we need to reform. We know it's not easy to find a consensus, but I think the euro area, which is based on a completely centralized monetary and exchange rate policy and a decentralized fiscal policy, needs good fiscal coordination, and that will be one of the tasks of the next 12 months to determine how the reform should look like. And the minister gave some of the principles that will play a role.
And what about the specific question of fragmentation and the dangers that will grow?
Well, I think when you look at if you do not only focus on the debt to GDP ratio, you already see that there's less fragmentation. A lot of fragmentation comes from the growth differences in the euro area. So I think it's important that countries with low growth rates focus on reforms, which is easier today than in a long time because of the supports that comes from the Next Generation EU package to stimulate reforms, to support public investment. I think that is the right approach because the fragmentation mainly comes from that problem that a few countries had very low growth over long periods of time.
Mr. Milonas, yes.
I will not refer to the structural issues, which I well covered by the previous speakers and are in much better shape than before. I'll talk slightly about markets. Markets have a tendency to panic and overshoot, and we saw that happen in the past months. And when they overshoot, sometimes their fear is self-fulfilling. And here we have the role of the central bank to act quickly, guide the markets to what they should expect. And I think that we should thank the ECB. I think they reacted quickly in terms of referring to a fragmentation policy, which seems so far to have convinced markets. So again, there is the fundamentals, and then the markets. Sometimes the markets do not observe fundamentals. The official sector needs to guide them towards those fundamentals.
Do we have another question in the floor for our speakers? Anybody want to ask a question? If not, I'm happy to ask the next one, which is just picking up what you just said about markets overreacting. Also, central banks sometimes overreact. And there's a question, and I'm sure this will be picked up in the next session, about whether the Fed in particular, which is the most active at the moment in reacting, has calibrated it right, and what impact Fed policy could have back on the Eurozone. So perhaps ask the Minister first whether you are concerned that you're going to be having to deal with policy swings in the United States, particularly from the Fed, that could cause problems for Europe.
While discussing it at the European level, both at the Eurogroup and the Ecofin level, what will be the effect of monetary policy movements in the US at the European level. At the same time, as Pavlos mentioned before, we have some quick responses coming up from the ECB. But there is a need for some more clarity regarding the markets. And we expect that we will have this clarity going forward. Regarding especially Greece, we knew very well what are the challenges we have to face. We have sustainable debt, but at the same time, we have high debt. We have a credible fiscal path, but we have primary deficits. We are not in investment grade. And at the same time, we knew very well that monetary and fiscal policy will reverse going forward with higher interest rates. This is why we follow a prudent and coherent economic policy, incorporating all these concerns at the European level, but also at the US.
And inflation for you, how do you I mean,
Inflation.
we're in a world that we've almost forgotten about these levels of inflation.
Definitely.
Managing through a period is not a simple matter.
Definitely, it's not simple. We had the latest figures, the harmonized index of consumer price, 12%, while the Eurozone average was 8.6%. However, just two things. First of all, this is mainly based on the base effects. Last year, in the first 5 months, we had negative inflation, we had deflation, and moreover, both in 2021 but also in the first quarter of 2022, we have much higher growth rates compared to the European average. So this has a positive effect on higher inflation. On the other hand, it seems that inflation will be higher compared with the projections we have done at the European level. Even ECB, I'm sure that they will revise once again their figures for the European level above 7%. The same will take place going forward also in the Greek case. And how we handle it? We handle it at the European level through the monetary policy and at the national level through prudent fiscal policies. I mentioned before what is the package that we are going to implement or has been already implemented in the first semester of the year, amounting to 8.5 billion euros, 3.2 of them coming from the Greek budget. This is how we are going to handle the situation going forward in 2022. However, inflation will be with us at the European level also in 2023 and most probably in 2024. So we have to take prudent actions, having in our mind that this is something that will have some more permanent characteristics compared with what was projected 6 months ago.
Mr. Milonas, can I ask you on inflation? You said earlier that you could remember the energy straitjackets that there were in the 1970s. Well, you surely therefore remember the inflationary environment that we have then. Many younger people are not familiar with this world. What will it mean for your industry and for your operations?
Well, the lessons learned from that period are not to allow inflation to have second and third round effects through wage increases. I think so far, certainly in Greece, but I think also in Europe, we have so far seen restrained responses to second round effects, both in terms of employment costs as well as firms trying to absorb part of the cost. The fear of a slowdown in the economy is bringing down commodity prices and energy prices. Already crude oil is below 100. Let's see if it's sustained. So there are self-correcting mechanisms which are in place, including the tightening of monetary policy. So if everyone gets it right, we should see a rather rapid decline in inflation starting from the fourth quarter of this year and expanding into 23. Now, that's a big caveat, getting it right. Okay.
Mr. Regling, I'm going to leave the final word to you after your 10 years of gracing our conference. So what final thoughts for you on these, the issues that lie ahead, particularly with these challenges of inflation and the shocks that could come from outside to Greece and the Eurozone?
Challenges are huge. I think we heard that. It will depend, how bad it gets will depend on how the war in the Ukraine develops, whether it escalates, what happens to energy imports from Russia. Inflation, of course, has its macroeconomic problems and also social problems. At the macroeconomic level, it's very clear when we have inflation, and I talk now about the euro area of 8.5%, and wages go up by 2, 3, 4%. There's a big loss in real purchasing power, and that necessarily will lead to a deceleration in economic growth. It's unavoidable, and it's really unavoidable because Europe faces a huge terms of trade loss, which is the biggest terms of trade loss Europe has experienced since World War II, and quite different from the US that now has a terms of trade gain, which is a big difference to the 70s when the US also had a terms of trade loss. And terms of trade loss means that one can distribute less than what is produced. We are transferring 3.5% of GDP to energy and commodity exporters. That is lost, and therefore the risk of second round effects, although it's lower in Europe than in the US, but it's more risky because we have 3.5% of GDP less than before, which can be distributed. That cannot be distributed. There cannot be compensation for that loss. Otherwise, we would really end up in a spiral. And in that sense, situation in US is much easier. But at the same time, we have the particular social problem for the low-income earners who are much more affected by high inflation than others. So these are challenges. So as I said before, depending on how energy imports develop, one can be worried about the future, but not about the euro area as such. Let me repeat that.
Very good. Well, thank you. We'll have to leave it there. Thank you all very much for a very informative session. Please join me in thanking our speakers this time. Thank you. Thank you very much. I think they'll want to. Thank you. Thank you. That's great. Okay. Thanks very much. Okay. You're always welcome. It's been a pleasure. Thank you. So the conversation goes on very much on the economy. I'm going to hand over to Joan for the next session.
Thank you very much, Daniel. So we're now going to widen the lens beyond Europe to look at the global picture a little bit. The title of the session is Financial Markets in a Changing World, a Global Viewpoint. And I'm delighted to welcome our two keynote speakers, and we'll have a nice conversation, I'm sure. Welcome Mohammed Al-Arian, who is the president of Queen's College at the University of Cambridge and chief economic advisor for Alliance, the corporate parent of PIMCO. And for the business perspective, I'm delighted to welcome Orestes Psakolottos, Executive Chairman and founder of Qualco Group. Please join me, gentlemen, on the stage, and we'll get the session going. Hello. Yeah, if you maybe sit here. Okay, well, I think we can start with some short opening remarks. I'm sure you want to give your perspective. So first of all, turning to you, Mohammed. For those of us in the forecasting business and for investors and their advisors, we obviously need to try and get things right in terms of our forecast, our growth forecast, but at this moment, particularly our inflation forecasts and our assumptions about monetary policy over the coming period. So maybe you could just give us some initial thoughts about where things stand now and how you see where is inflation heading this year and next, and how are central banks going to be managing monetary policy in the coming months?
Sure, and let me just say it's a great pleasure to be here, and it's wonderful to catch up with friends and colleagues, including two friends that I worked with at the IMF on the prior panel. I say that because I'm going to pick up where they left and make 6 points about the operating environment that faces us all. And what I'm going to do is widen the aperture of the analysis. Because if the aperture is narrowed on Greece and to a certain extent on the Eurozone, I would sleep well. But once you widen it and ask what operating global environment is facing us, it makes for a less nice night of sleep. It's the old thing, you cannot be a good house in a bad neighborhood. You have to care about the neighborhood. And if you look at the neighborhood, there are 6 things you need to take away. Number 1, we are in the midst of a fundamental secular regime change. Klaus Wiglin spoke about higher interest rates, we spoke about higher inflation, food insecurity, energy insecurity. Basically, we have moved from a world where demand was insufficient to a world in which supply is insufficient. And the main driver now of the secular outlook is the supply side. And that comes on top of other secular challenges, climate change, migration, you know the list. The second point I would like to make is the drivers of this change were in place before the Ukraine war. We would be having a discussion on this even if this brutal war had not broken out. But what the war has done is massively amplified the issues. And it has changed the distribution of potential outcomes for the global economy. So here's the distribution of potential outcome. The most likely is stagflation, a period of low growth and high inflation. The right tail, the good tail, is that we go back to high growth and low inflation. And the bad tail is a recession. And what the war has done is it has virtually eliminated the right tail, made it very thin. It has significantly increased the risk of recession for the global economy. It's not still the baseline, it's a risk. And it has maintained the stagflationary baseline. The third issue is that this regime change has caught people by surprise. Policymakers were still operating in a world of sufficient aggregate demand when they were actually facing insufficient aggregate supply. I'll give you a very simple example that I think captures all this. The Federal Reserve. In March of this year, when the United States printed a 7% inflation, the Federal Reserve was still putting liquidity into the system. It hadn't touched interest rates, but it's still putting liquidity. So the policymakers and central banks in particular got caught offside. Companies got caught offside. Suddenly, it's not enough to talk about efficiency, you have to talk about resilience. So when you have an operating model that is targeted as just in time, you tend to forget the just in case. And what we've seen is companies scrambling to respond to the supply side shock. And third, financial markets. Frothy markets used to massive, predictable injections from central banks, totally distorted. There is no safe asset anymore. Correlations broken down, and somehow they have to respond. Which leads to the next issue is, can you solve this? In theory, you can solve this. You can solve this through the sort of domestic policies we heard about in the prior session. Central banks making sure inflationary expectations do not get out of control. Governments focusing their fiscal effort on the most vulnerable segments of the population. Much more pro-productivity, pro-reforms measures. and much greater emphasis on financial stability in the non-bank sector. It's not the banking sector that's the problem. And then there's an international element. A lot of these issues are collective action problems. If you like game theory, this game has to be solved cooperatively. Are we there? No, we're not there on the domestic side, and we are certainly not there on the global side. On the global side, we're trying to solve a cooperative game uncooperatively. So what is the result? Recession concerns, inequality concerns, global fragmentation concerns, and unsettling market instability. And then my final point is what's next? Adapting a phrase that came from the US Central Bank, they said you need skill and you need luck. I would add you need time, skill, and luck. And the time element is important because we've already lost a lot of time. For you, for everybody, is the reality that we are going to be operating in a world that's subject to many more outcomes. This notion of unusual uncertainty. It's not just uncertainty, it's unusual uncertainty. And if you want a basic question that you have to ask yourself is, are you confident that you have the three attributes that you need in a world of unusual uncertainty? That is resilience, the ability to bounce back from a mistake. You don't want to make a mistake, but you're likely to make a mistake. Most mistakes are recoverable if you have resilience. Second, optionality, the mindset that is open enough to think differently. And third, agility, the ability to move quickly when you have clarity. Without the resilience, optionality, and agility, this may be a much more difficult operating environment than it should be. Thank you.
Thank you very much. That's a very useful frame, I think, for the discussion. So before we get into some of these issues in more detail, Mr. Tsakalotos, how are you finding it and your company? We discussed this a little bit yesterday, operating in a high inflation, very volatile financial environment with an outlook of slowing growth.
Thank you very much for inviting me in this wonderful conference. It's truly amazing, and thank you also for inviting this panel. And great to be here. Well, in Greece, in the past 10, 15 years, what could go wrong has gone wrong. So Greece has been a good laboratory to test things and live under uncertainty and have to become resilient, otherwise you couldn't live. But this is still just a good excuse for, let's say, moving forward. There are some more fundamental things that have to be taken care of in order for somebody to be proactive and, let's say, feel or at least wish that can solve some of the current problems. It's obviously that geopolitical tensions will remain elevated. It's obvious that Europe will need to come closer to address countries together and their needs. Inflation will definitely remain higher. The value of money will be reevaluated. We'll see serious shifts in investment and growth projects, to investment in projects that can be totally recalibrated and produce EBITDAs. But Greece can take advantage of this changing landscape in many senses, and in some senses, let's say, dare to show the way forward because of this transformational work that has to be done over the past few years. And I'll stay a little bit more on the transformational word of your logos here. How we're going to take advantage of this technological new kind of boom. How we wish to move from an immense brain drain to brain gain. We can see that by people shifting from the northern countries of Europe to come to work in Greece, not only Greece repatriating. So although money will not be as cheap as it used to be, but in a way, the companies operating in this country and in south of Europe have been trained to do so. So seeing now the potential solution of this concept is, as we live, let's say, in an era full of volatility and unusual uncertainty, as Mr. Elian said, we need to lay some new foundations for some kind of new stability. Key for prosperity and development, words that have a different meaning now. The word prosperity and development have a different meaning in these days. Nobody dares to even say them. In those uncertain and volatile times, is to feed economies with large-scale, technology-based transformational projects. We need to lay foundations for some big transformational projects. In the past history of Europe and the world, these transformational projects sometimes took generations and were never completed. So that, of course, focus on improving the life and add high value to the economy. Transformational projects that affect large numbers of people and lots of communities. This is probably the way to fight volatility, to fight unusual uncertainty, to fight risk in the economies. Major role in this concept is played by high-quality institutional capital, by long money. We need, though, to compress time. The time element is truly crucial, as you just said. And the time now has very sharp limits, a start and an end, an inception of a transformational project and an execution and operation of a transformational project. These two ends lie far apart from the recent past. What's the way forward? In order to minimize time between inception, execution, and operation of those transformational projects, there are four pillars that have to be now seen from now on in a very, very unified approach. One is information technology, but based on fundamental science, a fully scientific approach. Second is financial technology, the fintech known to us. Third is operations and execution capacity. Fourth is institutional capital. These are four elements, pillars, or even different walls, diverse and far apart. We rarely see them together. We rarely see them operating under one hood. Usually, even the experience and working capital and highly scientific capital, mental capital involved in these four specific pillars don't even talk to each other. Imagine an investment banker and an institutional capital, let's say, partner, talking to a software developer, talking to a mathematician. This, in the whole world, is not functioning. And I believe the way forward is to bring together those four pillars in establishing large-scale transformational projects in a seamlessly integrated way. So, focusing on attracting and partnering technologies, execution capacity, operations with institutional capital is the way forward for laying foundations for transformational projects. Greece has some good examples. Europe has some good examples on that sense, but it's probably a concrete and tested proposition that helps economies transform, grow in these thoroughly uncertain times, and improves liquidity also in the market. This is a little bit visionary, maybe inspirational, maybe requires more creativity, but it's a way forward. People need to see innovative public-private partnerships forming and executing projects that transform their life and see smart utilization of high-quality institutional capital. We've seen some examples. We've seen sort of complicated securitization transactions happening in Greece, winning first prizes on a European level. Nobody could even dare to think of it a few years ago. We've seen also Greece surviving, show some resilience and surviving financial crisis, consecutive COVID crisis, and now fighting the energy crisis. But also socially extremely sensitive state receivables play a very important role in Greece, because handling them in a socially efficient and sensitive way is actually the foundation for upgrading Greece's investment-grade rating. And again, using extremely complicated tech-based transformational works that has all these four elements unified together. Of course, in the end, all comes down to people. There is plenty of scientific research about it, there is plenty of HR work, but companies have to work in a very simple way, as a small Greek village or a small family. So the companies are families from now on. The family always take care of the children. So there is a different way of thinking about people, a different way of how they work, how they live, what's their quality of life. And if this is taken care of, then we can see these 4 pillars truly transforming and setting up new limits in the way to lay foundations for economic growth in these, though very, very uncertain times with almost zero resilience up till now. Thank you very much.
Thank you very much indeed. Well, we like visionary at The Economist, so it's good to hear that. And maybe first, before I pick up on some of the points, Mohammed, that you made in your introductory remarks, any response to this visionary perspective?
None other to say, I totally agree. And what I liked is how quickly you pivoted into how do you maximize the time element. And the one thing I take away from this, which is really important, is this notion of living in the in-between. You know, we come from a world where specialization was emphasized, and as you exactly just stressed, this is a world where interdisciplinary and multidisciplinary is going to be really, really important. And so thank you for stressing that.
Okay, thanks. So, so I wanted to pick up on some of the points from your introduction. Well, let's start with monetary policy, and I will open to the floor as well for questions. So you've been actually quite critical of the Fed in your writings in recent times. First of all, for persisting through 2021 with the line that accelerating inflation was a transitory phenomenon, and then for lagging the markets and doing too little too late. You've been less critical of the Bank of England or the ECB, so how come? Because maybe you could make the same case that everybody's been behind the curve, including many economists too, in this regard. So has there been a particular failure of communication in the US with the Fed, or what is it that's caused you to be so critical of the way they've managed the problem so far?
So first, I have been critical of the Fed. I have been unusually critical of the Fed. I have great respect for central banks. I grew up in a world of central banks. I think central banks have a huge privilege, which is their political independence, their operational political independence, and with that privilege comes huge responsibility of being the honest advisor, the technocrat in a system that can be dominated by politics. And for me, it has been watching a movie, a film, of probably one of the biggest policy mistakes that a central bank has made. It started, as you said, with the mischaracterization of inflation a year and a half ago as transitory, and then stubbornness, absolutely holding on to that characterization until the very last day of November, when the evidence clearly showed that you needed an open mind, that you needed to ask yourself, what if it's not transitory? And the companies were very clear. You go back to the earning calls a year ago, companies were very clear that they did not think that this inflation was transitory. So that was part one of the policy mistake. When finally we got the acknowledgement on the last day of November that inflation wasn't transitory, retiring the word from the vocabulary, there was no meaningful policy action. And that's why I stress that even in March, the Fed was still injecting liquidity into the system. And now we have the third element of the policy mistake, which is committing unconditionally to inflation at a time when the mistake has already created damage in the real economy. So when I look at that, I worry about not just what it means for the Fed's credibility and therefore its policy effectiveness, but what does it mean for the rest of the world? And the Fed is the most powerful central bank in the world, much more powerful than the ECB and certainly much more powerful than Bank of England. So when it falls behind like this, massive consequences for the rest of the world. Not just in terms of financial conditions, but in terms of what it does to exchange rates. Yes, I've been more harsh on the Fed than the ECB and the Bank of England. The US had better initial conditions. Even before the war, the US had an overheating economy. The Eurozone and the UK did not have an overheating economy. As you heard from Klaus Regling, the US was less impacted by the war. In fact, from a terms of trade perspective, it was positive for the US. It was hugely negative, as you heard, for Europe and for the United Kingdom. So they had initial conditions that should have pushed them to react first. They didn't. The Bank of England reacted first. And then they were in a better position to act, and they didn't, which has massive consequences. It has created little fires everywhere in the global economy, and countries are having now much more difficult policy challenges because of this mistake by the Federal Reserve. And then finally, it hasn't done two things that the ECB and the Bank of England have done. The ECB has been honest. It has come out with a working paper explaining why its inflation forecasts were wrong and what has it learned from this major forecasting error. We are yet to hear anything from the Federal Reserve on this. They haven't explained to us why inflation forecasts have been so wrong for so long. And because of that, you'll notice that the very first thing that happened when they issued their update projections is that they were taken apart by the community, not only by economists and the media, but also by former Fed officials that called them fanciful, dreamy. And then the second thing, unlike the Bank of England, that has been very honest, it's not easy for a central banker to get up and say, we're heading towards 11% inflation. It's not easy for a central banker to say, be careful of wage increases. And yet, there's been openness and frankness that you expect from a technocrat. That has not been forthcoming from the Fed. So yes, I've been more critical, but I think for understandable reasons.
Thank you. I'm going to come to you in a minute to get your thoughts on this as well. But do you think that there's now a danger of another policy mistake, a mistake in terms of the Fed now overreacting and actually bringing about a recession, and then having to react again to that? So, if you like, a return to the sort of stop-go policies that we saw in the 1970s and 1980s, when central bank policy essentially lost credibility completely.
Yes, I don't want to refer to competing publications, but a week ago I wrote an op-ed in the FT saying that the biggest risk we have now of stop-go. And what has happened, simply put, is if you think the Fed has been driving too fast on the motorway that all of us are on with the Fed. It could have eased its foot off the accelerator last year. It didn't. Now it is going to slam on the brakes. And when you slam on the brakes, the risk of creating a pileup in the global economy is very high. My concern is that they will slam on the brakes, they'll cause the first pileup, then they will lose sight of the inflation issue. They will allow inflation to become more entrenched because they're going to now be completely whipsawed to the growth issue. And then Later in the year, when we realize inflation is sticky, we go back this way, and you get the inconsistent policy response that was a major characteristic of the 1970s. Yeah, I worry about that. I really do worry about that. That's undue damage to economic growth around the world, and it is an undue burden on the most vulnerable segments of the population that have the greatest difficulty in dealing with this environment.
But you're not so worried about the ECB perhaps making a similar mistake if we're going to assume that, this is our assumption, that the ECB will raise rates 3 times now this year, and will front load the increases because the focus is on inflation much more than on the dangers of a growth slowdown. And we are heading to a growth slowdown, and 2023 is looking much worse than 2022 because we had this strong carry-over effect into the first quarter from the pandemic rebound. So even if we have technical recessions in a couple of countries in Europe, we're still overall, in terms of annual growth, we're going to have positive growth. But where is the momentum coming into next year? So do you think this is a particular problem for the US, or do you think there's also a danger here for the ECB and Europe?
So there is an imported danger from that, and you need only look at exchange rates to understand that. The euro is almost at parity against the dollar. The dollar DXY index is at 107, the highest it's been for 20 years. And what you're getting is basically the message that the US is forcing a policy agenda on the rest of the world, because if you don't respond, you will import more inflation. The most significant central bank event that happened in the last month was not the Fed, was not the ECB, it was the Swiss National Bank. The Swiss National Bank have spent most of my career fighting too strong a currency. The Swiss National Bank hiked and surprised everybody by increasing interest rates by 50 basis points, because it is no longer fighting a too strong currency, it is fighting a too weak currency. And its inflation rate is 3.2%, it's not 8.6% for the Eurozone. Right? So yeah, I do worry that the ECB may end up overreacting, but understandably, if it does, and I'm not sure it will, but if it does make that mistake, it will have a significant imported component.
Okay, thank you. And so, Mr. Tsakalotos, how do you see things from where you are in Greece and a more European perspective?
Yeah, when you see some sort of inflationary clouds high up there, and projections are pretty grim, it's probably the best time, or forcing an excuse to start thinking of transformational work and lay foundations. It's probably a better time when things go worse to do that than in good times, because transformational projects have big costs, have to be treated socially extremely sensitive, have to be sort of inspirational and creative, and also have to be have a long-term view. So I think it's, in a way, I give a positive view on how to move from inception, let's say, into creating those sort of infrastructure. And also, I believe the time is right now. Of course, bringing diverse and industry sectors together is not easy, because it all comes down to this human experience capital on this whole thing. But we've seen some examples of these projects. For example, the turnaround of the Greek electricity corporation was done in the worst ever times 5 years ago. At least now, he is on sound sort of a position to try to challenge and face this huge energy crisis. So I think sometimes transformation work cannot be done unless things are green. So we have to take advantage, even in those sort of grim periods or clouds of inflation, to set foundations.
Thank you. There's a few more things to pick up on, yes, but I want to give the opportunity to the audience to ask some questions, and there's a few hands. So I'm going to take, Daniel first of all, and there's a gentleman over there, if we can bring Mike. So Daniel Franklin, my colleague.
Yes, Daniel Franklin. Fascinating conversation, thank you. I wanted to ask Mohamed El-Erian really 2 questions about the Fed. One is, How do you explain these series of errors? What led the Fed to make these mistakes? Was it just faulty analysis, or are there political pressures on the Fed that lead it to be in a particular groove? And secondly, if you were driving this vehicle that you described, what would you be doing with your brake pedal right now? How would you be calibrating it?
Thank you, Daniel. Maybe we can take the second question and give you a bit more time to think about the response. And yeah, if you can just introduce yourself and...
Theodore Palagidis, the Deputy Governor of the Bank of Greece. Question to Mohamed El-Erian. Thank you for this great speech, Mohamed, if I may. Well, fiscal and monetary authorities have injected, I hope you agree, markets with a lot of money. Only Fed's balance sheet is currently around $9 trillion. Don't you think that when we talk about mainly kind of supply-side inflation, meaning that inflation is transitory to a great extent, but we downplay the role of demand in inflation, especially in the context of such a tight labor market, especially in the US, as highlighted by other colleagues like Larry Summers and Olivier Blanchard and Jason Furman, etc. And the second one, do you agree that either way, supply or demand-driven inflation, monetary authorities have to, at least to an extent, destroy demand in order to fight inflation, or there is another way for soft landing? Thank you.
Thank you very much.
So if I may, I'm going to link these two excellent questions, doing it in reverse, because I want to start with the inflation and then come back to you, Daniel. And here I'm just going to pick up on Mr. Mylonas, my friend from the IMF. I, like him, lived through the 70s. When you have a supply-side shock, initially it is transitory. But you have to keep a very close eye on how agents react to the shock. Do agents treat it as transitory, or do agents start assuming that it will have a lasting effect? And that's why, as early as March, I was saying, keep an open mind. It could be transitory, and as early as the beginning of the summer, we started getting evidence it will not be transitory. And what you get, as mentioned in the previous, is the second and third round effects that we are now seeing playing out. You know, if I believe, I, not a central bank, I, the person in the street, believe it's transitory, I will not change my behavior. But if I start wondering, is it not transitory, the following happens. I, as a company leader, will start trying to pass on the cost increase into higher prices. And I will not be caught behind, especially when demand is strong. So I will try to take advantage of that. I, as a wage earner, will start worrying about my purchasing power. And if we're not careful, I will go in and see you and ask not only to be compensated for past inflation, but to be compensated for future inflation. When these two things get together and start happening, and we started seeing that happening at the end of last year, and certainly are seeing it now, the strikes, everything else you're starting to see, these are the sorts of things that entrench inflation in the system. And as a result, they cause a much bigger damage to demand than you would have otherwise. And the damage from demand comes from, first, the effect of price increases. And if you are a lower income household today, you have almost no choice but to pay the higher energy prices and the higher food prices, and you have no money left for other things. And people are starting to destroy their own demand, and now central banks will destroy demand on top of that. So we are going to have more demand destruction than would have otherwise been the case. Which takes me to Daniel's question. Why did the Fed make such a big mistake in forecasting? Let me give you the 4 reasons that I put out there, and let me tell you how. One is their models. The models are macro-based. They are don't capture well structural changes. And we are going through, as I said, a fundamental change in the paradigm. And one problem is that you got a complete disconnect between the beige book, which is something that's published every quarter, which is bottom-up information that was already signaling warning signs in the summer, and the top-down macro frameworks that were focused on the old view of employment, the old view of the Phillips curve, et cetera. So one is simply the models were not adapted for a transitional change. The second is behavioral. Once you get stuck to and you get committed to a certain narrative, it is very difficult to say I was wrong. You get captured by the narrative itself. And the Fed went too far initially in calling it transitory, and it was cognitively captured, looking for confirmation that it was transitory. The third element is captured by the markets. If it's not transitory, it implies a different monetary policy. And central bankers had in their mind what happened during the taper tantrum, and had in their mind what happened in 2018, the fourth quarter, when the market said, you know what, I don't want you to change your monetary. And they were afraid that financial market instability would undermine economic growth. And then the fourth region that was put forward is political. That somehow the Fed was more political than usual. It was the renomination stage of the chair. I put most of my weight on the first three. Massive modeling problems, cognitive capture, market capture. And that is why we've had that mistake. If I was driving the car, first of all, I wouldn't like to take over the car at this stage, because I think I think all this was avoidable. That's the tragedy. When we look back, this was all avoidable. What would I do? Well, first and foremost, I would coordinate much more with the fiscal agency, because without pro-growth reforms there, without targeting measures at the poorest segments of the population, my policy challenge will be much bigger. The second thing, I would stress much more financial stability, and I would look at the non-banks. I think that the non-banks are where the potential market accident is. And third, I would be very committed to getting inflation out of the system. Because if it gets entrenched, we are going to have even bigger losses in income and bigger worsening of inequality. And that's something that we can ill afford.
Thank you very much. Maybe one final question. We've got a time for to put one final question to both of you. Understandably, our focus is very much on the now and what is happening now and what we expect to happen. And obviously, we are at this major turning point in monetary policy. But I just thought maybe it's worth saying that maybe we shouldn't forget about this unprecedented era that we've lived through of easy money and extraordinary low interest rate environment, and just wanted maybe to reflect on the consequences of that, and did it last too long? Should it have ended earlier? What damage has been done? You said in your opening remarks that the war and all the pandemic has just amplified a lot of the existing problems. And Klaus Regling earlier was talking about actually the big problem of slow growth, that many economies in Europe have been living with for a long time. We have highly zombified economies. Zombification is a big issue in the UK, but also in other countries in Europe. We have highly indebted companies that survived both on state handouts and easy money for a long time, that are not competitive. And so in this new environment, you know, there's a big risk there for corporates. Now, Greece, as many people have said, seems to be leaner and fitter, having gone through this very bracing crisis for a long time, and is now maybe an outlier in this respect, and more resilient. So just wanted to ask both of you to reflect on that. Do you think that we've had a lot of positive discussion about Greece? Do you think it's warranted?
Stands a very good chance. It all depends in how the politicians and the economists of Greece would utilize that difficult times and place some foundations for the near future. And some difficult sort of questions have to be answered, and some difficult decisions have to be taken. But it's fairly clear what the answers should be and what measures should be taken. So I am positive about Greece in the next few years, seeing back what happened, also learn the lessons. 2008, we thought Greece won't be touched by what was going to happen. Then 2 years later, havoc broke loose. So I think Greece is in a quite strategic position. We'll see shifts of disrupted supply chain moving towards Europe and Greece. We'll see shifts of high quality, experienced capital and mental capital and academic capital moving to be living in sort of the climate of Greece and working from here. So I think there'll be an amassed resources in Greece that if those measures are taken for the country's economy, we'll see certain innovative ways of repairing an economy.
Thank you.
It's a good laboratory.
Thank you. Mohammed.
So I'm going to take your analogy a little bit further. I love this. You know, you said, and I wrote this down, everything that could go wrong has gone wrong in Greece. I think of it as Greece had a near fatal heart attack. You know, July 2012, everything was flashing more than yellow. It was flashing red, and had it not had a shock treatment with a doctor that is committed to do whatever it takes, it would have been fatal. Now, the advantage of having a heart attack that you survive is you change your behavior. And Greece has changed its behavior in a very fundamental manner. The rest of us who did not face that moment were hooked on high cholesterol food. We got hooked, we remained hooked on the finance economy. You know, if you look at the last 20 years, and the Economist should do that, up from about 2004 to 2008, a massive love affair with private money. Finance. We thought finance was the next stage of capitalism. You go through agriculture, industry, manufacturing, services, and if you're really good, you get to finance. Everybody wanted to be the financial center. If you weren't big enough, you borrowed someone else's financial center. Dubai, Iceland, Switzerland. Then we had the big shock in 2008 that finance actually is not a standalone sector. It serves the real economy, and if it disconnects. But at that point, instead of going back to what fundamentally drives economic growth, inclusive economic growth, we fell in love with central bank financing. We saw a balance sheet go from, the Fed balance sheet go from 2 trillion to 9 trillion. This is high cholesterol food, just like private finance was high cholesterol food. And now we're having to adjust to a different diet. Did the high cholesterol food last too long? Absolutely lasted too long. And you said why. The zombification of the real economy, the misallocation of resources. It lasted way too long, and all of us, and I'm the first to say, find it very difficult to say no to food that has ample supply, tastes really good, and deep inside we know that's not consistent with good heart diet.
Well, thank you very much. Fascinating conversation. Thank you very much indeed. That's the end of the session. Please join me in thanking our two guests. We're going to have a photograph, I think. Okay, I'm handing over to Alistair for the next session on health. Thank you.
Thank you, Joe. Friend, so congratulations. It says there's a big white Economist on the back. It looks fabulous. Moving on, we're going to pivot now to another topic, one that's not metaphorically about survival, but is literally about survival. This is, we're beginning a group of sessions about healthcare, and I am delighted to say that I'm going to be joined by a co-chair for this session, which makes my job an awful lot easier, and that is Vasilis Kontosomanis, who's an advisor to the Prime Minister for Health. And between us, we're going to be listening to and grilling George D. Yankopoulos, who is the President and Chief Scientific Officer at Regeneron Pharmaceuticals. In many ways, pharmaceuticals has gone from being a sort of global cultural villain to a real hero in the COVID era, thanks to the rapid introduction and deployment of effective vaccines. So we're joined by Mr. Yankopoulos online. I can see him. I hope you can see him. And let's hand straight over to you, Mr. Yankopoulos, for your introductory words, please. Thank you very much.
Well, I'm sorry I can't be joining everybody personally, being right there. I happen to have, after several years of the pandemic, I finally caught COVID myself. Luckily, I had a very mild course, but since I was just positive this week, I decided not to come and be there. But I'm glad you're all having a great meeting, and I hope I can contribute virtually here.
Excellent. Did you have any introductory statement that you wanted to make, or would you like to jump straight into the cross-examination?
Well, I'm willing to just jump right in. You mentioned vaccines, but there were many other parts of the fight back that were really important, as you remember, particularly early on, as the bridge to the vaccine were the so-called monoclonal antibodies, that the Regeneron antibody was in some ways the leading treatment given to millions and millions of people before vaccination, or for those whom the vaccine was not effective. And certainly what I'd be prepared to talk about is how we could have taken a much better advantage of deploying all the weapons collectively than we actually did. Because although all these weapons collectively were very powerful and they've obviously made a big difference, whether it be vaccines, whether it be monoclonal antibody treatments, whether it be some of the more recent treatments, I believe that we could have done a much better job logistically and operationally in terms of saving many, many more lives. And unfortunately, it's hard to always get things right when essentially you're in the middle of an emergency and all hell is breaking loose. And I understand that everybody was trying to do their best, but we certainly learned a lot of lessons.
Fabulous. Well, I have one quick question, if that's okay, if I can take the first one, then I'll hand over to you. We talk about this pandemic, and this came up yesterday as well. We talk about the COVID pandemic these days in the past tense. But, you know, as you personally are a demonstration, it's certainly not gone away. Numbers are sharply on the increase in many countries around the world. So what's your thought about, first of all, where we are in this wave of COVID? Are we right to be thinking about this as something in the past? And if not, how big could it still be in our lives in the future? And secondly, given what we've learned, what you've talked about, what we've learned from the first waves of COVID, how much better are we now prepared to face what comes next?
Well, the amazing thing is, despite all the science, despite all the work so many of us have put in, there are still so many questions. And a lot of what I'm going to say in answer to your question is more of a hope than a definitive answer. It seems as if the rates of actual COVID are still very high. As you said, I'm an example of it. I was in the midst of a major outbreak where I was located. The good news, though, is it does appear as if while the numbers of cases are still very, very high, particularly in some areas, the numbers of severe cases, that is, those that are resulting in hospitalization, death, and very severe disease, seem to be dramatically down. We don't really totally understand that. It could be a combination, of course, of vaccinations, of natural immunity that we now have, and also the fact that the virus itself has evolved. And it seems as if the virus itself may have become more transmissible, more easy to catch, more easy to spread, but in some ways it became attenuated, and it's not causing a serious disease. So we don't understand all the contributions because we can't study it like you can in an experiment in the lab where you vary one variable at a time and see, oh, why are people not getting as sick? Why are not they going to the hospital? Is it the vaccination? Is it the natural immunity? Or is it that the virus itself has changed? Well, all of those variables have changed. But the good news is right now, the rates of very serious disease in response to infection are much down from what they were a couple of years ago. And that's obviously very good news. And let's just hope that things continue in that way.
Thanks very much.
Thank you, Alasdair. Thank you, George. It's a privilege to co-chair this session and welcome you as our guest. Before I proceed with a question, I would like to share with you some comments of the lessons learned in Greece, how we handled the pandemic. And I would like to share this experience from my side, being during that period Deputy Minister and alternate Minister of Health. In bullet points, let me tell you this. No doubt Greece succeeded. And we succeeded because we had a strategy and we gave priority to the protection of human life, and we never deviated from this strategy. Second lesson, during the pandemic, the government dispelled the myth of political cost. The government made tough decisions and still enjoys the trust of the Greek people. We broke tattoos of the past, we joined forces and worked together with the private sector, and we passed the message that the public character of the health system in Greece is undisputable. We highlighted the advantages of the healthcare system, and we identified the huge capabilities of the Greek health technology industry. Not many people know this, but the Greek pharmaceutical industry in that period exported to other countries medicines that other countries faced shortages during the pandemic. Also, a Greek company developed and manufactured rapid tests, and moreover, at that period of time, new ventures resulted in the domestic production of consumables such as face masks. George talked about vaccines. It is evident now that the major weapon in our hands to fight the pandemic is the vaccine. And no doubt vaccines save lives. We need to constantly collaborate at European level, and I strongly believe, and I say that because I represent Greece in the management board of HERA, that the creation of HERA authority at European level is the result of the lessons learned at European level and gives us the confidence that today we are in a better position compared to 2 years ago and ready to confront the health crisis. Last but not least, although the healthcare system in Greece demonstrated a high endurance, it's time for a new start. And during the pandemic, We planned for this new start of the healthcare system, and the changes must proceed with no delay, and this is the only way forward. I'm sure that George faced similar challenges, and I would like to ask him what changes do we need to make at operational, legal, political level to allow for faster responses? What did Regeneron gain and did it lose during the pandemic? And how do we improve worldwide access to new vaccines, to new treatments regarding COVID?
Well, if that's a question, Vasily, so first of all, yeah, congratulations on the efforts of Greece to do as good a job as it was able to do to prevent further loss of life. But like I said, I think that we all learned many, many lessons. It's obviously hard in the face of an emergency and a pandemic for everybody to get it right. And I think going forward, it's all about logistics and it's all about communication and it's all about preparedness. And I think what we didn't do as a society, obviously, is in the face of emergency, get that all perfectly correct. As I said, we had multiple weapons to fight back, particularly in the early stages when so many people were dying. We at Regeneron were located in the New York area. We were at the epicenter, at the actual epicenter in America for the pandemic, and literally thousands of people were dying. And logistically, the government couldn't figure out how to deliver life-saving antibodies to the many, many thousands of people who could have been saved. Estimates are that many, many lives could have been saved if we had been able to roll out these antibodies in a different way. The other thing is communication. The government was having trouble explaining to people that, yes, you should get vaccinated. But if you're already sick, a vaccine is too late. But there is a very effective treatment, a monoclonal antibody treatment that can save 80 to 90% of the lives of the people who are actually sick. But they had a lot of trouble getting that communication out. And because of that, once again, that led to many, many people not getting treated, not getting saved. Another important part of the communications is, as we know now, there are a very significant proportion of the population, around 5 to 10%, who are not going to respond to the vaccines. And for those people, once again, things like antibody treatments can be a substitute for the vaccine and can protect them. And once again, still to this point, that hasn't been explained well, and those communications haven't gotten out. And that left some of the most vulnerable. So yeah, it was great for the people who were getting vaccinated, it was great for the people who responded to the vaccines, but the immunocompromised, those are the people whose immune systems can't respond either to the virus, but they also can't respond to the vaccine. So they really have no alternative other than being given these surrogate antibodies themselves. That message wasn't gotten out there. So collectively, there were so many failure points that prevented appropriate therapies, treatments, and prevention approaches to being utilized in the most efficient ways. And this is something that going forward in the future, if we're ever in this position again, obviously we have to strive to do a better job of getting the logistics right, getting the communications right, and getting the right weapons to the right patients. You don't vaccinate immunocompromised people 10 times, because no matter how many times you do it, they're not going to respond. And they're the people who are the most vulnerable. For them, there's a different solution. You can give them the antibodies that their bodies won't make, that you can manufacture in a factory. So these are the sorts of complicated messages that I still think many people don't understand, many government officials still don't understand. And we always have to do a better job of trying to get the communication and the logistics and the preparedness right going forward.
I'd like to follow up on that, if I may. You mentioned what I think was a really critical factor in the response and the series of responses to the initial waves of COVID, and that was public messaging. There was a question about public understanding of the situation, but also about the efficacy of the messaging that was coming out from public health services and more broadly. Now, it feels to me as if the public mood, the readiness to receive public information has shifted critically over the last few months. And I wonder now whether the capacity for governments to get their populations to do what they want them to do is better or worse than it was 2 years ago. It strikes me that if the UK government, assuming we have one, I haven't checked the news in the last 10 minutes, so who knows, but if the UK government put out a message that it wanted everybody to lock down, whether they would have a better chance of people complying now than they had 2 years ago. Do you think that the public mood is more or less receptive now to the message that may have to be put out should COVID surge again?
That's a great question, but I think it's a really complicated question. It started with an assumption that you made that it's the government having its people do what it wants it to do. I think the role of the government should be more about getting the facts correct and educating the public and giving out all the possible options that people have at their disposal, as opposed to necessarily driving behavior that they might think is correct. I think sometimes governments are making presumptions that they know what's best, but not getting essentially all the information, the correct information out there. And that leads to lack of trust and distrust. And I think that that's one thing that actually did happen a lot. There were a lot of focus on one kind of messaging going out, but certainly in America, what we experienced with, for example, at a certain point, the government decided that it was perhaps a little too complicated for the American people to understand that there was both the opportunity for vaccination, but also the opportunity for a very active treatment if you were already sick. And I think they decided that the truth was too complicated a message to get out to the American people. That led to a lot of distrust, because I think that a lot of the information that was getting out there was not necessarily all the information and all the correct information, and people started realizing that. And they started realizing that maybe the government was trying to manipulate people to get them to do what they wanted, instead of just giving out the information. So I think the most important thing that government should be doing is trying to get the information right and trying to get all the information out and get it to as many people as possible, and letting the people use that information to make their own personal health decisions. And I think that we sometimes go away from that, and as proven, that creates problems, that creates distrust, and that might make it harder in the future for people to believe their governments.
Fabulous. Thank you so much, George. You've raised an awful lot of interesting points, and I hope set a lot of minds in motion in the room today. We're going to move on and have a discussion in a moment with the panel, including the Health Minister, on investing in Europe's healthcare sector. But before we do that, I want to thank you profoundly, because clearly, you're fighting an infection, and we're really grateful to you for making the effort to be with us today. Please join me in thanking George. Thank you.
Thank you very much.
And thank you, Vasilis, as well. Thanks. Do we need a photo, Vasilis? Not allowed to leave until we've had our family photo. There we are. Thanks. Thank you. Okay, well, we're going to move on now to a panel discussion. I think that was a great introduction to some of the themes that are going to come up for discussion, I'm sure, today. And I'm really delighted to be joined for this discussion by Thanos Plevris, who's the Minister of Health for Greece, by Chris Allen, who's the resident representative in Athens for the Directorate General of Economic and Financial Affairs at the European Commission, by Theodore Trifon, who is the President of the Pan-Hellenic Union of Pharmaceutical Industries, Forgive me if I got your name really badly wrong. Dimitrios Demos, who's the Vice President of the Pan-Hellenic Union of Pharmaceutical Industry. Please, would all four of you come and join me on the stage? Thank you. Yeah. Hiya. Good to meet you. Please take a seat. Hi. Demos. Excellent. Wherever you like. Good morning.
Good morning. Thank you.
Good morning.
I'm Theodore Trifon.
Okay, thanks. Okay, well, this is a discussion about investing in Europe's healthcare system, three big qualifiers there, and I suspect we're going to range a little more broadly than that, and we're going to zero in a little more focused than that, but let's see where we go. I'm going to hand straight over to Mr. Plevris. We're delighted you could be here. I know you had a bit of drama this morning, first thing, probably earlier than you wanted to be out and about. I don't know if you want to update just briefly on what happened this morning, whether there's any reason for anyone to be concerned, and then you can kick us off with your introductory remarks. Thank you.
Good morning from my part. It was a difficult day because, as you know, early in the morning there was an attack at the ATM of the Sismanoglion Hospital, crime attack that was accompanied with robbing the money out of the ATM, which shows the difficulties that our employees go through, and of course the security measures that hospitals, in the case of hospitals, they cannot overcome their capabilities. I mean, security is there in order to handle the traffic of people, not for fighting crime. The most important thing is that the employee who was there was very cold-blooded, and no human lives were threatened, because the most important asset is human lives, not the equipment or the machinery. Now, my first remarks about this topic. I'm really happy to be with you. Actually, I would have loved being here as a guest in your rooms on such a day, not in the conference room talking about clawback investments.
So I'm pretending.
Λέει ο κύριος Αλτσερός ότι δεν είχε διερμηνία, δεν κατάλαβε το ανέκδοτο. So would have. He's just repeating the joke. So today's topic is about investing in Europe's healthcare sector. So let me give you a short introduction. In fact, the pandemic has shown that it is important to invest in the sector in terms of mainly in drugs, in the pharmaceutical products. And this investment should be split in two parts. A, investing in innovation, novel drugs, new vaccines, new capabilities. And the second part is investing in production, because in the early stage of the pandemic, Europe's full dependence on other countries, mainly Asian countries, revealed the inadequacy of ours to have even some basic drugs in order to deal with diseases. So the debate at the ministerial level in Europe is that we have to dedicate more resources in order to invest in both components. A, returning production facilities to Europe, and B, increasing innovation, strengthening innovation. In Greece, this is quite difficult to happen in both cases, because let's not bellify things or embellish things, because clawback on its own is a counter-investment parameter, because when someone has an environment which is not predictable, then it's difficult to invest money in the sector. So, to this direction, we have structural reforms and firefighting measures applied. We have already signed the ministerial decisions. By early next week, these decisions will be issued in order to help the market balance and fight distortions. while at the same time allowing companies to have this predictability they need with respect to the clawback, so that more funds may be found for investments in Greece. That's a very important thing. And let me say that the investment clawback measure led companies to launch programs of more than 600 million euros of value, and this affects both production and innovation and research. So, in this brief introduction of mine, I don't want to monopolize this discussion. Let me comment something that we have discussed with the people of the pharma industry in Greece. The problem in Greece is not a problem of prices, it's a problem of consumption. Of course, this is the responsibility of the state, of the government. Companies, it goes without saying, want to promote, to market their products and have profits. We try to find the balance point. We do want innovation, we do want research on innovation so that Greek citizens have better drugs available, but we want consumption to take place exactly when novel drugs perform the best. And respectively, we want companies with producing facilities in Greece, both Greek and foreign ones, to have a more attractive environment in order to invest. So this will be the kind of investment clawback measures that will apply. We will continue down this way, and whatever measures we take, including the first set of measures, the first set included segregation of the budgets, additional rebates, or some measures that the pharma industry used to ask for many years, leveling the retail prices and the additional burden that the state has to cover for these drugs, etc. So, following this first set of measures, the next measures under discussion have to do with therapeutic protocols, prescription guidelines. They have to do with realistic negotiations in which the value of each drug will be truly appreciated. And I understand, that's my ending point, I understand that having to handle 1.5 billion euros of clawback comes with some difficult measures. The target, our objective, and we will deliver, is the following. Apart from cost savings that actually have to do with transferred clawbacks and rebates, our aim is to have true limitations, because I'm talking about limiting or containing consumption. It will not affect the pharma industry. So I think we will find the balance point. 2022 is a difficult year, but it will be much better given the figures we have for 2021. And ending, you have already been invited, I'm talking for the institutional players, about the new model of payments, more simplified ones, because our will is the following. All orders coming from Greek hospitals will come through EKP, so there will be a one-stop shop for all pharma industries. You will have contracts with this entity only. There will be clauses applying, and as a result, we will be able to cut down processes and difficulties when it comes to the payments.
Thank you very much. Thanks. Just to say at the end of the introductory statements, I'm going to ask a few questions, but I'd be very happy if there are questions from the audience as well, so have those in mind when the time comes. Let's move straight along to Mr. Allen and the point of view from the European Commission.
Yes, well, thank you very much for inviting me here. I think it's a very good time for this discussion. On one side, as the Minister mentioned, there are some big progress and big movements in Europe on health. I would say equivalent to some of the earlier stages of what happened on sort of developing climate change policy or environmental policies. This is a very big shift in European policies. And the other reason is that it's particularly important in Greece, is that actually, as Mr. Arian said earlier, I mean, Greece has actually been through this and now is increasingly being seen as a best example. And I've got a few best examples to mention. Look, as I say, Europe really stood up in its COVID response. The EU vaccine supply strategy has delivered 4.2 billion doses of vaccines, 1.7 billion for the EU itself, and the EU is by far the biggest exporter of the rest to the world. But I think even more importantly, the coronavirus experience has led to a very deep reflection on the lessons of the crisis and what needs to change and how policy needs to be developed. And I think there are three big lessons that need to be learnt. And I would say that the Commission has already taken, and the European Council and Parliament have already taken very many steps. So what are the three lessons? Well, the first one, of course, I think is obvious: the need for stronger EU-level health surveillance, emergency planning, and policy coordination. In fact, the legislative framework for that, the regulation on serious cross-border threats to health, has already been agreed at the political level amongst the institutions and will soon be in place. It will allow joint procurement of vaccines and medical therapeutics on a regular basis. The second thing is, of course, this new institution, the HERA, the goddess, the European Health Emergency Preparedness Authority. And this has already started working, and it's already, in fact, started supplying vaccines against monkeypox. It's working. And the third pillar of this, is the European health data space, which is the exchange of health data, which is, let's say, the most sensitive data anywhere, but it's essential for policy purposes. Well, that's the first lesson. The second lesson, as the Minister mentioned, and I think this is a big thing for this panel, is that it's crucial to speed up the development and deployment of the new disruptive health technologies and treatments. Wow, these range from personalized medicines, gene therapies, health apps, health wearables. We need to build upon the success, the extraordinary success of the development of the COVID vaccines, which were actually approved and started to be used within less than a year from the decoding of the COVID genome. And this is precisely what the Commission's pharmaceutical strategy is designed to achieve. Well, there's going to be a major revision to the pharmaceuticals legislation by the end of this year to enlarge the scope of clinical trials, adapting them to all these cutting-edge products, and perhaps even more importantly, to speed up the regulatory approval times, because that's actually getting the medicines to the people. Secondly, there's going to be a review of the balance of incentives for market innovation and affordability. This is certainly also important. But there's also a whole range of other measures, and this is where I think Greece is a leader. For instance, on changing public procurement procedures to make things more robust and resilient, which is allowing a diversity of suppliers to provide medicines and other medical devices, which is of course something that the Greek government has successfully already implemented. And the third lesson, well, and I think this is another big change. This is to reinforce public health systems across the EU in the light of the COVID experience. There is a very large amount of money available to do this. There's 5 billion from the EU for Health programme. There's at least 25 billion from recovery plans across the EU for health. And this will enable the development of reinforcing primary healthcare, another big focus of Greek policy. It was clear from the COVID crisis that primary healthcare was important. It's the only way of getting to the people. And of course, the recent efforts in Greece to develop a comprehensive approach of primary care, incentives for patient registration and gatekeeping, this will really, I think, improve healthcare and actually strengthen the governance and efficiency of the system. So I'll end there. I'll come back on some Greek issues because I'm certain they will be discussed later. But thank you very much for inviting me. And as I say, I think this is an important moment and this is the right time to have the discussion between government and industry on health. because all the potential resources are there. Now the governance is really the issue, and what a wonderful place to do it in Greece that is already adapting its health system and has been doing so over the last years. Thank you.
Excellent, thank you very much. I mean, it's interesting that we have the government and we have industry here on the panel, so maybe we can sort it all out today. Who knows? We'll give it a go. Mr. Trifon, your thoughts, please.
Well, I would initially like to thank Hazilis and Rivas for having us here again. I also take the opportunity to thank Chris Allen for our collaboration during all these turbulent years. Thank you, Chris, for your support, and we had, I think you contributed to including in the RRF program, the program of 200 million for investments and reform, which is, I think, very, very crucial for the Greek industry. So I hope our collaboration continues in the future. Anyway, I will switch now to Greek. Okay?
Yep.
So please put on. Κυρίες και κύριοι, κατά τη διάρκεια...
Ladies and gentlemen, during the pandemic, we had a discussion at the European level with the European Commission and the stakeholders, what measures the Commission can take in order to have the European system more resilient in health crisis, and the European patients have access to all the treatments and new ones. And in order to do that, I believe that we have seen that we need to increase investment in Europe. I don't talk evidently in public health system, but investments in pharma industry, medical devices, and innovation. In the last years, Europe, in the last decades, depends more from imports from third countries. We opened this discussion abroad, and the aim is to cover patients, to repatriate or reshoring pharma industry, and enhancing pharma research and increase competitiveness of the pharma industry. Then came the war, inflation came, and that, even though it created a shock in the system, will lead to the acceleration of these decisions to have developments, because more than ever with inflation, Europe in this environment and the war in our courtyard need to find solutions to make our industry more competitive and be able to cover more effectively European and Greek patients. In this dialogue, we do participate as Greek pharma industry. We participate in value-added medicines and medicines for Europe committee. In Greece, that has a lot of consequences. In Greece, we come after a period of disinvestment, long disinvestment. We estimate that until 2019, we were deprived of funds more than 500 million. Greek companies and foreign ones, we were deprived of these investments in our companies. And in the pandemic, I think people understood the importance of our sector. Greek companies and foreign companies managed to cover Greek patients fully, not only in Greece but in other countries as well, I say. And after 2019, with the program, the incentives given for investments with tax incentives, amortizations of 200%, decrease of tax coefficients and other incentives, I think we had a countdown for growth, and we can see that in the figures. Along with the RRF program until 2023, 1.1 billion will be absorbed by the pharma industry. We have the development law and the incentives, tax incentives. So we have a very important framework so as to be able to move forward, become more resilient, stronger in the future. We have a lot of investments from Greek company, foreign direct investment from foreign companies has increased in clinical trials and hubs, technological hubs. There are incentives to attract scientists from abroad, which is also important with tax incentives. That all these create a positive environment. There are some asterisks, nevertheless. The asterisks are at European level and Greek one. We have discussed that it is important at European dialogue, and Spain and Italy participate in this dialogue. We need to have be more flexible with the incentives. Regulations regarding state aid and competition should be more flexible during crisis. Due to geographical identification, we should not be deprived of incentives. The incentives given during the COVID period should be extended. Even though we might talk about production of old medicines with new methods, should be seen, and also with regard to environmental footprint. The EU should be more flexible in these regulations, and if the development clawback be developed to be more flexible and in better terms. Inflation, increase of production costs, global problem, bigger in Greece, the issue of clawback and the discounts we give in Greece, huge discounts. These things worsen the positive environment I described earlier. Further down, Greek pharma industry have a productive footprint, important. We can cover more than 60% of the patients with local medicines. We have generics and new medicines. We proceed with investments in innovation parks. We have invested in the biggest park in southeastern Europe. We will host new companies, biomarkers and other efforts that are carried out by 25 pharma industries and a lot of foreign ones. I need to tell you that this is a concrete effort in a sector with added value. Every euro invested in pharma industry is multiplied by 3.4 euros. It is clear that the industry, the production in Greece should be representing 15% of the GDP. We try in PEF to create a framework in order to reach this goal in the next 3 years. The big problem of Greece is the increase of the trade balance. For quarter 21 to 22, we have 5 billion increase of the trade deficit. That means decrease of competitiveness. We need to attract investment, products that are internationally competitive and exported to cover the local demand with the local products. The produced medicine in Greece can multiply their value when sold abroad. We need to have a sector policy in some sectors that can bear this transformation burden. That is what I wanted to share with you in my first approach.
Interrupting you, but Mr. Demos, I don't know what you have to add from the point of view of the PEF. If you could keep your comments as brief as possible, we can move on and have some questions, but I'll hand the floor over to you.
Okay.
Good morning, everyone, to all those with physical presence or via connection. I would like to thank you for inviting me in this event, which takes place amid international events like the pandemic, which is here, and the Ukrainian war. If we have learned something in Greece after 10 years of crisis, is that the business model should not be based on local consumptions. We need to build internationally competent businesses. So our view as businessmen in the country is to have investments that have international profile. On this model, we follow international developments and we try to understand what is going on. Allow me to share my point of view on things, and I would dare say that exempting the losses of human lives, which is the most tragic that can happen, the rest landscape with the pandemic and the war is quite positive for the European Union. Well, it might be a rather strange approach. People talked about earlier the energy problems and the inflation problems, but I would say that after a while makes the leaders of the European Union to face their historical responsibilities. What we see in the last 20 years has been a trend of globalization, huge globalization, with the rationale of EU to finance innovation, leaving behind production capacity of Europe. We have seen a trend to reinforce knowledge intensity sectors, and we have allowed a lot of businesses move away to other countries. Today, in the pandemic, we saw that the edifice of globalization collapsed. Supply chains had a lot of problems, but the most important is that a lot of countries closed their borders in order to protect local security and health. With the war this very moment, natural gas is natural gas flow is decreasing or stopping as blackmail. So we have those who have local production and those who haven't. So at this very moment, we need to reverse globalization, deglobalization, to put it this way, and Europe should understand that should have its local production, especially in basic goods. What are these? Three. We have expressed our point of view during communications with institutions. In order to be dependent as a country and as European Union, first of all, you need to be independent in energy, foods, and medicines. We keep hearing all these months because of the war, because we have forgotten the pandemic, that we won't have natural gas or energy for the winter, but food is important, but medicines are also important, because during the pandemic, the only country that did not have any deficits during the past years was Greece, because we had local production and we had procurements with multiple suppliers. A lot of companies stopped giving us merchandise because their plants were outside the borders of Greece, but multi-winner procurement system helped us support public health. So we supported local health. We exported also to other countries medicines that were important for ER units, and we see also in Europe that shipping, Greek shipping plays an important role. 35% of tonnage in natural gas belongs to Greek ship owners, and in this crisis, on the one hand, the strategy of the EU needs to change. On the other hand, Greece can play a leading role in the future. Ship owners, this very moment, collect money because of the crisis, so the government should persuade them to invest in Greece, and the model that could be adopted is the clawback, the development clawback, and the minister needs to be congratulated on that. We could say this is the more successful model of PPPs in Greece in the last 3 years. If the Greek government in investment could be a good example, is the pharmaceutical industry. 1.4 billion are investments by 2027, 2,500 new jobs, and Greece in that way can be the star in medicine production in the EU. Thank you very much.
Okay, we've covered a lot of ground there. I'd like to give you the opportunity to come back to some of that.
Θέλω να σταθώ σε κάτι στο οποίο είπε ο Chris και ήταν...
Let me stick to something that Chris commented, and it was a bit out of the topics of this agenda, about the reforms of primary healthcare in Greece. I'd like to thank him for his comment, and let's make something clear. We believe that this reform has been a major point of disruption. It's something we believe in, I believe in, our Prime Minister believes in it. We're talking about the family doctor. It's the first week of this system operating, and the desire by GPs to register has gone beyond the roof, because for the first time we're giving real money to the doctors. Maximum 70,000 euros per year, so it's a significant amount of money for Greek standards. And there is a very realistic office hour schedule. It goes up to 75 hours per week. So by July 31st, this is the deadline. Most likely we won't have to reach that far, because we have so many doctors registering, so we will cover the slots. So we believe in this reform, we truly believe. That's why there has been a significant negotiation, because this reform was delayed. And I'm not talking about the obligations of our country that since November 2020 we should have voted for it. No, let's talk about the essence of this reform. What is good for the Greek citizens? Even if we had no obligation for this reform, we should have done it. So we stick to the gatekeeping and the penalties for non-registering, etc. No, we should not stick to that. The important thing is the following. We have Greek citizens, they have a problem, nobody is there to guide them for some preliminary tests, for some blood tests or something that's important, and we can get no guidelines or no advice. That's why all citizens go straight to the hospital, and actually they do it in a delayed manner. So our aim is not just to cure the patient, it's to keep them healthy. By means of the family doctor, we try to keep our citizens healthy. Each one will have one's own doctor, get the results, get the tests we have to have, and be up to date. So this institution was a failure in the past, because in the past there was no political will. Let's be clear. Those who implemented such a reform in the past, they did it just to make sure that they ticked the box. The obligations of the country, there was a list of obligations, and they just wanted to tick the box, because a reform comes with fighting with the objections, with the resistance. Because in Greece, we used to believe that everybody, in the context of a system, may have access to private services paid by the taxpayers, and everybody was in their comfort zone with that. So we discussed with medical unions, we identified the needs, and we came up with a model in which we will have a family doctor free of charge, primary health care will function, but there will be sanctions. given that the family doctor is free of charge, if you don't abide by that, you will have an increased contribution and pocket money you have to pay for your tests. We already have the ministerial decisions voted for and written, and of course the gatekeeping and priority to these doctors. Nobody should believe that, okay, I woke up in the morning, let's go to the hospitals without any recommendation or by the doctor. We're talking about our family doctor. This is the one person who's supposed to do that in this new system. It's an institution that will be a success. And if I'm given an additional cent in my budget, let me be clear about that, this money won't go to the pharma industry. It will go straight to the family doctors. If I am to see this model being a success, then I will take money from the pharma industry and give it to the family doctors. Doctors will be registered in the system. Greek patients will be fully supported. They won't be abandoned moving around hospitals without knowledge. No, there will be a family doctor to guide them. We have already secured the premises needed. We will meet the objectives set, and I'm pretty sure we will be a pleasant surprise. And by the end of the year, most likely, registration will go even better than expected.
Excellent, thank you very much. We have a few minutes, not many minutes, before the end of the session, but I would like to give an opportunity to you. If there's anybody who has a question for the Minister or for any of our other panelists, please make yourself known now, and I will get a mic to you. If not, I have plenty of questions of my own.
They are happy.
They seem to be very happy so far with what you're delivering, so let's see if we can stir that up a little bit. The RRF is clearly a really important component of Greek funding, and a chunk of that will be available to health spending. I just wonder how that interacts with the elections that we will be expecting over, I mean, I'm not going to ask you for a date, but at some point over the next year or so, we would expect elections. What guarantee of continuity can you give us in the spending of those funds in the healthcare sector?
Πολύ ενδιαφέρουσα ερώτηση.
An extremely interesting question. Currently, we have 1.5 billion euros under the RRF for health. 350 million euros goes for hospitals, 250 million goes for primary health care, 250 million, or 280 actually, or 80 actually million for digital upgrading. So we have some 200 million euros for clinical tests and preventive tests, because it's very important. We're talking about obesity, breast cancer, or colorectal cancer, preventive tests, very important thing, plus some 250 million euros for reforms in the drug component. I'm not talking just about the money we give to the industry, but also the reforms we have to apply. So, in our ministry, we try, as we speak, okay, we have some issue when it comes to secondary healthcare. We try to be absolutely on track with our objectives, because this money will stay in the Greek national healthcare system. The Prime Minister was crystal clear. You heard him today. Our government continues its work. We are judged by we are evaluated by the Prime Minister day in, day out, every week. So we should not connect the flow or the progress of financial instruments with any elections at the end of the 4-year term. We will lay the foundation so that this money will come to the Greek healthcare system, and we are absolutely confident that when the Greek people sees how we handled the crisis and how we managed the money available, by the end of the 4-year term, as the Prime Minister said, they will vote on the basis of criteria that will not allow any insecurity, any insecurity when it comes to properly absorbing the money. We are working with the same speed, and we know that this money have to be absorbed within a very narrow time window. Otherwise, they will be lost, and we cannot afford to lose this money. We will not allow that. We're talking about significant amounts of money for the Greek healthcare system, and they will be allocated with a holistic approach: primary, secondary healthcare, drug industry, etc. This is also linked to the EOP's transformation. have been accused of that. Now, AOP, the primary healthcare provider, will use quality indicators in order to reimburse the healthcare services providers. There is a logic in Greece that if you're active in the healthcare sector, you have to get paid by the state. No, we will purchase services using very strict quality indicators. So the government continues relentlessly working to this direction, and given that after the elections, whenever they take place, we will still be a government, there will be no problem absorbing this money.
That's not a million miles away from the answer I expected. So thank you very much for that. We have so much more to talk about. Unfortunately, we don't have any time to do it because we have to try and keep on time for the other events. We're going to move on to another host for the next session, but before we do that, I'd like to give my personal thanks to all four of you. It's been a fabulous panel. Please join me in thanking them. Thank you. We're going to move straight to a coffee break now, so enjoy your coffee, then come back for the next session. Thanks very much.
Thank you.
Thank you.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα κι εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present could meet? What if, to save the landscape, we changed it? What if the future began by looking at our cities under a different light? What if we revolutionize the way we stop, not just the way we move? What if transforming the world started from our homes? Like Thomas Alva Edison, we never stop asking questions. The questions that push us to focus on renewable energy sources, decarbonization, and energy services. To build together a more sustainable and better future for everyone. Edison, becoming the energy that changes everything.
More than half a century ago, we envisioned the future, with people living in sustainable cities, in harmony with nature, with contemporary infrastructure, empowering quality in daily life. We envisioned the future and paved the way for the short and long journeys that connect people's lives and make dreams come alive. We believed in the clean energy revolution and the power of innovation, and ventured forth. We believed in our people, who carried their skills and expertise all over the world, we believed that everything new we undertake should create opportunities and bring prosperity to all. Gek Turner Group, investing in Greece, investing in the future.
It is the future that calls us, our history that forms us. It is a passion that drives us for doing now what patients need next. Together as one, we pursue a better tomorrow. An ever-forward evolution of discoveries across boundaries, among partners, beyond failures, around the world. There are countless reasons why we do what we do every single day. But at the core, it is about our most precious gift: life. Life in all its beauty and its complexity. Life as moments to be experienced, shared and remembered. Life as possibilities beyond the horizon. Life transformed by science, from despair to hope.
Together to celebrate life.
The wealthiest, the most successful people are generally international.
The world is becoming an ever volatile, ever changing place, changing much faster than it did before. There's a class of person out there now who's actually rapidly adapting to the changing environments.
The world is moving to global citizens.
Henley & Partners is a unique firm that is addressing the needs of this global citizen.
Like so many times in life, you don't get aware of the need until you really ended up in a situation, and then it's too late.
Or it's quite useful to have just options.
Ultimately, quality of life, education, mobility, security, and tax. In this international and global world that we're in, these are the tools you want.
Truly the ultimate symbol of freedom.
Yes, being free.
It's the ability to live where you want, travel where you want, raise your kids where you want, and not subject your family to the fate of where you happen to be born. You actually get to choose.
I find that Henley & Partners are a professional company, but they're also very approachable.
Very open communication. It's like you know somebody for 30 years.
It always starts with an initial meeting where we really establish whether we are the right people to deal with and whether the client is right for us.
Well, from the point of view of the clients, and I've heard this from so many of their clients, the word family just comes up over and over again. It doesn't feel so much like going and talking to a professional services firm.
it feels like a family.
And what we found is when we turn to Henley and Partners is we get the answers right away, and it's straightforward, and the timelines are condensed dramatically, and that gives us very much a sense of comfort that we're in good hands and we're with people who know what they're doing. It's a fantastic kind of all-encompassing service that you get when you come to Henley and Partners.
They know what they're doing. They're professional, efficient, courteous.
They are providing a true service to these global high net worth individuals that are concerned about taxes, concerned about their freedom, concerned about the safety of their families.
And that's what Henley and Partners offers our clients, and that's what Henley and Partners helps create and construct for governments.
The fact that they have so much experience actually working with governments to set up these investor schemes means, A, that they understand them back to front, because they've designed many of them themselves. I mean, they're there working with the governments to create them.
Henley and Partners is really the firm that created this industry, pioneering many of these programs.
I'm not aware of any other company that has the knowledge of both sides of the equation so deeply, so intimately, that they can really claim to be experts on both sides.
That's what Henley and Partners does, and we do it very well.
The EFC, very well connected with the RRF, and Mr. Johannes Lübking, he is a principal advisor for the EU semester coordination at the RRF task force. So please, gentlemen, you may take your seats. The Minister, Mr. Haritsis, Mr. Costello, you, Mr. Wieser, and Mr. Lupking. We have to run a bit, so before passing the floors to our distinguished speakers, allow me to put down 3 basic facts that I assume they are part of today's discussion. First of all, obviously we are not at the beginning, we are now much closer to the expiration date of the RRF, so implementation does matter. Second, back in 2020, it was only the pandemic and its impact on the economy. Obviously, this is not the case anymore. We do have a Russian invasion of Ukraine. We do have a multi-level crisis to face. So right now, the RRF and the REPowerEU more or less go hand in hand. And critical decisions have been made. For example, we consider now gas and nuclear power as green assets. And third, successful implementation of the national plans requires smooth coordination and smooth procedures within the EU, the Commission, the Council, and operational mechanisms, effective operational mechanisms within the member states, the 27. In order to boost reforms and investments, a proper coordination is needed. Having said that, I thank the Economist, thank Nectaria, John, Daniel, Alasdair for their kind invitation, inviting me here today. I'm John Papageorgiou, by the way, Athens Digest head. And let me pass the floor to Minister Skylakakis. Please, I would like to have your initial remarks on this, and we will have the opportunity for a Q&A session after that.
Well, let's start by saying that RRF now is needed more than ever because we are in a period where the very high prices
we're in a period where the phone is ringing
due to the increase due to the war in Ukraine and the increase in TTF gas are critical for our economy. As you know, we are importing gas, less than other countries in Europe, but a considerable amount of gas. And with the prices as they are today, this is a heavy burden for the economy and a heavy burden for the budget, because we are covering part of the damage that these high prices create to the economy and the households. RRF is our buffer, essentially, our growth buffer for this very difficult period, and we have to move very fast into implementation phase, as we are actually doing. We will announce in June the absorption rate has very much increased. We will announce it in a few days. And also the part of the RRF implementation that is linked to the loans is going very fast as well. From what I see, we are over 2.5 billion and of investment plans that are already pre-accepted by the banks and are going through the motions to be turned into loans and investments within the next few months. And the rate is increasing every day. And I believe that by the end of the year, it might be double the today's amount. And this is a very big amount of investment. I think the biggest plan of investments ever made by a scheme in Greece. There are a lot of opportunities also for the smaller and medium companies. We have made a decision that subsidies, cash subsidies, are only going to go for small and medium companies in terms, for small companies and very small companies in terms of the development law. And also most of the money for subsidies in the RRF, be it for energy efficiency or the agricultural sector or the digital sector or other investments, most of the money, more than I would say 80%, are going to go to small and medium companies there. Now, it is also very important for the RRF to go forward with the reform part. As you know, probably you know, the reform part of the RRF is not reversible. It is something that we are obliged, if we want to implement the RRF properly and take the money properly, to carry it through to the end. Now, there is now a complication with the REPowerEU entering as a new chapter for the RRF, and this new chapter, we don't know. We haven't seen the final legislation from the European Union, but it will be part of our revision of the RRF that will be done within this year and will be this is a revision that has to be done because our growth was faster than originally anticipated, so our RRF budget has dropped by 400 million. So the revision has to take into consideration that we have less money. It has to take into consideration that due to international inflation, imported inflation for us, we have higher costs for the implementation of the projects and included in the RRF. And also we have to include REPowerEU as a new chapter, probably both in the subsidy part and in the loan part. So we have a lot of work to do in the next few months, and a lot of work to do also with our EU, the Commission partners, which are today very present here. We have a good cooperation up till now. We were one of the first countries that applied, and we keep that good cooperation. We want to implement the RRF fully, and our effort is to try to change the milestones and targets to the least possible, in the least possible way when we do this revision. We don't want to have huge changes, only marginal ones, if need be, in the milestones and targets. However, this is a difficult exercise because of our of the changing circumstances, which we all know that circumstances have changed, and maybe they will change again. We don't know how, but we are optimistic that the Greek RRF will go smoothly in the next period, and we would see a lot of absorption coming in the next few months, as we have seen in June, to be frank. So that's my first.
Thank you for this, Minister. And it's tempting, you challenge to talk about the cooperation and the changes that may come up. Let me turn to Alexis Haritsis, and we will revert during the Q&A session.
Yes, thank you, Yanis. Thank you to The Economist for the invitation. I think this is a very interesting panel. I would like to start with the larger European picture to understand where we are at the moment and focus more on the energy sector, because this is where the core of the crisis is. I think that the EU, for a very long period of time, the way it has handled its presence in the geopolitical arena, it has created many deficiencies in the lack of common foreign policy, the lack of common defense policy, but also on the economic level. The full economic integration is something that should have happened much earlier, and these deficiencies had their reflection on certain very important sectors of the economy, energy being one of them, one of the most crucial one of them. What we've seen is that different EU countries, especially the larger ones, have followed different paths, and this has been disadvantage in order for the integration of the single energy market to be completed, to be fulfilled. And of course, at the same time, I think Europe should have been more ambitious in terms of a plan for full breaking away from fossil fuels and thus from its dependency from external providers. And of course, the most obvious example here is Russia and the war that's taking place in this aggression from Russia that we are now all paying a very high price for it. Now, this is what's happened in the past. This is what happened in the years before this current crisis. What's happening now? I think on a more positive note, I think the RRF has been and is the very first important positive step towards this integration that I talked just a moment ago. It's a very pro-expansionary, pro-growth, in the essence of it, a very pro-European, I think, tool that we fully support. It is an instrument for cohesion between and within, and this is important for us, for Greece, member states, and for recovering and developing our economies from the current crisis of COVID and now the energy crisis. And at the same time, now we have a new instrument, which is REPowerEU, which is the next positive step. I would have expected it, to be honest, to be more ambitious. I would have expected it to be, to be greener. I would have expected it to come earlier, but it's better late than never. And its very existence, I think it's very important for Europe. It's very important for countries as Greece. Now, we have RRF, we have REPowerEU, but how can countries like Greece benefit from this instrument, especially REPowerEU, which is the main instrument that is being created to tackle the energy crisis? So what's happening in Greece? To be honest, my view is that Greece was not prepared to tackle the consequences of this energy crisis. I have to remind you that it was a whole year ago, it was July 2021, when in the National Parliament we addressed the issue that Greece already had the highest wholesale price of electricity in the EU. From the government back then, the response was that this crisis was a mere bump in the road to high growth. We all know what happened next, what happened in the last year in our country, on macroeconomic, on fiscal, but also on social level. We are currently paying the highest price in all EU of this energy crisis. So, given this situation, let's look a bit more specifically in a couple of minutes. Yanis, I will try to be very brief, on how we can benefit from REPowerEU, this new instrument, which I think is very, very important. What are the main priorities of this instrument? 4 main topics, 4 main areas that have been identified by the Commission. Energy efficiency first. Energy efficiency is very important for Greece, but at the same time, I have to say, how can Greece follow the European strategy on energy efficiency when all the relevant projects have been frozen? I have to remind you that Economist 2020 has only paid 15% of its beneficiary. Economist 2021 and 2022 do not even exist yet. And at the same time, the ambitious program Electra for public and municipal buildings, energy efficiency, which was created by the previous government, has been completely abandoned by the current government. So energy efficiency is a very important sector, but I think we are very much lagging behind the needs of the current crisis. Second, very important priority for REPowerEU is diversification of supplies and energy sources. On European level, and I have to be very clear on this, diversification cannot be materialized only through natural gas, of course. REPower needs to be much more ambitious on its green targets in that respect. But on a national level, here in Greece, can Greece follow the strategy on diversification when the current government has followed the unrealistic and dangerous strategy of delignitalization without any strategy? After 3 years, it had to be withdrawn by the same government. That happened only just in April. How can we achieve diversification of energy sources without investment on adequate electricity grid, on networks, on a regulatory framework for storage? And most importantly of all, given the level of the current crisis, what we need is an updated and revised national energy strategy for 2030 and 2050, which we are lacking at the moment, with all these developments that we have the last few months. So we are very skeptical about this priority of REPowerEU, the way the current government is handling it as well. Third is the acceleration of the rollout of renewables, which I personally think is the most important probably of all. We need to go into a greener economy. We need to stop our dependence on fossil fuels and, of course, on external providers of fossil fuels. But how can we achieve a massive scaling up and speeding up of renewables, as REPowerEU is suggesting, is promoting, without a legislative framework for spatial planning and sustainable development for renewables? This was introduced by the previous government in spring 2019, but it hasn't been completed in the last 3 years. And the fourth priority is the smart investment, according to REPowerEU. Greece could benefit from an additional funding of 7 to 8 billion euros, which with the leverage could exceed 10 billion. But the list of projects that will be funded by this additional funding has not been published yet. What we are reading on the papers is that 7 out of the 15 projects proposed by Greece, by the Greek government, are natural gas projects. This will not make the economy greener. This will not move us away from the dependency from fossil fuels and from external providers. So we need a revision of this plan if we want to be ambitious about REPowerEU. Just to sum up, Yanis, we are very hopeful about REPowerEU. We think it's a very important funding tool that needs to succeed on a European and also on national level. But given the unprecedented and the extreme circumstances that we are currently facing, we are very skeptical about the way the current government is planning to implement it. And I tried to give a few examples on the key priorities and where this skepticism comes from. We need to serve the current needs for the transformation of the Greek economy. We cannot afford to have another round of business as usual funding exploitation. This is a very crucial moment for the Greek economy. REPowerEU is here, RRF is here. We need to make the most of it and not just use it as we used such tools in the past. This is, for us, very important.
Thank you, Alexis. Actually, I am seeing that we will run out of time for the Q&A session. It will be 2 minutes per each speaker. So, turning to Mr. Costello, we'll ask Declan for his initial remarks. And please include both the European perspective overall within the EU and where we stand regarding the second assessment, the second evaluation of the Greek National Plan.
Good morning, everybody. Now, let me start by giving you our take on the implementation of the RRF after just 1 year. I mean, it's important to remember that this is a new instrument, and it really is a big deal for the euro area and the EU. It's the first time we have a common central fiscal capacity of macroeconomic scale that allows us to respond to economic shocks hitting our member states. Now, it was designed with COVID in mind, but actually, if you look at it, it's actually very well tailored to addressing the current shock to energy and commodity prices resulting from Russian aggression in Ukraine. I mean, to be honest, if the RRF didn't exist and you were designing an instrument to respond to the current shock, you would come up with something very similar to the RRF. And it's worth bearing in mind that a lot of the investments already are targeted at the transition to renewables, energy savings, sustainable transport. We do need a complement in terms of repower, but it's actually a very good instrument to respond to the shock where our economies are going through. So it's a big deal fiscally, but it's also a big deal in terms of the governance model and the way we interact and coordinate policies with member states, because it's the first time we bring together reforms and investments, and it's an instrument which is based on performance as opposed to providing funds in response to incurred costs. And that means what we care about is actually delivery and implementation, and not the nitty-gritty detail of all the invoicing and the detailed costs. So how is it working after 1 year? The answer is it's working extremely well. I mean, I have to say we are very, very pleasantly surprised at how well it's working. We have 25 plans approved. We're still waiting for Holland to submit. We're still discussing with Hungary, but we have 25 plans approved. We have already received 11 requests for payments, okay, and we've actually paid out on seven to date. We hope some more in the course of July, and we have dispersed 100 billion euros in the past 12 months. Now, I don't have the exact figure, but just to put a scale on that, that is, I think, the same or possibly even more than the combined spending of the EU budget on the Common Agriculture Policy and all of the cohesion funds. And that's how we've been able to scale this up in 12 months. We already see, in terms of our national budgets, that at the euro area level, it's contributing 0.5% of GDP this year in terms of additional investments. And that figure is much, much bigger in a country like Greece, probably above 1% of GDP, and probably will grow because of the very generous allocation. The other point I want to say about implementation is, I think what's really encouraging is it's working best and it's working fastest in the euro area countries which need it most. If you look at the countries which have completed payment requests, I mean, the countries are, it's Spain, which is already on its second payment request. We hope to disperse still very, very soon. Italy has completed one and has already submitted their second payment request. It's Greece, and I definitely include Greece in this country. We have Portugal, we have Croatia, soon to be euro area country. These are the countries with the largest allocations, with, I would say, the biggest need for reforms and investments given the challenges facing their economy. And it's real reforms. If you take what's happened in Italy with the adoption of a major reform of the justice system, the criminal justice, the civil justice, the administrative justice, insolvency law, and it's being implemented. In Spain, first time, 40 years, a common agreement of social partners to reform labor law, to tackle duality in the labor market. So, we really are encouraged in terms of how it's delivering. Maybe I can just turn to Greece very briefly. I mean, first of all, I think we very much include Greece in the country of front runners. We see that it's already one disbursement has been made. I mean, I think it's 6.1 billion euros, has already 3% of GDP has been transferred to Greece already. We're working, and I know the minister is working very hard on the second payment request, which we hope will come in September, which would be another 1.7 billion euros. So it really is in the front runner. We think it's a good plan. We think it's well founded. But I think what we are most encouraged by is the pace and quality of delivery. And I think it comes from really very, very high level political support combined with a really good administration to ensure swift and sound implementation. Now, clearly, it's a lot of work and there are challenges. I think, against the current economic background, what's going to be critical for a country like Greece, which, has high debt and remains exposed to changes in market sentiment, what's going to be critical is that Greece hits its deadlines for the submission of payment requests under the ORF and receives a steady flow of disbursements from Brussels in the next 6 to 12 months. So there's the second payment request, we're expecting it in September. There's some work to be done there on rail reform, on the renewables, but I think we're optimistic that will happen on time, and I think it will be important to show that this is working. There's a third payment request. It's actually a bigger payment request, probably due at the end of the year, actually double, 3.5 billion euros. And then, of course, there's the final tranche of debt relief from the Eurogroup partners. I think if Greece could really hit those targets, and continue to have this steady flow of disbursements from European partners, it would be the strongest signal, I think, to investors and financial markets that things are working and Greece can get through what is going to be a difficult period. Thank you.
Thank you, Declan. If I had to choose one person to talk about the administrative capacity within the EU and within the member states regarding projects like the RRF, it would be Thomas Wieser. Please, the floor is yours.
Thanks very much, Yanis, and thanks for the invitation that has enabled me to come back to a country which is not close to my work life, but also very close to my heart. And in the years since 2010, Greece and quite a number of other countries have had quite specific experiences with living in a currency union where rules and institutions and economics made a smooth workout of problems more difficult than many of us had anticipated, and it also led to very bumpy relationships with international or European institutions that were engaged in these issues. And this has led to what we usually call the stigmata of an ESM program. And they stem from the fact that if you're in a European Union and a fortiori in a currency union, you share sovereignty to an important part. On the other hand, very many people and especially political parties abhor the so-called meddling of outsiders and others in the sovereign decisions of parliaments and governments and so on and so forth. And how do we balance the need for sharing sovereignty and the insistence on national sovereignty, which is one of the reasons why we're no longer 28 member states, but 27 member states. And this, I think, over the last year, we've seen that the RRF provides a possible avenue for bridging this huge dilemma by providing more carrots than sticks that we had in the past. And despite what Declan has been saying is very fine, but the jury, of course, is out to degree the reform aspirations of the RRF implementation will be achieved in Greece just as much as in other countries. And I'd like to focus now just for a minute or two on an aspect, Yanis has already foreshadowed it, on an aspect that has been with me over the last 20, 30 years in all of the issues that we've been dealing with all member states. And to the disgust of my national government, I repeatedly make these points back home. And those are issues which we comfortably today bunch under the heading of governance. But we need to reflect on how political aspirations are formulated and how they are then translated into successful projects on the ground. How realistic are they? How transparent are they? And they require a purposeful and efficient administration, which is staffed under meritocratic principles. Sounds easy. It requires a pro-competitive, pro-competition environment. It requires a political culture which is comparatively free of cronyism, so that public tenders go to the better firms that don't have padded projects. It requires a media scene which is able to honestly and free of fear and influence describe and analyze what's going on amongst a variety of similar factors. This is what I'd call governance and political culture. And without these factors, countries have weaker investment performance and especially a considerably lower FDI for indirect investment share than others. Mobile young people and their startups tend to migrate towards more rewarding regions. Tax compliance tends to be lower, which limits a proactive role of the state, and so on. So all of us, all member states, have to look where they are in that regard. And I note what Declan was saying, that countries, member states in the south of the Alps have been more successful than countries north of the Alps who've never gone through the rigors, call it a training school, the rigors of programs or quasi-programs, as was the case in Italy. And I've often wished my country could have gone through such a program. But to come to a closure, I do note that in the most recent IMD ranking, Greece ranks 55th out of 63 countries in terms of government efficiency. And neither Rome nor Athens were built in a day, but I do remember 12 years ago, we had long discussions and reform proposals on reforming the public administration in Greece. And it's been a long time since we agreed on the diagnosis. We're still waiting for some of the medicine to be administered and some of the medicine to take effect, even though in a certain doses it probably already has. But I think the conclusion is, if we want the RRF and Repower EU to exceed for the benefit of the Greek economy and the Greek people, then one of the necessary factors will be rapid improvements on professionalization of administrations, of processes, and the greater separation of powers. And Greece has shown in the past that it's capable of great things in terms of reforms and projects. So this should be possible if politicians and powerful economic interests so wish. There is a possibility. Let's hope that it comes to fruition and that the RRF helps.
Thank you, Thomas. I assume it's not the easiest thing to try to deal with Repower EU given the circumstances. So I pass the floor to Johannes Lübking. Mr. Lübking.
Thank you very much. And good afternoon to everybody. And thanks to The Economist for setting up this panel. what is lying ahead in terms of RRF for Greece? And this is on the one hand the implementation, and Declan has gone into that for the payment requests which are coming up, and the second is then the dealing with the Repower EU novelty. Looking at what Repower EU is about, it has been adopted by the Commission as a communication on the 18th of May. It also includes one targeted proposal for an amendment of the RRF regulation exactly for then provide for the additional funding for Repower EU for the energy matters, and second also to allow member states to benefit for specific rules in order then to move forward. It also shows that Repower EU is an addition to the RRF, and it shows that the RRF is really an agile instrument which is able to deal with that. And looking back at how it has been conceived, it really shows that the policy focus was already there in the RRF from the very beginning. How does it actually work? It's an additional chapter, what is foreseen for the Repower EU measures, and two broad policy areas which are in focus. Therefore, the first one is the acceleration of the decarbonization, and exactly in order to make the measures greener, to accelerate the implementation of that. And the second is the diversification of supply away from Russian fuel, especially with regard to gas. The measures which are falling under that, this is on the one hand the improving gas and oil infrastructure, and here I have to stress the limitations, therefore to meet immediate security of supply needs which are there in the interest of the Union as a whole. Therefore, this is not carte blanche to build a lot of new gas and oil infrastructure, but it's really only if it's absolutely needed. All of that has to be embedded in the 2030, 2050 targets of the Union. And I mean, what we really want to avoid is that this money is taken in order to finance stranded assets, but really only those which are necessary and which can also be used afterwards. Second point is, of course, the boosting the energy efficiency, decarbonization of industry, very much focused on hydrogen, which is also important for Greece, biomethane, and the increase of the share of renewables. And we have heard yesterday that the share of renewables in Greece has had a record high recently. Then energy transmission bottlenecks, which is really important between member states, but also within member states. And then, of course, what we are experiencing in all the member states, that the workforce has let's say, a lack of green skills, and therefore the improving of the green skills for the workforce in order to be able to implement all these different measures is one of the priorities. I said what is lying ahead. We are really looking forward to discussing these issues with the member states in autumn. As I said, it will be an additional chapter, and this separation of the additional chapter should already make sure that there's no distraction from the implementation as such. The implementation of the plan is really still taking priority in all of that. And then, of course, the other condition is there that we need to have the regulation implemented. At the moment, it's in the hands of the co-legislators. We are looking forward to have the legislation enacted, but as we have done it also last year for the various plans of the RRF, we are looking forward to discussing that with the member states in parallel in order to ensure that this is being speedily adopted in the end.
Thank you very much. As we do not have time, I will ask each one of you within 1 minute to answer according to his perspective, one question. First of all, Minister, there are downside risks regarding the implementation. Even the different electoral cycles within the EU, actually in Greece, whenever we have a snap election or a normal election, everybody talks about that, may cause such risks. Where do we stand according to the plan, and how do you scheduling to face this?
Well, the risk of elections is now further away, as you all listen to the Prime Minister.
At some point we will have, I assume.
What?
At some point we will have elections.
Yes, yes, but we will have elections when elections are due, as the Constitution is implemented. Now, for us, the political cycle is, of course, important, but it's more important to keep doing the job. This is a very, very difficult period in terms of implementation. We are including in our implementation new reforms. For example, I've heard about the administration problem. Of course, there is a problem in our administration, but there was always a problem, and nobody had implemented any incentives for the administration to work. It's as if we thought that if people are paid less and not linked to performance, they will implement things. Now, it's important with the RRF, we implement exactly that, a bonus for the administration in critical areas. And we are implementing a lot of other reforms. And in my mind, and in our economic analysis, the reforms included in the RRF are more important macroeconomically in the long run than the money that are going to be dispersed. And it's extremely important to realize that the RRF can only work if the reforms go forward. And this is what we are absolutely decided to do. And it's important to understand also that these huge investments that are needed for the transformation need the proper investment climates. Investments are not discussions. They are actual actions of economic players. They either happen or don't happen. In the past, they haven't happened in Greece. Now they are happening.
Mr. Haritsis, thank you, Minister. Mr. Haritsis, you referred to changes. The question here is, what do we need to change? And above all, what is feasible to change according to the framework of the RRF?
Yanis, I think that sometimes I get the feeling that these discussions have to be less distant from what's happening in the real economy. We are living in a period of huge challenges, very severe crisis. As you know, the historian Adam Tooze has called this a polycrisis because of the multiple layers and levels of the crisis. And he has also added that the whole is even more dangerous than the sum of the parts. And I agree with this statement. I think we need to understand that we don't live in normal times. So we need to be more radical in the interventions that we make. We don't just want these very important, as I said, and positive tools like RRF and REPowerEU to work for the sake of absorption. It is important to have absorption, but it is important for it to reach the final beneficiaries, which is the businesses and the households of Europe and of Greece in our particular, in this particular case of our country. I think the matter of time here is crucial. We need interventions as a matter of great urgency. We cannot afford to send mixed signals. For example, the decision yesterday from the European Parliament on EU taxonomy, I think it's a decision that is not on the right direction, where gas and nuclear power will benefit from green investments. This is not what we need as Europe. This is not what we need as Greece. We need to be more ambitious in terms of a strategic plan to work on all these financial instruments as a whole. We need a strategic plan for RRF, for REPowerEU, for new common agricultural policy, for NSRF, ESPA, to use these financial instruments, these funding tools as a whole, and not separately. There's a lot to be done. We are losing time here, I think, with the way that the decisions have been made. But still, the positive thing is that we have the tools now in our hands. And just to conclude, I think Europe should be, be more ambitious in terms of the ending the dependency on energy on external producers. It had been Russia in the past, and of course, if we have to be honest with each other, certain countries like Germany played a very important role in enhancing and increasing Europe's dependency on Russia, on oil and gas. We have to end this dependency, but we don't need to exchange this dependency for a different dependency on external producers. What we need is we need to make the most of our own internal, of our own domestic sources, renewables being the most important ones. So we need a more ambitious plan on green transformation of the economy. We have the tools. We need the political will to implement it.
Thank you. Declan, we heard about time. We don't have time. Is an extension regarding funding an option on the table, first? And second, we do have a tool, a monitoring tool now that can be potentially useful, and I'm referring to future use for the MFF, for structural funds. First of all, do we have any extra time regarding the funding? Second, can we use this tool that we are creating and in a more efficient way in the future?
Okay, I mean, I'm pleased what the minister said about the need for sustained implementation by the administration during an electoral process. Greece has to avoid the mistakes of the past where the administration stopped working for several months every time there was an election. And so whenever the election is, it's important that the technical and preparatory work is done. In the short term, we're going to go through, our economy in Greece will go through a difficult economic period. And there is the possibility of 3 or 4 disbursements from different sources between now and the next conference here next year, amounting to 4 percentage points of GDP or possibly even more. I think Greece needs to hit those targets and get the money, and I think that will send a very, very strong signal again, to markets and investors during a difficult period. In the longer run, it's very, very important to realize that the funding from the RRF is only available up until the end of 2026. So if the investments are not completed by then, the money stops and they will not be dispersed.
31st of August.
Yes. And so there is no possibility to extend it. It would require the unanimous decision of all 27 member states and the approval of many of their parliaments. Now, realistically, that's just not going to happen. So sustained implementation and avoiding, there can be changes to plans if there's really a very strong objective reason to make the change, but only then. So no, I think really sticking to the plan and implementing, that's the key thing. Thanks.
We have to go to the next panel, so I have to ask Thomas, too much politics in the RRF scheme, or potential political intervention and dimension in the next few years?
Not quite sure if I completely understood, but I think there are 2 kinds of countries. One uses its administration as a, if you want to, instrument for political patronage, and the others use it as an instrument for increasing welfare, productivity, and growth. And that's a choice, and in reality one has to insulate politics and administration to a large degree from each other. Then it works. Take the Netherlands as an example, and voilà, there you are. I'll save you time.
Thank you. And finally, Mr. Lukig, the Minister of Infrastructure is here, and his panel follows. So I would like a comment regarding the infrastructure aspect of the REPowerEU within the Greek national plan. Is there a crucial aspect? And I'm referring to the energy security. I'm also referring to the supply chain. So I think it has to do with it.
Oh, thank you very much. But infrastructure is really an important part of the Greek plan. We have, let's say, it stretches, especially with regard to transport infrastructure, and it really covers all different modes of transport. One of the important issues is really for Greece to get the railway infrastructure on track. And I think we have devoted a lot of significance in the plan on this, and as Declan said, it's also part of the first payment request. There we had the railway roadmap. It's also part of the second payment request, and I think that will in the end open up also for Greece a lot of access to further European funds in order to make sure that the railway infrastructure can serve the needs of the Greek citizens, and that we all fulfill here in Greece the desire to have sustainable transport, apart from all what is already in the plan with regard to, for example, electric mobility. We have heard yesterday a lot about electric buses, also outside Attica and Thessaloniki. This is also in the plan, but I mean, the focus which we have to do now is really also on railway.
Dear gentlemen, thank you all for being with us. Thank you all for joining us.
I'm very happy to introduce the next session. We're very privileged to have the Minister of Infrastructure and Transport for Greece with us, Kostas Karamanlis, and we'll be joined on the stage by George Milonogiannis, who's the chairman of the board of directors of Elactor Group, Greece's biggest construction company. I'm afraid Mr. Soretis can't join us, but I'm sure we're going to find plenty to talk about. Please come up and join me. I'm very well.
Nice to
Good to see you. Likewise.
Thank you for the invitation.
Oh, you're very welcome. Sorry?
In Thessaloniki we are.
Ah, yes, of course.
But this time with my name not having problems. Even though it's a bit
Well, pure luck. Oops. Okay, so we're surprise, surprise. We're running late. We don't want to cut this short, so I'm going to jump straight in and hand the floor over to you, Minister, and just set the scene for us with your opening words, if you would.
Thank you very much. It's a great honor to be here, especially live. So I think that I'm going to make some very opening remarks so that we can have a nice Q&A session afterwards. So I think that we should begin by stating the obvious. First of all, that beginning with the 2008 crisis, everyone understands that we had a huge depression. What did this mean generally for our economy? It meant that we lost around a third of our GDP. It meant that we had a huge problem with the balance of deficits. It meant that we have a huge problem with unemployment. And I think that it is something that we can all agree that today with the Mitsotakis government, Greece, from a scapegoat, is an example to follow. How does that follow when it comes to the huge play in construction and infrastructure and in transport? Let me say that basically in the last 3 years, Greece has developed one of the most ambitious and biggest plans when it comes to infrastructure projects. We have tendered 8 billion euros of infrastructure projects, most of them green, focusing on decarbonization. I think we might have the chance to analyze this further down during our discussion. and we have already contractualized 3.2 billion. So basically, this is something that creates a huge boost when it comes to our national economy. The construction sector has basically played a pivotal role when it comes to brain gain. In the last 12 years, we had a number of extremely talented civil engineers, architects that left Greece. Those are now coming back because of the huge public works projects and because, to be quite honest, of the Hellenikon project, which is moving very fast. And basically, we are trying now to do a number of infrastructure projects that will transform Greece into a logistics, infrastructure, transport, and energy hub of the greater southeastern European area. How do we do this? Rail projects, extremely important. We have tendered around 4.5 billion of new rail projects, and we are doing the obvious, connecting our ports with industrial centers and with an electrified rail system. So imagine Thessaloniki, Kavala, the port of Alexandroupolis, all of them connected. This is the plan. It's not actually a plan, it's something which has already been tendered. So basically, Thessaloniki can become a getaway port for the greater Balkan region. Alexandroupolis, I believe that we are all in agreement that it plays a significant geopolitical role in the region. And with the recent developments in the Russian-Ukrainian war, we can understand how important for Europe is going to be the fact that we will have all these FSRU units in Alexandroupolis. So what are we doing? We're connecting the ports of Alexandroupolis all the way with the ports of the Black Sea. This is an agreement that we have reached with the Bulgarian government, and this project is moving quite fast. And also, what we're trying to do, basically, is to upgrade industrial centers, the Thriasio 2 and the Thriasio 1 projects that were stalled, projects that had a number of issues and problems. Those have been unblocked. Now, since we are talking about transport also and infrastructure, I need to say, and I need to mention, the fact that Greece has been a champion when it comes to e-mobility. I'll give you just one number, which I think will explain everything. In 2019, only 0.4% of our car fleet was EV, electric vehicles. We are now at 7%. This is the biggest increase in the European Union. So basically, we are trying to move very fast in order to cover all the lost years that we had because of the last economic crisis. Greece was lagging when it came to e-mobility. And we are also upgrading our bus fleets. We are going to have 300 electric buses in Athens and Thessaloniki, and around 300 CNG buses and hybrid buses. This is going to be one of the biggest green bus fleets in EU member states. And we are also moving very fast in creating rechargeable points in order for all the car users to, especially in the motorways. Now we have a very significant and very important recharging network. So to cap it up, infrastructure projects. In the last 3 years, we managed to basically tender 8 billion. 4.5 of them are rail projects. This is in the heart, this lies at the heart of the EU policy of decarbonization and of basically creating a greener European Union. This is extremely important, and we are trying to move very fast in order to make this a reality. And how do we do this? By also reforming an extremely problematic delivery of infrastructure system that we have with the two companies, OSE and ERGOSE. We are working very closely with the European Commission to reform two subsidiary companies. OSE is the infrastructure management, Ergose is the subsidiary that is responsible for basically new rail projects, so that we can be able to finish this, to have concluded this project by the end of 2027. And I think that this basically is something that will change the role of Greece in the greater region. I think that the logistics sector can play a very important role. Some analysts have predicted that it can go up to 3% of GDP. This is something that was actually mentioned in the first year of the crisis. There was a very interesting McKinsey report that was actually stating the obvious, that Greece has to take advantage of its geopolitical position. But if you don't have the infrastructure projects, if you don't have the infrastructure, you cannot move towards this strategy. So this strategy now is becoming basically a reality. And we are very happy to see that the construction sector is following basically the government's policy. And we also have a number of foreign companies that are now extremely interested in participating in all those projects. And this is something that shows that Greece has moved and it has left the past in the past. Thank you very much.
Thank you. Thanks very much. You operate in the environment that is supervised and set to a degree by the government. I'm very interested to hear what you're going to say in response to the Minister's statement, so please go ahead.
Thank you for inviting me. It's an honor for me and for Electoral Group to be with you again. And I have to admit what the Minister said before. It is true that the government has launched a huge amount of funds for the construction industry and for infrastructure projects. And there is no doubt that the construction market and the infrastructure projects are in the epicenter, I would say, of the strategy of Greece and are heavily subsidized or supported by the RRF. I will start with the obvious things to say that investment in new projects should take into consideration the target of climate neutrality, the protection of the global ecosystem, and in parallel they should support the need for the upgrade of the transportation infrastructure of the country, but also of Europe. And the final goal is the improvement of the quality of life and the increase of productivity in the economy. Such aims could have been accelerated if what I call asymmetric warfares were not existing. I refer to asymmetric warfares because nobody could have expected a pandemic 100 years after the Spanish flu, or a war in the European territory, 80 years after, approximately 80 years after the end of the Second War, or 30 years after the collapse of the wall. The effects of the said threats or events are very well known. There is a dramatic increase of energy costs, of the cost of raw materials, the problems in the supply chain, which resulted to a global economic crisis. Our industry, the construction industry, was in the middle of the cyclone, one of the first victims of this crisis, because the raw materials and energy are some basic factors in our projects. I have to admit that the government, the enterprises, the financial sector, everybody are looking for methods in order to mitigate the problems arising from what I said before. But what I would like, I think what I said before has been analyzed and discussed a lot. I would like to insert in our discussion some issues which I believe have not been extensively discussed in the past or until now. And I have to be honest, it's not my idea. It was because I have seen a recent review of UBS, which added 2 new D parameters, which have been added to the first one, which is decarbonization that we all know. So the new 2 Ds are the deglobalization and defense. So the deglobalization delays the movement of capitals and excludes some capitals from coming to Europe and to Greece. So my first question, I'm not such a good economist, even though my first degree was in economics, so I cannot answer the question to what extent this deglobalization will affect the economy and also the ongoing projects or the plans for the for the infrastructure projects. The second is the increase of the defense budgets. We all know that Germany launched a new defense program of 100 billion euros. It's obvious that this amount of money will not be directed to the, let's say, civil economy and to the non-military, let's say, investment. It is early to estimate, I understand, the effects on infrastructure projects, but it is sure that 100 billion from Germany, and to the extent that the other European countries will follow this example, will be missing from the infrastructure projects and to other projects which are subsidized by the RRF and which are targeting, let's say, to the Fit for 55, to all these kind of things. I could say that, somebody could say that the defense infrastructure projects could somehow set off the consequences, but I believe that not to their entirety. Don't take me wrong, especially the minister. I don't say that defense expenses are useless. And in contrary, I will remind you the Vitegius statement, si vis pacem para bellum, which means that if you want to have peace, you should be prepared for war. Thus, the Greek government had proactively followed this proverb in the sense that we have, and we are very happy, that we have the Rafale, that we have the ongoing program from the frigates. For obvious reasons, I don't want to take your time in order to analyze more some obvious things. I did not want to create some kind of pessimism with the new Ds, but just to add some topics in the discussion concerning the infrastructure projects and what we are looking forward. So I have to say something for our group, which is it's a key player, I would say, in the industry, and we are prepared to contribute in the coming infrastructure projects, but needless to say that it is mandatory to have the support of the government, especially in connection with the budgets and the time between the orders and the implementation of the projects, with an inflation of 10, 12, whatever percent, makes our life very difficult. Thank you.
Okay. It's nice to know your life is very difficult, because everybody else's life is very difficult. So
I know, but
it's only fair.
They're exaggerating.
They always do. They always do. Minister, I'd like to invite you to, assuming you want to, I'd like to invite you to come back on some of those points. I mean, the point about deglobalization is a general global one, but you may have a view on that. The point about defense spending and the sort of trade-off between the benefits and costs of that. And if you like, also on the special personal appeal.
First of all, I understand that there is there's a general theme about deglobalization. But I'm going to try and be a little bit provocative. His company, it was a company that proves that Greece is an exception to the rule. Why do I say that? Because in the last 3 years, foreign direct investments, especially in sectors that are booming, energy and infrastructure, have been increasing. So you had a change of shareholders, and a major foreign fund came and participated and bought 30% of Electoras. I think that was 2 years ago, a year ago.
Yes, 1.5.
So basically, this proves that in the last 3 years, and if you look at all the statistics and all the numbers, I won't bother you with that, Greece has made progress when it comes to attracting foreign direct investments. So yes, there is a huge question mark about what's going to happen in the future. But right now, I think that Greece is placed at a pivotal point where we still see foreign investors that are still very attractive when it comes to Greek assets for a number of reasons. One of the obvious reasons is that we have a stable government, we have a stable economy, and to be quite honest, our asset prices had deteriorated for a number of years. Now, coming to defense, thank God I'm not the Minister of Defense, but I can tell you that for the last 30 years, as George mentioned, Greece has had a budget of around 4 to 5% when it comes to budget expenditures for a number of years, for a number of reasons. The most obvious is that, you know, we are not Belgium, we are Greece. You know who our neighbors are. So you see that Greece has this deterrence theory strategy, which this government has been serving. I understand that there has been a great question mark about German militarization. I mean, it's the first time that Putin has made us happy that the Germans are rearming. So this is a first. But at the same time, I think that if this is in the context of a wider European security defense mechanism, then I think that this is going to work in favor of stability, geopolitical stability, and as I think was mentioned, if in this area where we live, I think stability is very important. So I'm not very worried about that in a sense. And it all depends if this war is going to be if this situation with the Russian invasion is going to come to an end, or it's going to continue for a number of years. But in a sense, I'm not pessimistic. I think that with what's going on, Greece is a country that has left all the crises and all the problems behind. And political stability, and Mitsotakis being a prime minister who can very easily create a calm atmosphere for investors, I think plays a very, very important role.
Okay, fantastic. I'm very wary about putting us in the path of the lunch stampede, which is about to break out. But there is a question I want to ask you. You raised electric vehicles, and one of the big concerns with electric vehicles is what they call range anxiety. Will it get you far enough? Now, there's a certain range anxiety about your government at the moment. How far are you going to get the time to implement what is a pretty long-term program of investments? A really serious question, I think, because the story you tell, which is a very positive story, projects quite a long way into the future. And of course, the future could look very different from the present. Do you want to comment on that a little bit?
Yes, but I think that concerning my portfolio and all the infrastructure projects that I mentioned, the 8 billion projects that have been tendered, there is a huge difference with what happened in the past. We have guarantee finance for these projects. And I think that the RRF has been a huge blessing for our government, because I can give you numerous examples of extremely important projects that would have never been financed by other mechanisms, funding mechanisms from the European Union. I mean, I can mention, for instance, water supply issues. We are, right now, we are basically launching a number of water supply projects that are extremely important, also for creating a climate-neutral Europe by 2050, but also because these are sustainable projects that will bring economic growth. I mean, imagine an island like Corfu. We're actually spending around 200 million euros to solve basically their potable water issues. This is a problem that has existed for 50 years. So I think that these projects will continue regardless of who is minister, regardless of who is prime minister. For one, of course, if Mitsotakis remains prime minister, those projects are going to be concluded in a much more efficient way. I think that we have proved that. But because all those projects have guaranteed finance, and because the RRF mechanism, as was mentioned in the previous panel, has a very strict framework, I think that those projects will be concluded regardless of who is in charge.
Okay, that's good news for all the investors out there. We're going to break now for lunch. There's so much more to talk about, so much, but we have to keep our promises, as we all know. So we break now for lunch. We'll see you again after lunch, but before you go, please join me in thanking our wonderful panel. Thank you.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα κι εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present could meet? What if, to save the landscape, we changed it? What if the future began by looking at our cities under a different light? What if we revolutionize the way we stop, not just the way we move? What if transforming the world started from our homes? Like Thomas Alva Edison, we never stop asking questions. The questions that push us to focus on renewable energy sources, decarbonization, and energy services. To build together a more sustainable and better future for everyone. Edison, becoming the energy that changes everything.
More than half a century ago, we envisioned the future, with people living in sustainable cities, in harmony with nature, with contemporary infrastructure, empowering quality in daily life. We envisioned the future and paved the way for the short and long journeys that connect people's lives and make dreams come alive. We believed in the clean energy revolution and the power of innovation, and ventured forth. We believed in our people, who carried their skills and expertise all over the world. We believed that everything new we undertake should create opportunities and bring prosperity to all. Gek Turner Group, investing in Greece, investing in the future.
It is the future that calls us, our history that forms us. It is a passion that drives us for doing now what patients need next. Together as one, we pursue a better tomorrow. An ever-forward evolution of discoveries across boundaries, among partners, beyond failures, around the world. There are countless reasons why we do what we do every single day. But at the core, it is about our most precious gift, life.
Life in all its beauty and its complexity. Life as moments to be experienced, shared and remembered. Life as possibilities beyond the horizon. Life transformed by science, from despair to hope.
Together to celebrate life.
The wealthiest, the most successful people are generally international.
The world is becoming an ever volatile, ever-changing place, changing much faster than it did before. There's a class of person out there now who's actually rapidly adapting to the changing environments.
The world is moving to global citizens.
Henley & Partners is a unique firm that is addressing the needs of this global citizen.
Like so many times in life, you don't get aware of the need until you really ended up in a situation, and then it's too late.
Or it's quite useful to have just options.
Ultimately, quality of life, education, mobility, security, and tax. In this international and global world that we're in, these are the tools you want.
Truly the ultimate symbol of freedom.
Yes, being free.
It's the ability to live where you want, travel where you want, raise your kids where you want, and not subject your family to the fate of where you happen to be born. You actually get to choose.
I find that Henley & Partners are a professional company, but they're also very approachable.
Very open communication. It's like you know somebody for 30 years.
Always starts with an initial meeting where we really establish whether we are the right people to deal with and whether the client is right for us.
Well, from the point of view of the clients, and I've heard this from so many of their clients, the word family just comes up over and over again. It doesn't feel so much like going and talking to a professional services firm. It feels like a family.
And what we found is when we turn to Henley & Partners is we get the answers right away, and it's straightforward, and the timelines are condensed dramatically, and that gives us very much a sense of comfort that we're in good hands and we're with people who know what they're doing. It's a fantastic kind of all-encompassing service that you get when you come to Henley & Partners.
They know what they're doing. They're professional, efficient, courteous.
They are providing a true service to these global high net worth individuals that are concerned about taxes, concerned about their freedom, concerned about the safety of their families.
And that's what Henley & Partners offers our clients, and that's what Henley & Partners helps create and construct for governments.
The fact that they have so much experience actually working with governments to set up these investor schemes means, A, that they understand them back to front, because they've designed many of them themselves. I mean, they're there working with the governments to create them.
Henley & Partners is really the firm that created this industry, pioneering many of these programs.
I'm not aware of any other company that has knowledge of both sides of the equation so deeply, so intimately, that they can really claim to be experts on both sides.
That's what Henley & Partners does, and we do it very well.
Από το τίποτα ξεκινάει η ροή. Χθες ήταν η πέτρα που σκάλισε τον χώρο. Και έμεινε στον χρόνο. Σήμερα είναι το σώμα. Που έχει μέσα του τον κόσμο. Αύριο θα είναι η φύση που δίνει ζωή στη ζωή. Ροή είναι η συνεχής γραμμή που ενώνει το παρελθόν, το παρόν και το μέλλον. Και είναι στο χέρι μας να τη διατηρήσουμε. Γιατί είναι η δύναμή μας. Βίκος. Δύναμή μας, η ροή μας.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
Στις θάλασσες όλου του κόσμου, οι Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα κι εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present could meet? What if, to save the landscape, we changed it? What if the future began by looking at our cities under a different light? What if we revolutionize the way we stop, not just the way we move? What if transforming the world started from our homes? Like Thomas Alva Edison, we never stop asking questions. The questions that push us to focus on renewable energy sources, decarbonization, and energy services. To build together a more sustainable and better future for everyone. Edison, becoming the energy that changes everything.
More than half a century ago, we envisioned the future, with people living in sustainable cities, in harmony with nature, with contemporary infrastructure, empowering quality in daily life. We envisioned the future and paved the way for the short and long journeys that connect people's lives and make dreams come alive. We believed in the clean energy revolution and the power of innovation, and ventured forth. We believed in our people who carried their skills and expertise all over the world. We believed that everything new we undertake should create opportunities and bring prosperity to all. Gek Turner Group. Investing in Greece. Investing in the future.
It is the future that calls us, our history that forms us. It is a passion that drives us for doing now what patients need next. Together as one, we pursue a better tomorrow. An ever-forward evolution of discoveries across boundaries, among partners, beyond failures, around the world. There are countless reasons why we do what we do every single day. But at the core, it is about our most precious gift: life. Life in all its beauty and its complexity. Life as moments to be experienced, shared and remembered. Life as possibilities beyond the horizon. Life transformed by science, from despair to hope.
Together to celebrate life.
The wealthiest, the most successful people are generally international.
The world is becoming an ever volatile, ever-changing place, changing much faster than it did before. There's a class of person out there now who's actually rapidly adapting to the changing environments.
The world is moving to global citizens.
Henley & Partners is a unique firm that is addressing the needs of this global citizen.
Like so many times in life, you don't get aware of the need until you really ended up in a situation, and then it's too late.
Or it's quite useful to have just options.
Ultimately, quality of life, education, mobility, security, and tax. In this international and global world that we're in, these are the tools you want.
Truly the ultimate symbol of freedom.
Yes, being free.
It's the ability to live where you want, travel where you want, raise your kids where you want, and not subject your family to the fate of where you happen to be born. You actually get to choose.
I find that Henley & Partners are a professional company, but they're also very approachable.
Very open communication. It's like you know somebody for 30 years.
Always starts with an initial meeting where we really establish whether we are the right people to deal with and whether the client is right for us.
Well, from the point of view of the clients, and I've heard this from so many of their clients, the word family just comes up over and over again. It doesn't feel so much like going and talking to a professional services firm. it feels like a family.
And what we found is when we turn to Henley and Partners is we get the answers right away, and it's straightforward, and the timelines are condensed dramatically, and that gives us very much a sense of comfort that we're in good hands and we're with people who know what they're doing. It's a fantastic kind of all-encompassing service that you get when you come to Henley and Partners.
They know what they're doing. They're professional, efficient, courteous.
They are providing a true service to these global high net worth individuals that are concerned about taxes, concerned about their freedom, concerned about the safety of their family.
And that's what Henley and Partners offers our clients, and that's what Henley and Partners helps create and construct for governments.
The fact that they have so much experience actually working with governments to set up these investor schemes means, A, that they understand them back to front, because they've designed many of them themselves. I mean, they're there working with the governments to create them.
Henley Partners is really the firm that created this industry, pioneering many of these programs.
I'm not aware of any other company that has the knowledge of both sides of the equation so deeply, so intimately, that they can really claim to be experts on both sides.
That's what Henley and Partners does, and we do it very well.
Από το τίποτα ξεκινάει η ροή. Χθες ήταν η πέτρα που σκάλισε τον χώρο. Και έμεινε στον χρόνο. Σήμερα είναι το σώμα. Που έχει μέσα του τον κόσμο. Αύριο θα είναι η φύση που δίνει ζωή στη ζωή. Ροή είναι η συνεχής γραμμή που ενώνει το παρελθόν, το παρόν και το μέλλον. Και είναι στο χέρι μας να τη διατηρήσουμε. Γιατί είναι η δύναμή μας. Βίκος. Δύναμή μας, η ροή μας.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει πρόσω ολοταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Good afternoon, ladies and gentlemen. We're going to resume the conference and start with our next panel discussion. So anybody who is outside the room and wants to hear this discussion, I advise you to come into the room right now and please take a seat and we will get started. So in many ways we're going to be no doubt picking up on some of the topics from earlier in the day. This session is called Where Does Greece's Financial Future Stand? I think it's maybe going to be a bit of a broader discussion. How does Greece stand in terms of its economic future? I'd like to say first of all that we are missing one speaker, Thanasis Kontogeorgis, the Secretary General for the Coordination of the Government of Greece, cannot attend, unfortunately, for health reasons. He's not very well. So I would like to welcome Paolo Fioretti, who is the Mission Chief for Greece of the European Stability Mechanism, to join me on the stage. Julia Lendvai, Mission Chief for Greece from the European Commission. Martin Bijsterbosch, Mission Chief for Greece for the European Central Bank, and Ioannis Georgioulas, Chairman of the Association of Cyprus Electronic Money and Payment Institutions and Non-Executive Director of ExComBX, and Yoria Stamatelou, Partner, Head of Tax and Legal at KPMG Greece. Please, all of you, come and join me on the panel, and if you can, I'm going to be sitting right down here. If you can take your seats in the order maybe that I called you, so Mr. Fioretti here, Julia next, and Martin, Ioannis, and Yoria. Welcome, all of you. Great to have you with us this afternoon. Now, well, we're starting 10 minutes late, but I'm sure we're going to be really succinct, all of us. And I would ask you, if possible, I know you've all been told 5 minutes, and I don't want to take that away from you, but if you can be even briefer, that would be great, because I would like to have some Q&A, time for Q&A, and take some questions from the audience as well. So I'm going to go straight to you and ask you, Paolo, for your introductory remarks.
Okay, thank you, Joan, and good afternoon, everybody. I will focus my initial remarks on one of the questions that you put in the agenda, in particular the one on the confidence and how to better shield the banks. The question is on how to restore the confidence. Honestly, I think that there is no need to restore the confidence. The confidence in the banks and the banking sector in general is there. Indeed, the banks are performing pretty well during this crisis and also during the previous crisis. And this is particular for what Europe has done in the past. Looking backward, we needed to introduce a lot of changes in terms of institutional regulatory framework to restore the confidence that fall in the past crisis. If I look backward briefly, I can remember the banking union was a major step. The Commission introduced two pivotal directive, CRD4 to implement Basel III, imposing banks stricter requirements, and the BRRD that introduced a new resolution framework. It was created the SRB and SRF. ECB implemented a solid framework for liquidity to banks that helped to take out the liquidity risk and giving a lot of confidence to investors on banks. And last but not the least, was also my institution was created, the ESM, that with our program of financial support, we helped to stabilize the economies and restore the confidence in the countries, but also in the banking sector. What we can be done more, I think it's obviously we can do much more, something more, for example, to complete the banking union, and in particular EDIS, that would help to reduce the fragmentation among banks in different countries. Unfortunately, the Eurogroup decided last June to postpone the introduction of EDIS, and that is an unfortunate decision, I think. Also, the finalization, the final agreement, ratification of the common backstop would be important. Last year, our treaty has been approved, and now it's going through a ratification. Our treaty, in our treaty is embedded the mandate of a common backstop that we received recently. And this is an important element to complete the banking union and restore confidence. The ratification process is still pending. I think it would be wise to accelerate the implementation. From the bank's point of view, I see that the banks have a much better position, are stronger, and they should probably, from a capital point of view, improve the quality of the capital. In particular, I'm referring to Greek banks. Most of the capital is in terms of DTA. They should try to improve the quality. DTA is a low quality equity. In terms of profitability, profitability is the first buffer against risks, the first shield. They should improve it, in particular make it recurrent and resilient. This can be done investing in IT, digitalization, making banks much more efficient. That could be a way. Then there is a concern that it's the bank sovereign nexus that unfortunately is still alive, probably less important than before. Greek banks have a lower stock of government bonds in their portfolio, but the nexus has increased due to the state guarantee that were provided during the last 2 years to support the economies, that it was the right thing to do, but unfortunately increased this nexus. We should find a way to mitigate. And in NPEs, asset quality has been drastically reduced. Now the banks are at, almost all the banks at single digit. That is a remarkable result, but we have to keep in mind that the bulk of the reduction came from the disposal to the private sector. This means that they are still in the system. We should try a way to work out and transform these NPEs in performing to make the economy stronger, because at the end, the only way to really shield the banks from future shocks is to have a stronger, more efficient, and more competitive economy. RRP has been launched also for this, but I think Giulia will expand on this. Well, thank you.
Thank you very much. Thank you very much indeed. That was very clear exposition of the situation as you see it. So yes, turning to you, Giulia. Let's hear the view from the Commission.
Yeah, thanks very much for organizing this event, for having me here. And of course, we have discussed the banking sector already last year. And I'm happy to say, as Paolo already pointed to, it has been an outstanding year for the banks in terms of non-performing loan reduction. So just thinking back, and 2019, non-performing loans stood at 40% and 2020 at 30%. And now the 4 systemic banks have reduced their NPLs to around 10%, which is a huge step forward. But of course, this has had its impact on banks' capital position and asset quality. But also we have seen that the core profitability is improving. So going forward, of course, the big challenges are, as Paolo has pointed out, to continue improving core profitability through governance improvements, through strong business plans, risk management, and so on. And of course, to improve asset quality, capital position. That's for the banks. And for the broader financial sector, the resolution of the still very high non-performing loan stock in the economy will be essential. And then also, of course, capital markets functioning, broader capital markets can be improved. It's not very actively functioning, so the market ratio is much smaller than in other member states, and alternative financing sources should also be improved. Now, of course, a strong economic performance would help addressing almost all these challenges, and that's where the reforms come in. So continued reform implementation will be key also to help the financial sector getting stronger, and the strong financial sector is of course core to a strong economic performance as well. But I would also like to point to a very Greek-specific aspect of this, which is the signaling effect of continued reforms to investors and to rating agencies, and achieving the investment grade would of course be essential for sovereign financing, but of course also for bank financing. So all this is interlinked and very important. Now, from this perspective of the reforms, let me commend the authorities again on putting together a really good recovery and resilience plan. The Commission has praised it already, analysts have praised it already. Sorry that Thanasis cannot be here. He is one of our counterparts, and thanks to all our counterparts in the authorities for the excellent cooperation over the past 1.5 years now on this. So it has been a very productive cooperation so far, and the implementation has started. So let me point out a few elements of this plan that are helpful also for the financial sector. Of course, there are some, though not too many, reforms that affect the financial sector, such as capital market supervision, debt monitoring. Several databases will be put together which will help transparency, help the creditworthiness scores, and also the aggregate debt monitoring, which are important to develop tools and policies. And then, of course, importantly, there is the loan facility, which channels 12.7 billion euros to the economy over the next 4 years. And a large part of this is channeled through syndicated loans through commercial banks. So, of course, commercial banks should also benefit from that. And I have just heard from Minister Skylakakis that the interest is enormous to these facilities, so which is very good news. Now, more broadly, of course, there are reforms to improve the business environment, and like simplification of processes, digitalization of administrative processes, continued simplification of licensing procedures. These are all very important. Digitalization also. And then some sectoral reforms, of which just let me point to some critical reforms for green transition, which of course now has become even more important in the current context, such as renewable energy investment licensing, and railways and electric vehicles, legal frameworks. So all these are very important. And finally, an important aspect is, of course, one of the notable features of the Greek economy is the very large share of SMEs. And a very large share of these SMEs are actually highly indebted and constitute this high stock of non-performing loans in the economy. So tackling this problem is again important from a financial sector point of view, but it's also important for the entire economic performance. And then, of course, so basically allowing the firms that are viable to restructure and move on, and more in general modernizing this sector and making these small firms more dynamic and extroverted is very important. And again, there are important reforms in the RRP which give tax incentives for scale up and extroversion of these companies. There are reforms that improve the regulatory environment, and there is funding also for digitalization. There is funding for skilling, upskilling, digital skills of these companies. So all this is there. Implementation has started. Actually, one of these tax incentives for extroversion, this is one of the milestones that we are currently discussing and very close to approving. And so basically, going forward, implementation will be key for now and more in general for the resilience of the Greek economy and the financial sector. Thanks.
Thank you very much, Julia. So moving on to our next institution, European Central Bank, Martin Bijsterbosch.
Thank you for inviting me. Yeah, let me share my personal views on where does Greece's financial future stand. It's a very ambitious, very big question, by the way, so I'll try to say, I can only scratch the surface of that question, but I give you my personal thoughts, not necessarily those of the ECB Council or Board. I will focus on the banking system and the role it plays in the macroeconomy. And I think that the key point I want to make can be captured by an old Byzantine proverb, and I'll try to say it in Greek. It says, that proverb says, "Dani se alefri se opion echi stari." So it says, lend flour to anyone who has wheat. So this is about lend to anyone who has the capacity to repay. I think that is the key point of that old proverb. And there have been more modern versions of that proverb that think of Mark Twain's point on, the only people that a bank will loan money to is the very people who do not need it. That's not exactly what I mean here. Has a different meaning. What I mean has to do with sound credit allocation, with being forward-looking and with sound and sustainable economic growth. So let me structure my thoughts around, say, achievements and challenges, and I'll have to be very selective there. On achievements, when we look back at the past few years, it's clear that important reforms have been implemented that strengthen the foundation for economic growth in Greece. So I think there's been a lot of achievement. The business environment has become more enterprise friendly. Public sector financial management has improved. The economy has become more digitalized. Just some examples of areas where clear progress has been made. Focusing on the financial sector, a key reform in my view has been the introduction of a single unified framework for insolvency. I think that's a key point because that should speed up private debt restructuring, and it should give over-indebted households and firms the chance to make a fresh start and to get rid of the burden of the past. Now, in addition to those, say, government-driven reforms, of course, and it has been mentioned by others as well, banks have made a lot of progress, and everyone knows this now. It took a while, but when you compare, say, the NPL reduction on bank balance sheets since the peak in early 2016, that has been a massive decline, right? We're talking about 91 billion of NPL reduction. And that's around half of Greece's GDP when you look at the nominal GDP of Greece last year. So we're at something like 18 billion NPLs now on bank balance sheets. So it's clear that these are real achievements, and I think that all stakeholders deserve praise for that, especially the Greek authorities and the Greek banks. Now, there are, of course, always challenges, and let me say a few words on those and where I think are the main challenges. Starting with, say, the more structural, say, the broader economic environment, I think that the Greek RRP addresses the key structural challenges in the right way. So I think that reforms need to continue to raise productivity growth, raise investment growth in a sustainable way, addressing also the demographic challenge. And one should do that by making the economy more open, more flexible, more competitive, very much in line with what, say, are the overarching objectives of the Greek RRP. Now, in addition to that, of course, there is the need to ensure public debt sustainability, as has been mentioned before as well, also given the government's aim to regain investment grade. Now, on the banking side, further progress in strengthening bank balance sheet remains the overarching priority, in my view. On NPLs, it's clear the finish line is in sight, but we're not yet fully there. We still have around, an NPL ratio of around 12% of the total loan portfolio. That is still the highest in Europe. And we need to continue working on that to address that further. Also with an eye on the risk of possibly new inflows of NPLs. those inflows could pick up once policy support is being withdrawn. And we all know that the economy is hit by important shocks and that the future is uncertain. Now, one point I want to emphasize is that the health of the banking system goes hand in hand with the economic environment in which the banks operate. So we still have, and Julia mentioned this as well, we have a lot of, vulnerable companies, especially in the SME segment, that are there and that imply that NPLs can quickly return after another downturn. So I think there that the commitment of the Greek authorities to continue with their ambitious growth and reform agenda to strengthen the business environment is really important here. It's a very good thing. A related issue, I think, is the large amount of private sector debt that remains in the economy. And it depends a little bit on what you count in, but we're talking about something like 220 billion of debt that is in there on the balance sheets of the non-financial private sector. Around 100 billion of that is non-performing debt. So it's around 55% of GDP. That's a big amount, and that's still on the books of private borrowers. Credit servicing firms manage that. It's not anymore in the banking system, but it continues to be there. And there are signs that the collection of those loans remains challenging. Now, why is that so important? It's important because that burden continues to be a drag on the real economy. Even if they're not anymore in the banking system, they need to be serviced. And they complicate the access to financing, to bank financing of those debtors. So and those debtors get risk of getting stuck in that situation. So I think that, in other words, that debt overhang undermines economic growth and exposes indebted households and firms to adverse shocks. So I think it's important to address that. And there are particular pockets of that debt that are difficult. I'm thinking there especially of the debt that has been outstanding, has been non-performing for a very long time. The longer the debt is outstanding, the more difficult it becomes to resolve it. I'm also thinking of debt that is outstanding to multiple banks, to multiple creditors. That entails a coordination problem. It's more difficult to resolve. And maybe a third example is the debt to small companies. Small companies that are vulnerable to rising input prices at the moment, and it's important to address that and to keep an eye on the economic situation in the smaller firms that are so important for the Greek economy and including their indebtedness. So let me conclude. And let me conclude by basically repeating the three main takeaways, the main points I want to make. First, in my view, Greece's financial future has clearly improved over the last few years. I think in challenging economic circumstances, the Greek authorities have pushed through with a reform agenda that has strengthened the Greek economy and its banking system. That's the first point. Second point, strengthening the banking system and strengthening the real economy go hand in hand. So to address the NPL challenge once and for all, it's important, and to avoid new waves of NPLs in the future after future downturns, it's crucial to further strengthen that business environment. And the Greek authorities, of course, are very well aware of that and are working on that, so that's very good. And then the third, final point, I think it's important to have a strategy of restructuring distressed debt for that non-financial private sector that I mentioned, something that complements the reduction of the NPL process in the banking system. One ingredient that is definitely there, that should be there, is the modernization and the strengthening of the capacity of the court system. Another element is the sales and leaseback, the so-called sales and leaseback organization, to protect the most vulnerable debtors. That should be part of that as well. All things that I think the authorities are very well aware of, but I think that those are the points I want to make. Thank you very much.
Thank you, Martin. That's very useful. Turning now to Ioannis. Always good to get the Cypriot perspective as well and hear about the situation there as well as in Greece.
Thank you so much, John, for having me here. I would say that today, yesterday, and a few years back, we are hearing a lot about NPEs and NPLs. For us, for the fintech sector, the future is different. The future for us is cashless. All financial transactions in the near future will be carried out purely through non-analog means, leading to a cashless society. The availability of digital payment systems gives a choice for businesses and customers not to use the traditional banking sector, but at the same time, they promise transparency, efficiency, and convenience. Cashless payment systems can stimulate economic growth by making payments easier and more convenient. They can provide time and cost savings opportunities for businesses and individuals. Anyone with a smartphone can make cross-border payments and purchases cheaply and efficiently. A problem that we see is that many of the traditional banks look at the fintechs as a threat and not as an opportunity to collaborate on different new verticals of business that can increase their profits. Fintechs, and especially electronic money institutions, are here to stay. They are regulated by the central banks, offering a modern product, efficient, and many times at better prices. Now, some of the key trends that are shaping the future of payments are, first, financial inclusion and trust. Some years back, according to the World Bank Group, only 69% of the global adult population had a bank account or a mobile wallet. Second, digital currencies. Central banks' digital currencies are digital tokens or electronic records that represent the virtual form of a nation's currency. These, along with private sector cryptocurrencies, are predicted to have the biggest disruptive impact over the next 20 years. Then we have digital wallets. Digital wallets enable consumers to load and store payment methods on their mobile phones. Retail payments. When it comes to retail payments, there needs to be flexibility. Today, innovative technologies in the retail payment landscape are helping keep up with the consumers' changing expectations. Last, and for sure not least, Internet of Things and the future of payments. The Internet of Things is also affecting the payments landscape. The number of connected devices like fridges, vehicles, and machinery is growing exponentially and presents significant sales opportunities for businesses that embrace IoT payments. We know that ECB is looking into fintech very seriously, and this is why you have introduced a fintech banking license that, again, it's a credit institution license with a more detailed focus on fintech. But I think that you have to help banks in Europe in order to accept the possibility that some of these fintechs will become or can become real modern banks. A problem here is the influence that big established local banks have into the local political and regulatory system that don't let fintechs grow. By doing this, they monopolize the markets and they keep the banking sector from moving forward for the benefit of the society. I will close my remarks by giving just some points about the company that I represent, ECOMBX, which is an electronic money institution licensed by the Central Bank of Cyprus. We are principal members of Visa and MasterCard. We employ around 150 people across Europe. We have grown organically, and the reason that we are here and we will invest in Greece is because of the excellent reputation in the technology sector that the current government has achieved. So we would like to be a part of the success story by bringing in the country our own expertise. And I want to say that I'm proud that last week we got awarded by Invest Cyprus as one of the leading fintech firms in Cyprus from the government organization. Thank you.
Thank you very much, Ioannis. And yeah, it's an important discussion, and I hope that some of the panelists can come back and say something about fintech and how you see this, the kind of interface between fintech and traditional banking, and how you see that developing. Last but not least, on the panel, Yorios Damatelu from KPMG. It's great to have you with us.
Thank you so much. It's great to be here and participate in this very interesting discussion. I'm going to make a shocking announcement. There is an economy outside banks, so thank you. Yeah. I know it is a critical thing, but I'm going to second what was heard earlier in the panel the way to a healthy banking system is through a growing and competitive economy. And to that end, I have to say that in the last 3 years, we have seen many changes, many reforms in the tax policies in Greece that we believe guide the Greek economy in the right path. In December 2019, it was a very big shock for us tax professionals because after 10 years, for the first time, we had a tax bill that didn't have to do with the increase of tax rates, but had structural reforms in there that took away competitive disadvantages of the Greek economy. I have to mention the introduction of the special regimes for individuals, attracting people to adopt Greece as their tax residency, and of course the introduction of the participation exemption, whereby a Greek holding can enjoy dividends and capital gains from EU subsidiaries without suffering Greek corporate tax. But that's not enough. We need more. And we need more to support a new relationship between the Greek society and the Greek tax administration and the Greek state, because this is what is going to make things move forward. So we need to support transparency, as you have mentioned. It's very critical to have the reforms, to support the digitalization. The Greek tax administration made the beginning in that journey with My Data, which is basically the electronic books that were introduced this year. Thankfully, there is a lot of support from the European Union. There's funding there, so we hope to see more in that journey. We need more technology, we need more digitalization, but above and beyond all, we need more reskilling of the people. The people within the Greek state need to understand that they have to do their job in a different manner. Transparency and the utilization of technology is going to allow a better relationship, a quicker relationship. We envision a future where people don't ever have to go to the tax office, but they can do everything from their phones on, from their computers. And they don't have interaction with the tax authorities, basically, because this would allow us to let go a lot of bad habits of the past, let me put it this way. There's another thing that we need to address, which is trust. I have the privilege of talking to many investors, and I'm really happy to hear that you're considering Greece for your new investment. And the question I always get, and the funny thing is that I get it from Greek investors more than foreign investors, is how do we know that the system will not change? How do we know that the incentives are going to be there when the government changes? So this is something we need to address. We need to introduce the notion where tax is politically agnostic, basically. So we have to have a policy, we have to have a strategy, and all the parties and the productive forces have to be committed to that strategy if we want to move forward, which I know is very difficult, but you know, people can dream. And last but not least, we need not to forget that tax is an instrument, not only to collect revenues, but also to shape behaviors. So we have seen the introduction of many green incentives in the latest tax laws. We're waiting much more. Please approve the new incentives to make sure that the economy is driven into the right direction, and we come back with a growing and competitive economy.
Thank you very much. So, well, thanks all of you, because you've kept to your brief, and that means we've got about 30 minutes, 28 minutes for discussion, which is, we haven't had that yet. So I'm going to break with custom, and instead of me asking with some questions, I'm going to go straight to the floor to see if anybody would like to respond to anything that they've heard, or to ask a question of any of the panelists. And it's quite difficult to see from here with the spotlight, but there's a gentleman here. So if you have a question, please keep your hand up and I'll keep looking. We've got mics roving around. So let's start here, and just to say who you are and who you're putting your question to.
Hi, Solon Malhoff from the Economist Intelligence Unit. To our last speaker primarily, I think, but anyone who would like to take it, we've had, after decades of discussions, recently some progress finally on cross-border tax harmonizations. How do you see that affecting Greece going forward?
Thank you.
Well, define progress, I have to say, but what we need to acknowledge is that the environment is changing and is changing globally. So this will affect all countries, especially within the European Union, but also Greece. I would say that Greece never had a very aggressive environment from a tax perspective. I would say we were more on the conservative side of the road. So I think overall this is in the right direction, and it would allow us to become even more competitive because it's going to weed out other issues we have in other countries. I'm trying to find a politically correct way to put it. So yes, I think overall it's going to be a positive development.
Thanks. Maybe we can stick for a moment with this question of taxation and the tax system, and some of the panelists might want to come and link it up with the issue of SMEs. We also had a question that was raised from the floor yesterday, a question that was put to the minister when we had our business environment panel. Somebody, a Greek-American investor who came here, set up a company, had to close it down in the end, just couldn't cope really with the tax environment. Obviously, that's clearly still quite challenging here in Greece, even though the government does have a program to reduce. Predictability, as some of you emphasized, is also important. Is there anybody else who has a question related to this, and obviously ties in with all the points that have been made about the NPLs as well?
If I may say, one of, if not our biggest concern coming to Greece from Cyprus was the tax environment. Actually, in Cyprus, we have a very stable tax environment and competitive, and our biggest concern is what is going to happen the next day. We have designed our business in a specific way, and maybe next year we will face something totally different. And I think that the stability is in the tax sector will play a key role in the next years in Greece in order to attract more investments.
That is true. Thanks. Anybody else on the panel? Yes, Julia.
Maybe let me come in that, of course, taxation has two sides. First of all, the revenue side of it for the budget. And of course, Greece being indebted as it is, it does put a lot of constraints on what can be done. But there again, reforms and growth can create fiscal space going forward, which should be used in a really good way. And also the tax structure could be looked at and reshuffled a bit to reduce tax wedges where it needs to be reduced, to also to incentivize investment. And as I said, the RRP foresees some of these reforms of the tax simplification and codification. There is also digitalization of the tax administration, still one of the projects, and further also reforms of the tax collection, where again there is a lot of scope to improve, to broaden the tax base and close the VAT gap, just to mention one of the big issues there. And actually also the country-specific recommendations are, some of the first one has some elements on taxation, and one of these is precisely what you were mentioning, advanced tax ruling, which would give some in advance guidance to investors how some items, how some issues will be tackled in the future, which is expected and hoped to address this issue of uncertainty.
Thanks. Paolo or Martin, no, nothing to add on this. Okay, if there's no more questions from the floor at the moment, I mean, keep raising your hands if you do have a question. Just wanted to come back to The question again that was raised by several, in particular Martin, about NPLs, and you know, this has been a success story in terms of the reduction, the extent of the reduction in NPLs in recent years, but as you emphasized, Martin, it's still relatively high, and the highest in the Eurozone at around 12%. Are you, any of you, worried that this obviously was a worry at the time of the pandemic, that we would see a rise in NPLs, and especially as support from the government was withdrawn, which it largely has been now here. Now we're facing some more trials and tribulations with the cost of living crisis, if we want to call it that. So, you know, how, and maybe especially not so much for this year, but into next year, is that a real concern? Is that something that you're, you know, discussing with the authorities here? Are there efforts being made already, preemptive efforts, to make sure that that doesn't happen, that we don't see a reversal of progress on that front? Would you like to start?
Me?
Yes.
Okay, I can start. Clearly, there is concern. For the moment, we have not seen a clear substantial deterioration, but I expect some deterioration sooner or later, probably next year, when the impact of the crisis will fully develop. It depends also on the type of scenarios we are going, because for the moment we are still on the baseline scenario, but we are getting closer to the risky scenario, where there is the cut of gas, and this can have a huge impact on European economies. And clearly, if we enter in recessions, the banks will be affected. When I said that are in a better position, they're stronger, even more efficient, I didn't mean that they are immune anymore from asset quality. What I'm in part reassured is that they improved the governance of the banks and the risk management. Now it's more professional, there is much more independence, and this is a clear shield and against the rise of new NPEs. But an increase, what I mean a shield against is against a rapid increase, because probably now they can be more cautious in embedding risk when they grant loans. That was probably not the case in the past.
Okay, thank you. Martin?
Yeah, maybe just to make one, say, forward-looking point there, and, you know, and also more generally, and link that also to, say, economic prospects more generally, and that is that what I sense also when I listen to the sessions here, when I talk to people, is that there's clearly a shift, a change in the mood in the past few years here, right? I mean, we're clearly much more positive and optimistic about the future, and that is justified. I mean, it's based on genuine improvements. My point is, you know, let's not repeat the mistakes of the past. And what I mean with that is that when you look at, you know, one recurring theme, I think, in Greece's economic history is that the growth process has been driven by external capital inflows. That's fine. That happens in many countries. But the challenge of that is that in the good times, it's too much, and in the bad times, it's too little. It's very challenging to manage that, but it's never exactly the extent to which you want to have them. So during the good times, it's challenging, especially to allocate those flows, those inflows. And that is challenging, especially if you know, as a bank, need to allocate that to borrowers, and you do not have the full transparency of the financial situation of those borrowers. So that's why I was saying, I was also referring to the old proverb about, it's very important to know what the repayment capacity is in the future of a debtor. And these issues become more pertinent in episodes where money flows in abundantly. And I've heard FDI, the FDI picture, inflow picture is much more positive than before. The RRP, of course, is in a way also a capital inflow. Of course, it's a different story because it is more managed. And in that sense, it may reduce that concern, but there is still the issue there of the money that needs to be allocated. The loan component of the RRF needs to be allocated by the banks, and they will be facing the same problem. So I think it's very important to avoid that mistake that was made in the past, and that's something I think is, want to add.
Okay, thanks. Just looking out to the floor. Yes, the lady here, please, have we got a mic?
Simela Tuchtidou from Euronews and New Money. A question for Mr. Fioretti and Mr. Ledvai. Should Greece be concerned, the Greek people and the Greek state should be concerned by the fact that the country has not managed to achieve the investment grade yet for its bonds, given the turmoil we see at the markets nowadays and the rising borrowing costs? Thank you.
Thank you very much for that. Who would like to take that, first of all?
Shall I start? Maybe I think we stand where we stand. I don't think that much could have been done more. I mean, especially with the pandemic in the past 2 years. I think in the past years, reform implementation has been strong, and the government was trying to also remain prudent with fiscal policies. So I wouldn't say you need to be worried, but of course rising interest rates are never very good news in a highly indebted country. But also from that perspective, what you see now in the debt sustainability analysis is that actually the inflation helps because this increases the denominator. And given the structure of the Greek public debt, the current hikes in interest rates do not have yet a very big impact because much of the interest rates has been given at concessional rates. But of course, going forward, if the situation remains unchanged and if the investment rate is not reached, that could become a problem. But from what I hear actually is that the prospects for reaching investment grade are relatively good for I hope next year, and we keep our fingers crossed. And as I said, reform implementation will be one of the key aspects for this.
Thanks.
Yeah, I cannot not to repeat what Julia said, that concerned probably not, but it's important that the government, the country, and the people remain cautious in managing the economy and the budget. I worked in the past in a rating agency, and it was time ago. And yes, I can confirm that it seems that the perspective to get back to investment grade are there. There are. It's not in a very short term. So probably we assume that Greece can reach investment grade probably in 23. Probably in the around mid-23, second half of 23, but it depends on the events, obviously. It's it's a constraint that the country has in managing the crisis, but can be also an incentive to manage better the situation.
Thank you. Looking to the floor again, any more questions from the floor? I would like to encourage you to ask questions. If not, maybe there is one? Okay, I can't even see.
It's impossible.
But hopefully, yes. Please introduce yourself.
Good afternoon. My name is Spiros Nikitas Samehas. I'm a legal consultant. I would like to ask you, where does Greece stand in regards to cryptocurrency transactions, taxation and money laundering provisions, since Greece taxes 15% on capital gains arising from such transactions, but no actual legal framework has been adopted yet? And if you see any future in that sector according to the latest negative developments. Thank you.
Thank you very much for that. Who would like to take this question?
Nobody. I can answer the tax aspect. I cannot answer the future
please
of the...
go ahead and answer that aspect.
Well, you are right. There are a lot of new instruments right now, and we're going to see a lot more in the future because we are moving into a situation where a lot of things are going to happen in a virtual world and not in the real economy, and capital gains are going to arise in the virtual world, and we will have to find a way to deal with that and somehow tax this. We do know for a fact that this is within the radar of the Greek tax administration and the Greek government, but it's not a Greek issue. I think it's an issue around the globe that there is no fixed framework right now to specifically address this type of transactions. We hope that it's something that's going to be resolved really soon.
Yeah, and I'm not sure if anybody else on the panel is really equipped to answer the other part of the question.
If I mentioned about money laundering, what I can say, I'm not an expert, and it's not really my field, but what I can mention is that what I've seen in European banks, there has been a problem, there was a problem, probably there is in part a problem, but Europe has created an agency to monitor the risk and to introduce new regulations, and this is an important step ahead. So the problem is known, and measures have been already implemented.
If I may add, there is a regulation coming up within the next couple of years, MiCA, which will help regulate the digital assets. So.
Yeah, maybe we can come back to this in some later sessions today as well, because it's really a question for the Greek authorities to answer as well. Maybe this is a good, if there's no more hands, a good segue to talk a little bit about fintech and how that might change the landscape, financial landscape in Greece. Do you see this taking off in a big way in Greece? I'm coming from a country where it's very significant, obviously, but how do we see the development of the fintech sector in Greece? Anybody like to talk about that?
Well, not that much to say on that, but in principle, of course, it's a welcome development. I mean, it's an additional, say, component of the financial system. It makes the financial system more complete to provide services that, services that others may not be providing. So I think that's it should be welcomed. Of course, it should happen in a way that does not entail risks to financial stability. Obviously, it should be regulated. My impression is that that the where we are, we're still in the initial phase there in Greece, but it's definitely a welcome development. I think a key question is there also is to what extent fintechs will step into, say, the lending market, and will provide, address the access to finance issues that are there, that especially SMEs are reporting, and we'll need to see how that will. It's certainly also challenges for regulators, of course, a challenge for regulators to manage that process in an orderly way.
Absolutely, Julia.
Well, I'm not a fintech expert. I'm a user a bit, but not more than that. But this brings me to stress again the digitalization of the financial sector in Greece and of transactions. This is, I think it's at a relatively early stage right now, and it will be very important going forward. And then also, as we discussed, I think already last year, for the banks, will need to somehow also step in and also be competitive in this area.
Thanks, Paolo.
If maybe I can add a bit the view from the banking sector. That at the beginning, it's true that, as Yannis said, that fintech companies were perceived as a threat and a competitor. Now probably less because the banks has understood that fintech is also an element of innovation, and they can, and the banks can integrate fintech in their activity and develop and learn from them. Probably the threat comes more from the big tech that are completely different companies in terms of size and potential competition for the banking sector. And they can invest, they have a huge amount of customers, big techs, I mean Facebook, Google, these guys. That they have a lot of information in terms of for customers, they have a lot of money to invest, they have a lot of knowledge in terms of IT, artificial intelligence. These can be the competitors that can be a threat to the business model of the banks. But fintech, I think, also the central bank, I think it's not see the companies anymore as a threat.
Yeah, I would like to say that as long as we have a good regulatory system and regulators that understand the scope of fintech, then I mean, we can aim the sky. I can say that we are very like in Cyprus. We have, after the new governor of the central bank was appointed, the fintech sector has grown a lot, and we managed to have an association. This is why we have an association in Cyprus. They are there, they listen to us, they understand. Of course, as long as we follow all the rules that are set in place. And I can say that a person can really make a difference in the country. As in Cyprus, here, one of the main reasons that we came here was the CEO of DIAS system, Mrs. Stavroula Kambouridou. She's not here, but I can say that she was very helpful to understand what is going in Greece in this sector. So we need the help of the regulators. We need the help of people as well in the government that can help us grow further.
Thanks. So just in the last couple of minutes that we have before we have to end the session, you've all emphasized in your different ways the importance, the intersection between the financial sector and the real economy and the wide financial sector, not just banking. So want to bring it back really at the end to the real economy, if you like, the business environment, the operating environment, to ask each of you, from your perspective, what would be now, the most significant, meaningful thing that the government could do in the final year of its mandate to improve things quickly in the business environment. And maybe to start with you, Yoria.
I think we need to follow being on the track we are right now. I think the government needs to focus on the real economy, on the evolution of the tax administration, because this creates a competitive environment for the good taxpayers and for the good companies to grow and to participate more. And I think it's also very critical to allow the banks to actually do their job, which is lending money and stop. I know NPLs have been a very big thing. It has been a very big thing for us consultants also in the previous year, so I have no right to complain. But at some point we need to put a stop there and try to get the banks into doing their actual job, which is, financing the economy. And hopefully you guys are going to be helping in this area also.
Thanks. Yeah, and if we can keep it all from each of you very short, because we've got 3 minutes left. So, Ioannis? Yes. Yeah.
What I can say is that we truly believe that digital transformation is the future. Going back to one of the previous questions, I can say that my only concern and my biggest fear is now that we're getting out of COVID, not to stop the digital transformation. and continue this for the benefit of the society and everyone. I think that, and I'm not talking about fintech, I'm talking about the digital transformation in general is here to stay. It will add in the economy, not only in Greece, but globally. So I think that we should give a biggest, let's say, we should give a better approach on welcoming new technologies and companies in our region that we live.
Thank you. Martin?
No, maybe just to take it away from the banking sector, but put it more generally, it's really, I think the key point is implement the RRP. Because the RRP is an excellent plan, and it contains really the things that need to be done, but it needs to be implemented. And it seems that that is on track, but it will be challenging, because there will be bottlenecks, there are obstacles, and it's important that, and it requires resolve, it requires perseverance, because it's a long, multi-year process, and that is the key for sustainable growth, and sustainable growth is crucial for everything.
Thanks. Julia.
Thanks, and I couldn't agree more. And one important sector of the RRP that I forgot to mention, and that is always coming up as the critical bottleneck for investment in Greece, is the judicial sector. And there has been a code for the organization of justice and judges that has been adopted recently, which has some very important elements for making the judicial sector more efficient, more effective, to deliver on time, to improve the performance of judges. So again, the implementation of this will be critical, and then the judicial map and the judicial police that are foreseen under the RRP will also be important going forward.
Thanks.
I will be very brief. Should remain focused on reforms, on maintaining fiscal prudence, and not to be distracted by electoral cycles.
Okay, I think we will be a little bit distracted by electoral cycles, inevitably. But actually, the message we've heard quite a lot today is implementation. Actually, that's the same message I've been hearing in Greece for a long time, but the context in which we're hearing that is very different, and the starting point from now is quite different at a much higher level than it was going back, 5 years ago. So it's a much more positive message maybe than it was then. So it's the same message, but rather different. So thank you very much, all of you. Thanks for the questions, and please join me in thanking all our panelists.
Thank you to everyone.
And I'm going to hand over to Thanks very much.
Let's move on as the previous panel leaves the stage. The panel after mine, the European financial landscape in times of turmoil, I suspect is going to take on something of a dark tone. So enjoy this period while you can, because we're going to be very upbeat, we're going to be very positive, we're going to be talking about generating value through innovation. We're talking obviously in the context of a diminishing pandemic, so I suspect an awful lot of what we talk about will center on the healthcare sector, but I hope that we're able to expand a little beyond there too. Unfortunately, Thanasis Kontogeorgis, who is the Secretary General for Coordination of the Government in Greece, is unable to join us. He's struggling with COVID, so he can't even participate remotely. So we wish him the very best. But in his absence, we do have a fabulous panel. Demosthenes Anagnostopoulos, who is the Secretary General for Information Systems of the Public Sector at the Ministry of Digital Governance in Greece, Ezat Azem, who is the General Manager at Roche Hellas, and Elias Mosialos, who is the Brian Abel Smith Professor of Health Policy at the London School of Economics and Political Science, and Professor of Health Policy and Management at Imperial College in London, and he will be joining us via a connection. So would you please come and join me on the stage? Thank you. Anywhere you want, probably here. Thanks very much. Pleasure to meet you. So we have quite a broad brief, a lot to talk about, and I promised upbeat, so we mustn't disappoint our audience. We'll leave that to the next session to bring everybody's mood down again. So let me start off with Mr. Anagnostopoulos. Give us an introduction to the theme and some of the key points that you'd like us to focus on in this session.
So thank you. First, I'm actually a professor, but not in the medical science. So I'd like to take the opportunity and say some words on the beyond part that you mentioned before. Now, as you may all know, the recent crisis has heralded huge disruptions to each and everybody's life, including citizens, businesses, and of course the government, which had to react in unprecedented ways, and the crisis also necessitated novel responses at a breakneck speed. This is something we had to do, and actually it re-emphasized our role as the Ministry of Digital Governance and, of course, the government as an enabler of economic and social stability, and highlighted the necessity for us of a government being able to respond quickly, in an agile way, transparently, and effectively. Also, we had to guarantee accountability and use new tools and technologies to do so. Last but not least, we had to work with both citizens and also our stakeholders, new stakeholders, in different ways. As a result, I think that our government and the Ministry of Digital Governance managed to deal with many problems and somehow come up with solutions which really proved to be innovative. And if you may recall, the European Digital Certificate of Vaccination was actually presented here by the Prime Minister and the Minister of Digital Governance with the presence or at the presence of the President of the European Council and also the Vice President of the European Commission. This was something that was actually proposed and established to a great extent by Greece, by this government. Also, the vaccination program was a complete success, I would say, because it was fully digital and used an omni-channel approach through the web, through mobile devices, also using citizen service centers, pharmacies, to offer citizens the capability to enroll and being vaccinated, also getting their certificate in a fully digital way. Now, concerning this approach, you know that in 2020, we launched the new GovGR as a single platform for offering 1,400 services to citizens at this time. We started from 500 different services. Now we're up to 1,400. And our, let's say, game changer was interoperability. Interoperability, which means that citizens and businesses won't have to go and fetch themselves any documents, certificates, or data in any different form to be served by a public authority, if this can be brought automatically through a single interoperability center. This is what we do. This is how we offer new services so that citizens won't have to produce and deliver this certificate themselves. Actually, this is a game changer because during the pandemic, citizens and businesses could not go to any public authority and get any certificate issued for them to bring it to another one. So at this time, most of our transactions are not transactions where people just log in to a new service. They are transactions performed by the government agencies automatically when they exchange data with the consent of citizens so that they can be served in a fully automated way. Last year, we had 565,000 interoperability transactions. We started from 8.8 thousand transactions in 2018. Last year, we had 565 million transactions, so it's times 30. I think that really the breakthroughs being discussed here following the pandemic are of extreme interest at the current time, and I will be more than happy to just state that, except from my personal opinion on these issues, as a professor, of course, and as a Secretary General, there are much to be told. Many initiatives and many thoughts can be discussed, and I'm very happy that these thoughts have already been discussed again and again in many essays, one of them being a book by Klaus Schwab, which is called The Great Reset, where these issues are somehow introduced and an approach is given. So in my next, in the following minutes, if I have the chance, I'll say a few words extra concerning these issues.
Excellent. Thank you. Thank you very much indeed. Let's move straight across to Mr. Masialos. To give us your perspective, please, Mr. Masialos. And I assume you're in London. I hope riots haven't broken out. There's no government, so according to ancient edicts in Britain, Britons can do whatever we like. So I hope you're safely locked away. Please give us your perspective.
Absolutely, yes. Greetings from England, the most politically exciting country in Europe these days. It used to be Greece, but we're no longer the odd one out. It is England these days. Let me start by sharing my screen and my slides. So what I'm going to do very briefly is to reflect on how we can generate value through innovation, taking a global and national perspective. So we'll focus on two major challenges. How can we improve global governance, and then how can we improve national responses to enhance health systems resilience and efficiency? Let me start with the global health governance perspectives, because there are lots of discussions now at an international level to reform global governance, starting with a proposed pandemic treaty. There is an intergovernmental body now established by the World Health Assembly of the World Health Organization to discuss the possibility of introducing a pandemic treaty to strengthen prevention, preparedness, and responses. I have many doubts as to whether WHO will manage to establish this treaty, because it might be perceived as very restrictive by a number of international global powers, such as the United States of America, China, and Russia, which may not want to have a standard treaty in place, and the possibility of intergovernmental organizations such as WHO to interfere with their responses in terms of tackling new pandemics. Then we have the responses of the G20 and the World Bank. The World Bank is establishing a pandemic preparedness response fund, a mega fund, which is not going to involve the World Health Organization and other intergovernmental and international bodies. Now, it remains to be seen how this is going to be managed by the World Bank without involving the key intergovernmental health organization, WHO. And then the G20 are also proposing the Finance and Health Board, and I think this is a reasonable proposal, to build on the G20 Joint Finance and Health Task Force. So we do desperately need to bring together the finance ministers and the health ministers to tackle global health policy issues together, including antimicrobial resistance and also climate change, and take a One Health approach, not only a health approach, but also focus on One Health involving climate change. And finally, the European Commission and the United States of America are proposing international health regulations reform to make them more relevant, move beyond the current name and saying. And again, it's not certain as to what extent most countries at the World Health Organization level will accept strengthening of the international health regulation. They may conceive this, they may consider this as interference with their national policies and their flexibility to act according to their national priorities. We also need to have a global pandemic vaccine policy. We don't have a global vaccine policy. We don't need to have a treaty here. Well, we do need to have an agreement to stimulate and enhance innovation in terms of producing new vaccines, not only for the current pandemic, but also for future pandemics, and also at the same time ensure the availability and the distribution, the equal distribution of vaccines. Because we know that there is significant inequality between the North and the South, but there are also significant inequalities within the North and within the South. Now, what about the European responses? The EU response to COVID was initially a series of knee-jerk reactions. But currently we can see a more strategic development of policies. And the most important innovative reform and policy within the European Union has been the development of HERA, the Health Emergency Preparedness and Response Authority. Now, HERA is going to be a program, not another agency within the European Union, accountable to the Directorate General of Health, not independent therefore, responsible for horizon scanning of future threats, responsible for financing the development of therapeutics and vaccines to address emerging and new threats, and also for enhancing production of vaccines and therapeutics within the European territory. However, it's going to be one of the agencies and programs within the European Union where there are a number of other initiatives. The European Centre for Disease Prevention and Control needs to be enhanced and become pan-European, not only a centre for the European Union, to involve Great Britain, for example, the countries of the European Economic Area, and many countries from Central and Eastern Europe which are not part of the European Union. Then the coordination with a civil protection mechanism and the European Medicines Agency needs to be clarified and enhanced. And also coordination with the Directorate General for Research and Innovation of the European Union, because they would also be funding research and development for new therapeutics and vaccines. So we can see here a positive development at the European level, a new program, but lack of coordination at European level in terms of getting their act together to bring the different bits and pieces in terms of policy development across all aspects of European health policy. But what about national responses to our challenges? So we know multi-mobilities are most common among older people. The number of mobilities and the proportion of people with multi-mobility increases substantially with age. By age 50 years, half of the population have at least one morbidity, and by age 65 years, most are multi-morbid. Fine, but that's not a good argument for the ministers of finance and the prime ministers. If we're going to invest more money in health, are we going to invest more money for the older people and then less money for the more productive people, the working people in our societies, less money for education, for example, or retraining of the working age population? But we also know that the prevalence of multi-mobility increases with age, but the actual number of people with multi-mobility is higher at younger ages. So you can see here data from Canada, and I'm presenting very old data, and I'm doing this on purpose because this data exists and politicians don't take notice. They think that multi-mobility is only a problem of the older people, but the prevalence of multi-mobility is in the working age population, those between 30 and 65-year-old. But what is the impact of multi-mobility? We can see it here, again, from Canadian data. I can present you data from Germany, Britain, and many other countries in the world. 1% of patients every year consume 33% of total health spending. 5% 65% of total health spending, and 10%, 70 to 75% of total health spending. It's 70% in Britain, 72% in the United States of America, and this particular province in Canada is 75%, 77%, probably because of epidemiological trends and demographics. But what is important is that these complex high-cost users receive treatments from multiple healthcare sectors and providers, have long lengths of stay in inpatient settings, very expensive settings, see 6 or more physicians a year, 75% of them, and 25% of them seeing more than 16 providers a year. And if we look at the wealthier healthcare system in the world, the United States of America, the US is spending 18% of their GDP on healthcare. You can see the results of this fragmentation in healthcare systems. We're talking about innovation, but we do need to address, as an innovative policy, the fragmentation in our healthcare systems. Less than 50% of elderly patients are up to date on clinical preventive services. Elderly patients with comorbidities, with at least 2 diseases, consume up to 19 medication doses daily. You can understand what happened here in terms of drug-to-drug interactions and unnecessary hospitalizations. Every year, the average elderly patient sees 7 doctors across practices. The average surgery patient is seen by 27 different healthcare providers. 1 out of 5 elderly patients are readmitted within 30 days, and less than half of non-surgical patients follow up with their primary care doctor or provider after discharge from hospital. So this is a catastrophic scenario. If it continues in the US, they will spend 25% of their GDP by 2030. They might be able to afford to do that. They're the wealthiest economy, still the wealthiest economy in the world. But countries such as Greece or Britain and many other countries in Europe, they won't be able to afford to spend 30% of their GDP on healthcare. So therefore, we do need to think out of the box and address the current inefficiencies in our healthcare systems. What are the current inefficiencies? We're treating people too late. Sometimes we don't know which interventions work, in which setting, and which don't work. We treat all patients in the same way. Errors, which are mostly system errors rather than medical errors caused by doctors or nurses, are often unnoticed. So it's the way the system operates and structured. There's huge variations in healthcare quality, not across countries, but also within the same country, within the same region, within the same hospital. If you compare cardiology clinics in the same hospital, you will see there are huge variations in healthcare quality. We have non-sensible workflows. We make our patients arrive at our silos, the cardiology silo, the respiratory medicine silo, the nephrology silo, the oncology silo. And finally, we're not engaging with our patients and they're ignoring our advice. 50% of asthmatic or diabetic patients are giving up medication 1 year after they have been diagnosed with asthma or diabetes. So we do need to be more proactive. We need to have a more proactive system in terms of diagnosis. Early diagnosis matters. It can be cost effective, but here we do need to go beyond primary prevention to have a better system of secondary prevention, which is clinical, and tertiary prevention in our healthcare systems. Need to make better use of real-world assessments and real-world evidence. Now, the European Common Data Space, enacted by DG Sanko and Commissioner Kyriakidis, has to be translated into the Greek environment in the form of a national strategy for digital policy and digital data, which is currently lacking in the healthcare sector, and it has to be developed over the next few years. I'm not in favor of revolutions in healthcare systems, but I'm in favor of a pragmatic, incremental change. But in order to have pragmatic incremental change, you must have a plan. Then we do need to move into personalized medicine, but I think we'll have the last intervention is going to be about that. I'm not going to spend time on this, and have a system that will be based on a safe and monitored environment. Improve quality of healthcare, but in order to do that, we may need to make better use of big data and better use of decision support systems for our doctors, nurses, and healthcare providers. Not to substitute clinical acumen. I don't believe that better informatics and better use of Big data will substitute for clinical acumen. We definitely need to have good doctors in place and well-trained doctors in place, but at the same time, we need to support their activities with big data and better guidelines based on the best clinical evidence. And finally, better integrated systems that will engage with our patients. So we need to break down all these silos and focus on these high-cost, vulnerable patients, integrate primary care with pharmacy care, with secondary care, tertiary care, and long-term care, particularly for these 10% of the high-cost, high-need patients. And finally, we need to blend the human and the technological capabilities in our healthcare systems. We're not doing that. The expected prevalence of virtual healthcare by 2026 is going to be significant. You will see, in particular, this will happen in dermatology or primary care for the first contact interaction visit, but not as much in oncology or gynecology, for example. It will be significant for long-term follow-up and continuing care. So we need to grasp all these emerging opportunities in terms of using digital health, integrate digital health providers, which are currently scattered. They're not integrated with the formal healthcare system, and there is a risk here. There is a risk of adverse selection. And what is the risk of adverse selection in healthcare systems? The younger people with very low needs to use virtual healthcare, and then the older people with the actual needs to use the traditional care. So therefore, we need to blend the two systems. And I'll finish with this observation. Thank you.
Okay, wonderful. You did really well because I was just about to cut you off. So you.
Okay, no problem.
Fabulous. I mean, there was just so much there. It was a really well-structured narrative, quite persuasive. So we've heard from the Greek government, the government's priorities. We've heard from the fabulous academic horizon with some quite sharp and specific directions. Mr. Azem, you come from one of the world's really big operators, pharmaceutical operators. You have probably as much expertise as anybody could have to answer this question. Where should we be focusing our resources to get the best value return from innovation in your sector?
Yeah, thank you for that. And I really liked both speeches. And you know, I must say that in the last 3 years that I'm in Greece, the level of endorsement and deployment of digital capabilities in this country is amazing. So really well done. I would love to see the same evolution also in the healthcare, trying to help, you know, all the system to be able to bring better solution, better treatment to everyone. I think you touched all the points that are really relevant and important, and I maybe can give a little bit different light on them, right? So it's not, I'm not going to add anything new to the equation, because I think all the important elements were already mentioned. But if we look a few years back, we were treating, like you said, we were treating all the patients in the same way, right? We were treating the disease, not the patient. And then slowly we started to use time diagnostic tools. And we started to use them in order to define if the treatment would work for this patient, would be beneficial or not. And now we want to be even more specialized. We want to be more personalized, to look at the patient as a whole. And many times we see the patient only from maybe the diagnostic piece or from the treatment piece, but personalized healthcare per se is integrating all these elements together, from the diagnosis, from understanding their needs, and having, you know, enough data in place to be able to analyze and to be able to help our physician not only to use their primary resource of data in order to treat, but also to refer maybe to secondary use of data, where you have a lot of aggregated databases that can help them, you know, and can also help for the industry to identify new treatments, new diagnostic tools, and new pathways in treating our patients. So I think when we speak about the personalized healthcare, we need to have in mind that it is not only about the diagnostic piece, it's not anymore about the treatment piece, it's about integrating all these elements to, first of all, to try and prevent, because as you see, prevention can make a huge difference. Once you get to this threshold of being in this group of patients, the expenses are going exponentially high, and it's really, you know, difficult to fix that. But I think currently we have technologies that are related to personalized healthcare, that are related to precision medicine, that can help us identify the genomic profiling of our patients. And it can help us to identify who are the patients that we need to treat and who are the patients that will not benefit anymore from this treatment. So the question is, how much resources are we able to put behind that in order to allow this to be affordable also for Greek patients? Because it might look like a big investment in the beginning, but the value of this and the ability of us to extract data, insights, and conclusion behind it would help all the system in the long run, not only by bringing the prevention and defining what is the right treatment for whom, but also by helping us having the right protocols in place, helping us having the right treatment algorithm in place, and making sure that patients are having the best possible experience in the way they are treated and they are diagnosed and they're having the best prognosis. So I think it's not only one element that can make the revolution. If we want to make evolution, we need to push some different elements together regarding data, the secondary use of data, the use of the different PHC diagnostics and tools, and the ability to bring the medicines to the patients. Currently, we are asking every patient to come to the hospital, right? When it comes to oncology, we want patients to come to the clinic. Why don't we bring the treatment to the patient, no matter where they are? In the island, in the rural area, at home. At COVID, we learned that access could be limited. Isn't that a good enough reason for us to develop new ways that we can treat our patients? And I think Roche currently is putting a lot of energy behind such projects of treating patients at home. And the good thing is, although we didn't progress till now so much, I see a lot of willingness, a lot of openness from the different ministries to really try and push that forward, and we need to acknowledge that. And we here at Roche are super happy to provide any kind of support that can progress these elements and help Greek patients to be able to achieve these elements.
Super, thank you. It's interesting, I mean, you set out a range of things there, but central to it all, it seems to me, is two concepts. One is personalization, understanding what a given patient needs rather than knowing they've got a certain illness and chucking whatever medicine you do for that illness. But of course, behind that is the knowledge of you need an awful lot of data to understand the situation to be able to offer that personalized level of service. So let's dig a little deeper into the data point. I mean, I'm interested. I don't have any great expertise on this, so I'm interested for you to lay out for us the centrality of data, what the challenges are in getting that data, and also perhaps something about the balance between the global availability of data and how important that is at a national level. And then I'll hand over to you, and you can explain.
On the same issue, yes, I'd like to.
Yeah, excellent, thank you.
So shall I start?
Please do.
Thank you. I think data, is not something, or the access to data or to the aggregative data, the secondary use of data is not a Greek issue, right? In the whole European space, this is something that was not advanced enough. And I think the decision that was taken in May in order to advance this European health data space will be a great opportunity also for Greece to take advantage and lead some of these elements going forward. So first of all, we need to resolve some issues and some sensitive elements regarding the collection of data from the patients, from the physicians. We need to have the infrastructure to be able to collect this data. And then we need to be able to share it, right? We need to have enough, let's say, artificial intelligence or ability behind with systems that can have insights based on this data. Because you know better than me, in systems, rubbish in, rubbish out, right? If we don't have high quality information entered to the systems, we will not be really able to extract anything that is meaningful. So the first question is how we make sure we have enough infrastructure to collect this data. We have enough infrastructure to share it among the public and the private sectors, and we are able to share it in a transparent way that it does not only allow us to have different protocols, but will allow us also to have very innovative schemes of reimbursement going forward, because this transparency will allow a lot of things that currently we cannot afford because we don't have access to this data. So I think we need some investment on the infrastructure, But we also need some investment in the mindset and on the ability of people to be ready to collect this data, share it, and not to feel like this is my own piece, I'm not going to do any sharing with it, and see the benefit behind it.
Okay, just briefly, where are the big barriers? What do you need to overcome in order to bring that about?
I think there is a lot of willingness. In many cases, these big things need also some push in the implementation. This is why I said I would really love to see the same energy behind the general digitalization also in the health space. And once we all understand that there is a commitment and we are all working together, patients, industry, and government, I think only this way, the three of us, the joint forces can really drive this forward. Because we need maybe some legislation change to allow this to happen. We need some infrastructure. We need some knowledge that each one of these elements, each one of these parties can bring, and no one alone can do it.
Right, okay, fabulous. Let me pass back to you. I mean, one of the reasons why this is so interesting is because clearly it's central to the healthcare question, but it's much broader than that, the availability and the sharing of data, public reticence about allowing that to happen.
I'd like to go back to the issue of interoperability, because as it is obvious, in order to have personalized medicine and complete gaining advantage of data, you need to have the capability to build a medical record which is concise. I mean, if you don't have data that comes from different systems, from different sources, that you can combine and say that, yes, these are the data of a single patient, then you lack considerable capabilities. So interoperability is of crucial importance to the health sector. Of course, there's another issue here which has to do with the protection of personal data. So yes, we have to be very cautious with that, and of course promote both interoperability at the national and cross-border level, because we have people that go abroad and may be sick. But on the other hand, you need to do so in the best possible way to achieve the best outcome of a patient's data, of processing patient's data. Now, I would like to go back to the issue which is the breakthrough following the pandemic. And actually, there are a couple of things I would like to say that have to do with the pandemic itself. I mean, the first is whether this pandemic was a black swan, actually, if it was a totally unexpected disaster or not. And the answer here is that it was not. Actually, both the World Health Organization and individuals had, amongst others, yes, had warned against the imminent danger for such a disaster. And of course, such a disaster, as in the past, may pose new questions, but also new capabilities for the society. It's not only a disaster. It has new capabilities, new developments that may be new breakthroughs that may come as a result of this pandemic. Is there still an uncertainty about the pandemic after 2 years? Yes, there is. And all these variants and the way it should be treated, yes. And still there is no other way to process data reliably other than analyzing in a scientific way. No, there is not. So yes, getting the best possible outcome from scientifically analyzing data is the only way to deal with the pandemic and other pandemics that may become in the future. Now, there is only one issue I would like to pose here, and this has to do with technology used to deal with the pandemic, and this is referring to tracing applications and biometrics. Of course, as in the past, referring to security issues, contact tracing applications seem to provide a very well-put solution to support the prevention of public health from spreading the disease, but at the expense of protecting personal data. This is something which is of much importance, especially in the European Union. So this pandemic will set a milestone in the history of monitoring the personal life, the personal data of each and every one of us. And if I may copy from the book that I previously referenced, the greatest danger may come from these biometrics, data that refer to our activities. You know that both emotions such anger or laugh may be somehow depicted, represented as other types in biometric data. And you can all imagine a case where such biometrics being produced by bracelet worn in our hands may be put at the disposal of a political leader or for anybody else who'd like to think what we feel. And this is something that can never happen.
Great, thank you. We have a little bit of time left. I've got questions, but I'm aware that you may have some too. If there's anybody who wants to put a question to anybody on our panel, please make yourself known. You'll have to be fairly enthusiastic in your waving because it's not easy to see. But if there is anybody out there, then please let me know, and we will get a mic to you. I don't see anyone at the moment. Is there someone? There is someone. Yeah, there's a hand up over there. So if we could get a mic, please tell us who you are and who your question's for.
Okay, my dearest chairman, I'm Brigadier General Kai Maxis from Hellenic Army General Staff. My question is for the valuable professor, Mr. Mosalos. In this amazing and innovating bionic healthcare, how can bioethic and technoethic can be secured?
Could you repeat that? I didn't catch all of it.
In this amazing and innovating healthcare era, as we told before, how can bioethic and technoethic can be secured?
Right, but how can bioethics, technoethics be kept secure?
Yes, exactly.
Yeah, I think this is a very important question, but I'm not a super expert on everything, and particularly in bioethics. I think one of your speakers, Professor Effie Barguena from Zurich, will be the most appropriate person to discuss the bioethical implications, which are important, and obviously it is right that you've raised them. But I will refrain from reflecting on this particular topic. I would like also to, however, to say that, respond to your last question to the panel, that without having a national data strategy, without setting the objectives for a national policy in the healthcare field, we can discuss for ages about the tools and the mechanisms. We first need to define our objectives. What do we need to achieve? What is the direction of travel? And then discuss the tools in order to meet these objectives. Now, in Greece, we have quite a number of valuable data in our system. So we have EDICA, a state-owned company which is collecting data from the insurance system. We have a single insurance fund in Greece, contrary to Israel, for example, as that, where you have 3 or 4 major players. But the difference between Greece and Israel is that in Maccabi and Clalit insurance funds, for example, they have 40 or 50 analysts analyzing the centrally collected data by these funds. And this is why your country of origin has been the most successful country in terms of publishing the most important studies in leading settings, the New England Journal of Medicine or the Lancet, related to the pandemic. Because you use the data from claims in a fragmented insurance system to have successful studies. Here in Greece, we have a single insurance system and we don't have the analytics. So the first step for the government, if they are to be more strategic, is to develop an analytics unit. And a visit to Israel, I would suggest the Secretary of the Ministry of Digital Development and the Minister and the Ministers of Health to pay a visit to Clalit and Maccabi funds to learn from what they have achieved, the tremendous achievements. We're not talking about an army of analysts here. We're talking about a few people who can make use of the data. And then there is another issue, data linkages. So how can we link the data from EDICA to the mortality statistics of the National Statistical Service? And then how can we link this data to the data from registries? So once we do that, and it won't take long if there is political will, Greece can be a pioneering country in terms of research and development to support developments in the pharmaceutical sector, in the bioengineering sector, and in the IT sector. So that's my recommendation to the government. Pay a visit to Israel and learn from them.
Not yet, though. We've not finished yet, so okay. Stay with us for the moment. Okay. Thank you very much, Elias. Let me come back to you for what may well be our final question. An awful lot of what, a lot of what Elias talked about, a lot of what you've talked about, what you've talked about, are kind of long-term developments that are fairly recent in their genesis, but not, decades ago. What I'm interested to know is how the experience of COVID so far has affected that. So how much of what you're looking at now is informed by what we've learned from going through COVID, and how much of it would have happened anyway?
Yeah. I think COVID, like we all know, showed us that many things that we believed impossible, actually they are possible. It's just that we have a lot of assumptions and that limited us from being able to achieve these things. I think one very important point related to what you have just said, that I think that was one of the clear cases where data showed to save lives, right? We always said that data is there to help us but it was super clear based on what happened during the COVID and the ability to have this data from Israel, for example, that it really saved lives of many population, and we could know how things are evolving and what kind of maybe next vaccination need to be developed. What we know now is that, first of all, this is possible, right? So it's not anymore about the question if this is possible or not possible. It is possible. And we know that the capabilities exist almost in every country, right? As I said, the progress that Greece has done from the digital deployment is amazing. So the willingness, the capability, and the skills exist. The question is, are we able, like you just say, to have a clear plan, clear strategy on what are our next steps and how we can get them together in order to be there. So last year, I was sitting, I think, in the same chair, or maybe in this one. I think we discussed the same exact elements, but I must be honest, I am not sure we progressed so much since then, right? I am afraid that next year we'll be sitting in the same chair, or maybe this one, we'll be discussing the same elements, and we will still not be progressed enough because we don't have this very clear strategy and alliances in place, all of us together in order to take this further. So I think what we have learned, that in order to really progress, we need this synergy between the industry, the government, and the other forces within the patient organization in order to be able to progress that. And I'm inviting everyone who's involved in this, let's collaborate, let's work together, and let's make this happen. Let's, like we always say, let's dream big and let's dream together, and let's make it happen.
Excellent. Okay, well, thank you very much indeed. We will certainly be here next year, and we will measure progress at that point in your company, I hope. In the meantime, we can just dream together.
Yeah.
Thank you, everybody. I'm going to hand over to Daniel now for the next session, but before we step down, please join me in thanking our excellent panel and Elias in the Anarchy of London. Thank you very much.
We come up? Where are you staying?
Let's go in the middle here.
Should I sit there?
Yes.
Let's be close.
You want to be there?
Oh, whatever you want.
Up to you. Go 2 away then.
Okay, whatever. It makes it easier for...
So, ladies and gentlemen, thank you, Alistair, and we move on to our conversation with Gikas Ardouvelis, who's familiar to you in this conference, but also brings multiple distinguished perspectives to this to this topic as a distinguished economist, author of many econometric papers, as a former finance minister, and of course now as a banker chairman of the board of National Bank of Greece. We're going to look at the macro picture above all, let's start with the first bullet point actually of the session, thinking about the European financial landscape in times of turmoil. Certainly turmoil is what it is. Do you think a recession is now almost inevitable? Is it baked in? Are your models blinking red to you, or what?
Well, Dan, thank you. I mean, one does not have a crystal ball when it comes to forecasting. However, what we do see is a substantial deceleration of economic activity. Everybody knows this. Global GDP in 2021 was like 5.8%. It's going to go down to 3%, and about half of it is due to the war. It was already there before the war started. And I guess the question about a recession is a question for year 2023, the last quarter of 2022 and later. And it will be a function of the developments of the war, I think. Since you mentioned econometrics, my favorite guide is the yield curve. This is research I've done 30 years ago, and it has never failed in the predictions of recession, which is the difference between the 10-year yield and the 3-month rate. If in 2 quarters in a row it's negative, then the recession is coming. Now it's not showing recession, this particular number. Of course.
I just want to be clear on that, since it's an important.
Yeah.
So you say it's never failed. Does that mean that when it's 2 quarters negative, there's always been a recession? But does it also mean that if it doesn't show that, there isn't a recession?
Yeah. Well, yeah.
This is an important difference.
Yes, because it's very rare that the yield curve does turn negative, and the times when it was negative and it was not a recession, it was close to a recession anyway.
Okay.
So since that particular number is not negative, I'm less worried. Of course, there's always a probability of recession. I mean, professional forecasters think there is 35% probability in the US that we will have a recession. In Europe, they say about the same, 33% probability. And nobody can tell, because we don't know how drastic the reaction of the central banks will be. And everybody's nervous about this. We heard this morning that they may overreact because they were too late in their response. They were too comfortable. They thought they were very credible, and they had established that the market believed them and they will stick around the 2% target, et cetera, and it seems like they ran behind the curve. They were behind the curve, so we need to follow them and see how they respond. And also, the attitude they have. Are they willing to sacrifice growth in order to fight inflation or not? And I'd say, because I also lived the 1970s, I still remember Jimmy Carter, for example, in the late 70s, proclaiming, addressing the nation and saying, inflation is the moral equivalent of war. And lo and behold, Paul Volcker actually did it for him, but at the cost of a recession, the cost of a big...
Very painful.
Yeah, it was very painful. Now, this time around, I think we're a little bit better off relative to the 1970s. And that's because advanced economies are not as sensitive to petroleum and to energy. They're not, the GDP is not so energy intensive as it was 40 years ago. Central banks, we may accuse them, we may nag about them, but I think they are in a lot better shape than they were 40 years ago. They are more independent than they were 40 years ago. They have their act together, I believe. I mean, we can always nitpick on them, but I think they're doing a good job. And finally, we're still at a very early stage. Now we're at the unanticipated inflation, where all of a sudden we're finding out. The question is, will it enter into our expectations about the future, and will this affect wages? Will it enter the wage, will it become a wage price spiral, as it had happened 50 years ago, and it took a big effort to fight it? I think there is another element that makes it unlikely, which is workers are not as united anymore as they used to be. I mean,
not unionized.
Not only in the U.S. The U.S. there were 20% of them were unionized. Now it's only 10%. In Italy, 50% of them were unionized. Now it's like 1/3. Everywhere, somehow, everybody became too comfortable with the low inflation level, even at the level of wage negotiations. Everybody believed there's not going to be inflation. Remember about this affected interest rates, and everybody said, my God, we're having low interest rates, low for longer. This was the buzzword a year ago or 2 years ago. So we just entered this big new phase. The people and the households are a little bit more worried than professional forecasters or the central bankers about inflation, because they feel it. I mean, if you look at surveys that the ECB is doing, you will realize that, and they ask them, what's the rate of inflation in the last 12 months? And we know what the rate of inflation was, for example, 2 months ago. It was like 6% the last 2 months. Well, they say, the most rich, they say 8%. The more poor, whose pocket is affected more, they say 12%. So everybody perceives inflation based on their experience, and households do perceive it. Unanticipated inflation helps debtors and hurts households and people on fixed income.
So just to play devil's advocate a little bit for you, I mean, I won't go on to the central banks because we had that discussion this morning. I think Mohamed Arian was less confident than you in the central bankers, but we'll leave that aside.
Yeah, I'll say he's watching the stock market and he doesn't like it. I mean, he wants the stock market to be, but anyway, let's leave it.
Okay, let's move on from that. Just on the question of the response in wage negotiations, it's of course true that unionization is much lower, organized labor is less powerful than it used to be, but isn't it possible that you get a sort of dynamic emerging for precisely the reasons that you say, that people, ordinary households are feeling this, they sense it, and therefore the pressure for wage negotiations could become much stronger than people have experienced really for many years, and you start to get, if you're a union and you see all the other unions striking, you perhaps become more militant as well.
Of course, no, it can easily happen. That's why it's critical that inflation is prevented in its beginning. Remember, it could be a supply-driven inflation, but it could become expectations-driven inflation if it's allowed to stay for a while. And I think, although central bankers are not old enough to remember the 1970s, some of them, realize it and they'll fight it off.
So it leads, I think, and this is not just for central bankers, this is for economic policymakers more broadly. What is the art of the possible to address the very real concerns of households in this difficult situation, to try to support, particularly in the energy area, but more broadly as well? What can you do that both alleviates concerns but does not set off an inflationary spiral?
I think it's targeted measures. At least the Greek government is doing that. It's trying to alleviate the burden, especially on the poor households. So, I mean, I think governments are quite sophisticated even today. Even the Greek government is quite sophisticated. They have learned their lessons from the previous crisis, and they're following a correct path.
So what would you be targeting? You would target about those vulnerable households, particularly.
Vulnerable households.
Pensioners in particular, those on the lowest income.
And perhaps small companies that in Greece the energy cost is way too high.
Yeah.
Higher than in Europe. But I guess we shouldn't talk only about Greece. This is an international phenomenon.
Well, I wanted to separate things actually between the global, the European, and the Greek, because the outlook, usually in this conference we're talking about a situation or an outlook in Greece which has been particularly problematic compared with the rest of Europe. This year we're looking at the opposite. The Greek situation seems to be better than for many countries, which is a pleasant situation to be in.
The Greek situation, I mean, for the government, inflation is great because inflation, the debt to GDP is going to be reduced. I expect at the end of 2022 the debt to GDP to go down from 193% to lower 170s.
Yeah, a little bit of inflation is a good thing.
A little bit of inflation is a good thing. You don't want the unanticipated inflation to become anticipated.
Right.
So that's the trick. You don't want it for too long because then it's going to really affect the population, it's going to affect everybody, and it's not good.
So I wanted to ask you about the dependencies between the US, policy in the US, and Europe, and then Europe and Greece. So if we, if the Fed gets it wrong, how possible is it for Europe to avoid catching this cold that would be started in America?
Yeah, the Fed got it wrong. I was surprised that President Biden had an expansionary fiscal policy right in the beginning, after Trump already had an expansionary fiscal policy. And a lot of people in the Democratic Party, including Larry Summers, I remember, complained about it. The Fed got it wrong. Even the hawks at the Fed, I heard them, they tried to justify the Fed being behind the curve. They said, but we have forward guidance. Yes, we know we're behind, but we have told the market what we do. And so far, they're okay when it comes to 5 years ahead. I mean, that inflation is more or less anchored. It only, the target is 2%. It has only gone up to like 2.4%. So the problem is the next 12 months. And the fear is that we underestimate that if we don't catch that 12-month inflation early on, it may enter into the wage price spiral we were discussing.
Yeah.
So the Fed, now the fear is it may be too aggressive. It would have to be aggressive. Usually the Fed is a lot more aggressive than the ECB. The ECB turned out to be more prudent. It's kind of being composed of 19 countries. I guess you get different points of view. You end up following the right path, I think. They have struggled with these questions. We had the Eurozone crisis, so they're more ready, I guess.
So within that, what's the margin for maneuver for Greece? I mean, obviously, buffeted by the power of the US economy, and then within the Eurozone, much less maneuver than there would have been in times past. But what can Greece do to gird itself against this?
Greece should follow a credible policy. That's very important. We learned this lesson from the crisis, and I think policy is credible. Greece now is composed of households who understand the problem of the state sector, that the state cannot simply give out goodies if they want. They have companies that have survived the deep recession. We as bankers have noticed that, for example, in the beginning of COVID, when the government was giving out a lot of support and a lot of privileges, like Gefira 1, Gefira 2, bridge, whatever, a lot of our customers who had borrowed money from us, although they could have gotten the extra money from the state sector, they didn't bother. And we didn't see NPEs going up. We're following NPEs now, we're following them every day. We have the number, the weekly number, and they haven't gone up. So, in fact, we're going through the summer now. Tourism is doing great. So I don't expect any problems. If anything, we will really see, if things turn sour, we're going to start feeling it only in the fourth quarter and afterwards.
Okay, well,
and hopefully by then, the politics with Ukraine may have solved themselves, and
Well, let's
And
hope
we're
for
not
that.
gonna see it.
But I'm pleased to hear your optimism on the Greek economy and the management of the Greek economy. Our time is now virtually up, so I just want to return to put your economist hat on. I want to ask you, what do you follow particularly closely now? Which maybe 2 or 3 indicators do you look at most avidly? You mentioned the yield curve. I'm sure you still look at that.
Sure.
But what just as a hint for the rest of us in this room, what should we be looking at?
I do follow economic sentiment. It's still positive. The PMI is above 50. It's declining, but it's still above 50, which means there is optimism among companies. I follow everything. I mean,
it's difficult to follow everything.
Yeah.
But
well, you know, what I do is I follow what the different chief economists of the various banks say. They tend to be, to tell you the truth, a lot more optimistic than our central bank is. For some reason, our central bank is more optimistic about 2023 than 2022. And the private economists are worried about 2023, and not so, they think the inertia will bring a lot of growth in 2022.
And you heard the finance minister being sort of deliberately cautious in his forecast.
It's amazing. We were talking about credibility, a sign of how credible now the government has become. The finance minister is one of the most pessimistic forecasters. It's unbelievable, which is okay for him because he has to make sure the rest of the ministries are not overspending. So he's the policeman of the government. So that's his role. So he has to keep expectations low. So that's how he will be successful.
Well, I'm going to let you into a little secret here of who I follow religiously. And that is my colleagues at the Economist Intelligence Unit, who, of course, are not professionally optimistic or pessimistic. They're professionally realistic. So that's why I'm going to hand over now to Joan to take us through into the last session. But thank you very much. I've enjoyed that conversation, as I'm sure everybody else has. Thank you. Thank you. That's great.
Let's take this picture.
Okay, ladies and gentlemen, we've actually come to the final session of the event, we've got in the hot seat, we've got the central bankers, so 2 of whom are with us. So the governor of the Bank of Greece, delighted to have you here at this Economist event, Yannis Danaras, online via a connection. And he's with us already, the governor of the Bank of Portugal, Mario Centeno. Welcome. Thank you very much for joining us this afternoon. And we also have with us here in person, of course, the governor of the Central Bank of Cyprus, Konstantinos Iridotou. Very much welcome as well. So I think we've got about 40 minutes, something like that, 35, 40 minutes. So I imagine that you might want to have some opening remarks, but I'm also very happy just to ask you questions. So, Governor, would you like to start with a few remarks?
Yes. How long should be the opening remarks?
I think they
what
should
time
be.
do I have?
I think they should. I never want to tell a central banker not to speak for too long, but maximum 5.
5.
So
okay.
I'm laying down the law on that. 5 minutes for everyone.
Thank you very much. I'm pleased to be with you today with colleagues, Mario, Konstantinos. So this conference is taking place amid a very challenging international environment for policymakers. In the euro area, we had barely been able to catch a breath from the global financial crisis, and the sovereign debt crisis when our economy was hit by a series of negative supply shocks. This took the form of 4 consecutive waves of COVID-19, the resulting supply bottlenecks and rises in energy prices, and most recently, the economic effects of the Russian invasion of Ukraine. If these shocks were not enough, they were exacerbated by the economic slowdown in China. The Ukraine war has hit Europe especially hard. Russia is an important player in the global energy market, accounting for 14% of the world's energy supply. Europe's dependency on Russian energy is much higher than that of the rest of the world. For example, Europe's reliance on Russian natural gas is of the order of 40%. In response to the pandemic, Euro area policymakers provided unprecedented fiscal and monetary support, limiting output losses and safeguarding jobs. However, with the reopening of the economy, the demand for goods and services increased on the back of the large supply bottlenecks. As a result, inflation began to move well above our 2% objective in the second half of last year. The Ukraine war exacerbated these effects while at the same time creating a great deal of uncertainty. Headline inflation in the euro area is now running at 8.6%, an all-time high since the creation of the euro. This development has necessitated a normalization of our monetary policy stance. However, let me point out that the situation here is very different from that in the United States. In the last few years, the US has had an enormous fiscal expansion. According to the IMF Fiscal Monitor, the US fiscal deficit in 2021 was around 12% of GDP, compared to almost 5% for the euro area. Moreover, the US had a positive output gap of 1.1%, where the euro area had a negative output gap equivalent to 2.7%. In the US, the unemployment rate has fallen to 3.6%, perhaps below the NAIRU, the non-accelerated inflation rate of unemployment. In the euro area, it is 6.8%. As is evident, the circumstances are very different. The rise in US inflation is to a significant extent being driven by demand pressures. In the euro area, inflation mainly reflects supply-side factors, especially energy shocks and supply-side bottlenecks. As you know, monetary policy is not very efficient in the face of supply-side shocks. Inflation is also projected to return to significantly lower levels in the medium term. Accordingly, the ECB Governing Council has decided to normalize monetary policy at a gradual and flexible pace. The critical question is, can monetary policy normalization afford to be gradual? The answer, in my view, is positive. During the past 20 years, the ECB, like the Federal Reserve, has built up credibility. This credibility helps explain why long-term interest rates remain far below those of the late 70s and early 80s, when central banks had not yet earned credibility. The credibility also explains why all measures of inflation expectations remain firmly anchored near our 2% objective, while there is no evidence of significant second-round wage effects. What this means, however, is that policymakers must keep their focus on their medium-term inflation objective. As long as inflation expectations are in line with that objective, that is 2%, we are able to normalize our policy stance in a gradual way. At the same time, in a recent Governing Council statement, we expressed our resolve to address tightening financing conditions and fragmentation risks. We will apply flexibility in reinvesting redemptions under the Pandemic Emergency Purchase Program, or PEPP, in order to preserve the smooth transmission of monetary policy impulses across the entire euro area, which is important for delivering on our price stability mandate. In addition, a new instrument, the Transmission Protection Mechanism, or TPM, is also under consideration to temper fragmentation episodes. High uncertainty due to the economic and financial consequences of the war in Ukraine combined with the fact that the euro area is a complete monetary union, but an incomplete fiscal, banking, and capital markets union, that is, an incomplete economic union, is very likely to cause fragmentation. The improvement in the architecture of the euro area along the above lines will minimize fragmentation episodes. But until that moment comes, monetary policy should be vigilant regarding the transmission of its impulses in all euro area jurisdictions. In concluding, the pandemic and the war in Ukraine pose large challenges to policymakers. Even in these extraordinary times, the needle of our compass is, as always, medium-term inflation. Presently, our compass tells us that a gradual normalization is guaranteed in order to deliver on our price stability mandate amid high uncertainty. Our focus on optionality, flexibility, and gradualism will help ensure that convergence of inflation to levels consistent with price stability will be durable over the medium term. At the same time, our credibility provides some room for monetary policy to lessen the unemployment cost of the twin shocks. For now, our thoughts are mainly on the loss of life in the Ukraine and the enormous suffering of the millions of people who have been forced to leave their homes. Let us hope that the war ends very soon and that the human suffering comes to an end. Thank you.
Hear, hear. Thank you very much. Over to Governor Centino.
Good afternoon and thank you, Joan. Unfortunately, for reasons outside my control, I cannot be in Athens today. Still, I'm sure that we will promote a lively discussion with my colleagues and friends, Yanis and Konstantinos. With the advantage of insight, it's now easy to see that the work of central banks to boost growth and resilience, the topic of our session, after COVID, was straightforward. Backed by coordinated monetary and fiscal policies, unprecedented support measures, loan moratoria, state guarantees, the purchase emergency program of the ECB, and also supervision and regulatory adjustments during COVID, banks remain well capitalized, held ample liquidity, and were able to play their key role as lenders. The European banking sector proved in this way its resilience during the pandemic, and as such, financial stability was preserved. Unfortunately, we were not yet out of the pandemic, facing challenges to level out supply and demand across sectors and regions, and a second exogenous shock hit the economy, the cruel and unjustified invasion of Ukraine by Russia. It is difficult to disentangle the impact of these various shocks. So, in my opinion, we should remain humble at the moment of taking conclusions on what went wrong, if anything at all went wrong. But the fact is that in an environment of high demand and short supply because of extended COVID lockdowns, particularly in China, global supply chain disruptions exacerbated. As a result, energy, industrial, and food prices increased, steering inflation up. It is a fact that monetary policy, as Yanis already mentioned, has a limited effect in counteracting increases in prices driven by supply shocks. Going after supply-driven inflation is eventually even detrimental to growth, with the potential to destabilize inflation expectations. However, inflation pressures broaden, spread across sectors, recommending policy action. And so monetary policy has to act. And we will act, again, as Yanis already mentioned, gradually and flexibly. We will use all instruments in our toolkit, and we are actually expanding our toolkit to guarantee price stability in a context of financial stability and this is very important, a proper functioning of the transmission mechanisms across the euro area. This approach to normalization of our monetary stance is ideal also to promote a successful return to what I call the Spring 2020 spirit. What is the Spring 2020 spirit? Is one of coordination and exploring of positive synergies between different economic policies in Europe. Because not only the role of fiscal policy is fundamental, but also because fighting a crisis of confidence and geopolitical tensions requires governments, firms, and households to be aligned as how to spread the costs of the crisis over time. Monetary policy cannot do it alone, and concerns of fiscal or financial dominance should not resurface again in Europe. A cycle of interest rates increases is desirable, but brings about risks that should be mitigated. Let me mention some of them. The higher burden for borrowers leads to an increase of the credit risk, especially for more vulnerable corporates. The banking sector should have these incorporated in their business models and margins for default. The lessons of the past are well learned by all, and we are seeing a desirable degree of caution in the banking sector. Furthermore, in the short run, the increase in interest rates will improve banks' net interest income. In the medium term, a greater accumulation of operational net interest income can more than offset the negative impacts of market risk and of impairments for credit risk. Overall, I believe that better prospects for the banking sector can be the result of this. However, the medium term brings other challenges to the banking sector. I'm not going to be very detailed on them, but let me mention two of them: cybersecurity and climate transition. Cyber risks are very well known, so let me spend a few seconds on the climate transition. This is a structural break, and this is not related with COVID, with the war. This was something that we were facing already for quite some time. We have indeed been adjusting to it, and we need to continue this effort. From the banking sector perspective, it requires a proper incorporation of the legacy exposures to climate risk in banks' balance sheets, as well as an accurate assessment of the new exposures. On the social dimension, the green transition is an excellent opportunity for the banking sector, supported during the financial crisis by public funds, to give back to the community. Indeed, as there are no pure market-based solutions on this matter, the climate transition is a social responsibility issue that needs to be integrated in the traditional resource allocation functions of banks. Again, coordination is of the essence. Signals from all dimensions of economic policy should be clear and predictable so that economic agents can adjust. Well, this is probably the message that I would like to start with today. We need really to get into the spirit of coordination. Thank you, Joanne, and happy to debate further.
Absolutely, thank you. Thank you very much. Yeah, quite an agenda there for central banks. So let me turn now to Governor Iridotu.
Thank you. Thank you for the opportunity, which makes me even happier to be here with two colleagues and friends from the Governing Council, Mario and Yannis, with whom we have very close cooperation. Let me start where Mario left things off in terms of the banking sector and recent lessons learned from it. Ensuring a robust and resilient banking system is pivotal to address the effects of crisis and for banks to provide financing to SMEs, which is essential for economic growth, especially in Europe. And secondly, policymakers and supervisor actions help mitigate negative effects and support growth. And this is why the banking sector entered both the COVID crisis and the effects of the war in a much better position and in a much healthier position than previous crises. Mario touched upon challenges of banks. Let me try and name three of these. Firstly, it's urgent and critical for the banks to emerge from the pandemic as well as the war effects in a healthy state in order to provide financing that is the fuel for economic growth in Europe. COVID is not over. Nobody knows what the future variants may be and what the impact of that would be on clients of banks and hence the balance sheets of banks and their ability to finance the European economy. A second challenge is to address structural weakness through digitization and enhancing governance. It was talked in previous panels, fintech and big tech are already here. And banks need to address their comparative cost inefficiencies through digital transformation. Such fundamental transformation requires appropriate, adequate governance arrangements as well. The third one, Mario talked about it, is climate risks that need to be fully incorporated in banks' risk assessment frameworks and procedures. The impact of the invasion in Ukraine on commodity prices is felt by all of us, and this is becoming a catalyst for green policies, and this creates channels of risks for the banks through their exposures to sectors with heavy environmental footprints and in parallel to sectors that are susceptible to physical hazards. Let me zoom out now and go back to the macro level. Both Yannis and Mario already talked about it, which is the need for low and stable inflation rate, because that's needed for good investment decisions and planning from corporates, which is the engine for economic growth. So we had the COVID impact through the supply chains on inflation, and that has been exacerbated immensely through the impact on commodity and energy prices from the war. Hence, at the ECB Governing Council, we have been normalizing our monetary policy since December. We stopped all unconventional measures. APP bond purchases ended on the 1st of July. And we have already given forward guidance in terms of our intention for a rate increase in July and also in September. As has been mentioned, we are also working and we have been discussing extensively the formation of an anti-fragmentation tool, which is essential for the smooth transition of monetary policy throughout Europe. Let me conclude. We are living in times of uncertainty and a changing global terrain, and these changes that we are witnessing will be lasting. They are not transitional changes. We need to be proactive, we need to be coordinated, and we need to be united. And I'll finish with a quote from the Ionian philosopher Heraclitus. I'll try the ancient Greek version first. Ta πάντα ρει μηδέποτε κατά ταυτόν μένειν. Nothing is constant except change itself. Thank you.
Thank you. Thank you very much, all three speakers. So the first thing that I've picked up from what you've said already, and indeed from some of our earlier discussions today, is a difference in, at least in the conversation that is being had in the US and in the ECB. So you all have emphasized the need to proceed gradually and flexibly. From the Fed, we're hearing actually something quite different, including from the minutes of the meeting that were released yesterday, about the need perhaps to act even more aggressively in front-loading interest rate increases. So is there a problem there in this possibly divergent approach that we may now see between what the Fed is planning to do and what the ECB is planning to do? And I know it's probably not within your remit to say this, but if you could give us some indication of what you're expecting in terms of the trajectory of rate increases from the ECB, that would be very helpful. So yeah, do you see a problem there that the Fed is, and this was a point that was made this morning by Mr. El Arian, that in a way the Fed is kind of setting the pace and putting pressure on other central banks to act perhaps more decisively than they would like. So maybe I'll ask you first, Governor.
As I said in my introductory statements, the situation is rather different. First of all, the output gap is negative in Europe, is positive in the United States. Europe is a large net energy importer, so it's been hit hard by the rising energy prices. The US is a large net energy exporter, so Europe has suffered from losses in negative terms of trade effects. So that is the two main reasons why we can afford to be more, or we should be more gradual compared to the United States, to the US Fed in raising interest rates. After all, the euro versus the dollar, they are connected through a floating exchange rate regime, so there is no obligation to be fully aligned. It would be a mistake. It's because the situation, the macro situation is different in the United States than it is in Europe.
Thank you. Governor Centino?
Yes, thank you. I can agree with all that Yanis already said, but let me put it in a different perspective, maybe a more structural one. The truth is that all economic adjustments in Europe are more gradual than in the US. We don't have in Europe, in the European economy, by and large, not in the labor market, not in the real goods economy, the boom and bust sort of cycle that we observe in the US. And it is very important to stress the reality that Yanis mentioned, that for us this is pretty much an inflationary process that is imported. The impact on the terms of trade in all countries in Europe is very, very large. That's why also when we look at the numbers of inflation and argue, for example, of the positive impact of inflation on the debt to GDP ratio, this is a little bit tame because the GDP deflator actually in our economies is much lower than the inflation rate. Because of these terms of trade loss that is here. So we don't even benefit as much as in other inflationary processes for this. So the reality is really different in Europe than in the US. I mean, we need to adjust policy to this. But of course, the global financial conditions are global and somehow the interconnections are there, and we of course need to also accommodate that in our policies. Thank you.
Thanks. Perhaps maybe you could indicate where you expect interest rates to be by the end of the year or the first quarter of 2023 in Europe. Would anybody like to hazard a guess?
Well, I don't know if Constantino wants to take the turn.
It's
I can just say, yeah, that's a good question for Constantino, but let me help him. We are data driven, so it's very difficult to look at the end of the year, but please, Constantino.
I think you saw the friendship at play just now. I can only say what Mario said, but let me qualify that. Firstly, we make the decisions in Europe not by trying to match the pace of the Fed or any other central bank, but based on the data and dynamics of the Eurozone. And a major difference was that we don't have the same tight labor market and wage increases in the Eurozone that the US is facing. Hence, the gradual approach that I agree with Yanis and Mario and with the ECB policy implemented, because we need to have a very careful balancing act in curbing inflation while maintaining economic growth, and that requires a gradual approach. Now, What does that mean? We have already indicated through the last monetary policy statement that the intention is for a July rate at 25 basis points. That's public information, but we will need to see the data. And then once we see what the aftermath of that is and how that impacts projections, we will revisit the data, as Mario said.
I think Konstantinos has covered the issue fully and completely.
Okay, I know I'm fighting a losing battle trying to persuade anybody to say what they expect inflation to be in the Eurozone by the end of the year. And if policy is following the data, then we're probably not going to get an answer. I can say what our forecast is, which is for 3 rate increases this year, and that they would be front-loaded. In a sense, that what I got from ECB communication so far was that actually inflation was being prioritized over growth. But obviously the messaging here is slightly different. And I do want to take questions from the floor as well, but I just wanted to pick up on the point again that several of you made about the importance of coordination and how should going forward now, the monetary authorities and fiscal authorities, governments, coordinate. Is that already happening? How important is that now? Could we end up in a situation where actions of central banks make life quite difficult for governments and finance ministries?
Do you want me to start? The European Central Bank is independent, so by its statutes cannot take orders from any other authority. Fiscal dominance is not accepted, but that doesn't mean that we should not talk to each other. We should not talk to finance ministers. I think both Mario and myself, who have been on the other side of the hill, so we need to know what the fiscal side is doing. Actually, if the fiscal framework is efficient, then the monetary framework is also more efficient. So although we do not coordinate, but we want to know what the other side is doing. And as also many other colleagues have noted, the Eurozone is a complete monetary union, but it is not a complete economic union. It is not a fiscal union. It is not a banking union either. We don't have a deposit insurance scheme. If we make progress on this, that definitely this will facilitate the transmission of monetary policy, beyond any doubt. And of course, there is the other big issue, which the Eurogroup now takes on, which is the new fiscal framework. Definitely, I think we can say that the Stability and Growth Pact is outdated, and we need a new fiscal framework which will not be procyclical, will take care of debt sustainability in every member state, and also will take care of symmetric shocks like the pandemic, like the war, by perhaps making permanent an instrument like the NGU. The RRF is a good example of what we need for the future on the fiscal side. This all will help monetary policy a lot.
Thank you. Governor Centino, would you want to add anything to that?
Well, this is a topic that is very close to my heart, so I can spend many minutes to say on this. Just to underline precisely in my initial introduction remarks, I stressed that we don't have a fiscal union. You are absolutely right, Yanis. But 2020 brought a very big step that we now need to kind of honor implementing it in all countries. with the Next Generation EU, with the emission of debt at the European level that benefit all countries alike. This was a very big step that sometimes we forget, and it is being implemented. So the situation today is not comparable to what happened in previous episodes. So that's why I also think we should frame the idea of moral hazard in a different way now in Europe. Look at the apparently timid reaction of fiscal policy in Europe compared with the US. We need really to, within our independence, as Yanis very rightly put it, we need to engage in a European debate that is obviously of free institutions as the ECB is. So I think we need to be very close to this debate. And we have the instruments, much better instruments today than we had in the past.
Thank you. In the few minutes we have left, I have a couple of questions, but I'd like to give the opportunity to our guests here in the room, if there's anybody who'd like to make a point or put a question to anybody on the panel. Gentleman over here, have we got a mic? And if you please can stand up and introduce yourself, that would be great.
Καλησπέρα. And I have a question about the current euro exchange rate. We know that just yesterday hit the 20-year low against the dollar, and because we have so much talk about the inflation, we know that we price the energy in dollars. So I feel that a big part in our inflation comes from the exchange rate. And the question is, how comfortable ECB officials feel about that?
Thank you very much. Did you hear that question okay? Yes, okay. Who would like to take that, first of all?
You start first, it's your turn. Firstly, we don't target exchange rate as a matter of policy. What we do take into account is the effects of the exchange rate into the inflation. Point number one. Point number two, the big majority of the inflation increase is primarily energy related, but not so much exchange rate related. It's energy and commodity prices. I know they're priced in dollars, but it's the spike in their actual price rather than the effect through the exchange rate. And therefore, by targeting inflation itself, which is the primary objective of the ECB and the Governing Council, this is how we will manage inflation as well as everything else.
I agree.
Okay. Everybody's in agreement. In the previous session, in conversation that my co-chair Daniel had with Mr. Hardouvelis, there was a discussion about possibility or risks of a wage price spiral. And you know, I know you've all talked a little bit about the situation in Europe, but are there any signs that may happen, that things are actually starting to change on that front? And is that something that you would factor in as a significant risk?
We don't observe important second round effects in wages in Europe. We track wages up to now. Nobody knows what's going to happen in the future. Although we have a tight labor market, wage growth, taking into account productivity growth, is consistent with our 2% target in the medium term. So up to now, we haven't observed any excessive wage demands. The reasons might be many. People, I mean, don't forget that we came out of a big crisis, so people want to retain their employment, I think. The labor markets are more decentralized now compared to the past, So that's two explanations of why this is happening, I think.
I mean, at the same time, we are seeing maybe more strikes here and there. Certainly in the UK, we've been seeing that, but in other places too. And the point was also made that we have a labour movement which is much less unionized than in the past, and maybe we're not going to see the same sort of thing that happened in the 1970s or the 1980s. At the same time, I would say that in some ways the unions kept a lid on a lot of unrest in the past, and we might see something a bit more uncontrolled happening in many places. Not primarily maybe in Europe, but in other parts of the world in terms of social unrest. So, you know, things could change actually quite quickly in the coming months. So just over to you, Governor Centino, on this point.
Yes, it's true. It's true that we need to be prepared for changes. It is true that we see some signals in the business cycle that can be in a way that it can move fast than until now. We hope economic policy can help, of course, on that. But let me add a few remarks to what Yanni said on the labor market. Again, the labor market in Europe, contrary to what happens in the US, it's a much more stable labor market. Actually, it increased in size, contrary to what happens in the US, in which total labor force is still below pre-COVID period, and which is not the case in Europe. All labor markets in Europe, national labor markets, are actually larger than in the pre-COVID period. This, of course, is the result of a policy pretty much directed to contain employment losses in Europe, contrary again to the US. And in some sense, these wages did not need to be renegotiated now. Contrary to the US, in which lots of hirings, new hirings means new wage negotiations, new wage formations. In Europe, this is not the case. So the scenario in Europe is a much more stable one. Also because of this, we adjusted hours, not bodies. But this is a structural feature in Europe. This is not something new. And I will add an argument that that does not contradict the idea of unions being present in these negotiations. But the truth is, in the past, supply shocks generate lower wage demands in the negotiation than demand-driven shocks. So we must be aware of that, because the risk of losing a job is much larger in the context of a supply shock than in a demand shock. So this also is going to be taken into account. It's my expectation, and that has nothing to do with the power of unions or with the share of capital and labor in national income. It's just a matter of the nature of the shock. So I think we need to be prepared. We need to understand fully that the cost of a crisis would be much better dealt with if we are able to coordinate our way out of the crisis. And this coordination includes, again, as I mentioned in my introduction, governments, firms, and households alike. So we really need to talk, communicate a lot all these issues in our societies.
May I add two more points here that might help the discussion? First of all, in what point that we differ dramatically from the 70s and 80s on this point is that we don't have the degree of wage indexation that we had in that period. That helps a lot. And our recommendation to governments and labor institutions is that they should not reintroduce in the wage contracts wage indexation. It would be that would create a price spiral where the labor force will lose, I think, at the end of the day. Second, despite the fact that we have a supply shock from energy, energy is not that important today as it was in the 70s. For instance, to produce 1 unit of GDP, if you wanted 100 units, let's say, of energy in the 70s, you need 50 units now. So it is more than 50% less energy intensive our economies, which is extremely important.
Absolutely, that was a point that was made by Mr. Hardoubelis in the last session as well, so well taken.
Just one more point to add. Firstly, I agree with what Yanis and Mario said, but another relevant point is that data so far is showing us that inflation expectations have not de-anchored, which is relevant for wages. And they are still at 2% in the medium term, and hence we are talking about normalization of monetary policy, and to link it back to the beginning of our discussion with the gradual point that I think all three of us have made here.
Okay, I think we've got to wrap it up with one final question. So this morning, on several occasions, Klaus Regling, who was with us in our opening session, was absolutely emphatic that there's no chance of another sovereign debt crisis in Europe. So I want to ask you if you agree with that. I want to ask you then, why did Italian yields rise very sharply against the German equivalents? So we saw the spreads widening and the ECB convening an emergency meeting, and now we have the discussion about the anti-fragmentation tool. So what's going on there? Is that just markets panicking in response to the discussion about recession? What's going on? And do you agree with Klaus Regling that there's absolutely zero chance of us running into problems of the sort that we've experienced in the past? And do you expect an anti-fragmentation tool to actually be adopted quite quickly? And are you confident that it would not actually run into political or operational problems in the way that some have suggested? Maybe we can start with you.
Happy to start this one. Firstly, in terms of the divergence in spreads, we need to remember that there is heterogeneity between the European economies. Hence, the divergence in spreads, it doesn't mean fragmentation that is because of a panic in the markets. Of course, sovereigns are different, economic fundamentals are different, and this is reflected in the spreads. When we convened to discuss the anti-fragmentation tool, it wasn't because there was anything to say that we have already had unwarranted fragmentation, but we wanted to have a tool ready to act in case there is unwarranted fragmentation. And our discussions are well advanced. We've had a number of discussions. I would rather talk only about, as we kind of phrase it at the Governing Council, the country I know best than other countries, but I think the economic fundamentals are solid, and therefore I don't see any risks at present, but it's good to have the tool there because it does provide comfort to the markets.
Thank you. Governor Centino?
Well, given the differences that we have in the institutional setting in Europe compared with what was prevailing in the previous crisis, I tend to agree with Mr. Regling. On our part, I just want to mention that the flexibility on the purchases under PEP was already in our decisions back in December, so it was not a novelty. I mean, it's true that the meeting was called as an emergency, but the instrument was already very well known and perceived by everyone. So we need to continue this process of, from the ECB side, having a toolkit that allows us to face the challenges we know that we face, and to continue the normalization of monetary policy to a neutral stance. This is very important, and this will, I'm also sure, very well understood by the markets, and we will be successful in this process.
Thank you very much.
I fully agree with Klaus Regling. Actually, here in Greece, we owe a lot to the ESM and the way it structured our debt restructuring in Greece in the previous years, in the three agreements. This is the other side of the coin. We might have austerity and difficulties, but the other side of the coin is that Greece managed to refinance the whole of its debt, almost the whole of its debt, with a very low interest rate. To a large extent, thanks to the ESM. The average effective interest rate of Greek debt is only 1.4% now. A small percentage of debt is being refinanced every year. So even if now interest rates are higher than 1.4%, the average remains very close, anchored to 1.4%. So we don't have definitely a debt crisis. We're not going to have a debt crisis. So I fully agree with Klaus. But that does not mean that the rise in interest rates do not present a problem for the economies. For instance, banks, as you know, state bonds are benchmarks for the pricing of bank bonds as well. So we have to be vigilant. So it's not only the public sector, it's also banks, and it's also the private, large private companies that borrow from abroad. Fragmentation episodes do not only related to the public sector, but also to banks and to the private sector. So that's why we need to be vigilant in the ECB, and we are vigilant. And I think that at the end of the day, we'll agree on this transmission protection mechanism, as we call it now.
Okay, thank you very much indeed, all of you. That's bringing us to the end of our panel. I'd like to thank all of you very much indeed for being here with us at the end. This is the end of our 26th Economist Government Roundtable here in Greece. And against the backdrop of this, of the biggest security challenge that Europe and the world has faced for a very long time, whose geopolitical and economic ramifications will be felt for many years to come, we had a very successful event. And that's really thanks primarily to our wonderful speakers, including you gentlemen now, to our wonderful sponsors, and to all of the people who have participated in the event from around the world, not just from around Europe, from the States, from the Middle East, from other regions of the world. You've made it, all of you, a great success. So on behalf of The Economist and Economist Impact, I'd like to thank all of you. I'd like to thank my co-chairs as well, Daniel Franklin and Alistair Ross. And finally, of course, I want to thank Nectaria Pasirivaki and her stellar team, who, as usual, have excelled themselves in putting this wonderful event together. For those of you who are staying with us, enjoy your evening and enjoy the dinner tonight. And please join me now in thanking our three speakers. Thank you very much, Governor, for joining us. It was great to have you with us.
Bye-bye, Mario. Bye-bye.
I think we need to do.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα και εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present could meet? What if, to save the landscape, we changed it? What if the future began by looking at our cities under a different light? What if we revolutionize the way we stop, not just the way we move? What if transforming the world started from our homes? Like Thomas Alva Edison, we never stop asking questions. The questions that push us to focus on renewable energy sources, decarbonization, and energy services. To build together a more sustainable and better future for everyone. Edison, becoming the energy that changes everything.
More than half a century ago, we envisioned the future, with people living in sustainable cities, in harmony with nature, with contemporary infrastructure, empowering quality in daily life. We envisioned the future and paved the way for the short and long journeys that connect people's lives and make dreams come alive. We believed in the clean energy revolution and the power of innovation, and ventured forth. We believed in our people, who carried their skills and expertise all over the world. We believed that everything new we undertake should create opportunities and bring prosperity to all. Gek Turner Group, investing in Greece, investing in the future.
It is the future that calls us, our history that forms us. It is a passion that drives us for doing now what patients need next. Together as one, we pursue a better tomorrow. An ever-forward evolution of discoveries across boundaries, among partners, beyond failures, around the world. There are countless reasons why we do what we do every single day. But at the core, it is about our most precious gift: life. Life. in all its beauty and its complexity. Life as moments to be experienced, shared and remembered. Life as possibilities beyond the horizon. Life transformed by science, from despair to hope.
The wealthiest, the most successful people are generally international.
The world is becoming an ever volatile, ever-changing place, changing much faster than it did before. There's a class of person out there now who's actually rapidly adapting to the changing environments.
The world is moving to global citizens.
Henley & Partners is a unique firm that is addressing the needs of this global citizen.
Like so many times in life, you don't get aware of the need until you really ended up in a situation, and then it's too late.
Or it's quite useful to have just options.
Ultimately, quality of life, education, mobility, security, and tax. In this international and global world that we're in, these are the tools you want.
Truly the ultimate symbol of freedom.
Yes, being free.
It's the ability to live where you want, travel where you want, raise your kids where you want, and not subject your family to the fate of where you happen to be born. You actually get to choose.
I find that Henley & Partners are a professional company, but they're also very approachable.
Very open communication. It's like you know somebody for 30 years.
It always starts with an initial meeting where we really establish whether we are the right people to deal with and whether the client is right for us.
Well, from the point of view of the clients, and I've heard this from so many of their clients, the word family just comes up over and over again. It doesn't feel so much like going and talking to a professional services firm. It feels like a family.
And what we found is when we turn to Henley & Partners is we get the answers right away, and it's straightforward, and the timelines are condensed dramatically, and that gives us very much a sense of comfort that we're in good hands and we're with people who know what they're doing. It's a fantastic kind of all-encompassing service that you get when you come to Henley & Partners.
They know what they're doing. They're professional, efficient, courteous.
They are providing a true service to these global high net worth individuals that are concerned about taxes, concerned about their freedom, concerned about the safety of their families.
And that's what Henley & Partners offers our clients, and that's what Henley & Partners helps create and construct for governments.
The fact that they have so much experience actually working with governments to set up these investor schemes means, A, that they understand them back to front, because they've designed many of them themselves. I mean, they're there working with the governments to create them.
Henley & Partners is really the firm that created this industry, pioneering many of these programs.
I'm not aware of any other company that has the knowledge of both sides of the equation so deeply, so intimately, that they can really claim to be experts on both sides.
That's what Henley & Partners does, and we do it very well.
Από το τίποτα ξεκινάει.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα κι εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present could meet? What if, to save the landscape, we changed it? What if the future began by looking at our cities under a different light? What if we revolutionized the way we stop, not just the way we move? What if transforming the world started from our homes? Like Thomas Alva Edison, we never stop asking questions. The questions that push us to focus on renewable energy sources, decarbonization, and energy services. To build together a more sustainable and better future for everyone. Edison, becoming the energy that changes everything.
More than half a century ago, we envisioned the future, with people living in sustainable cities, in harmony with nature, with contemporary infrastructure, empowering quality in daily life. We envisioned the future and paved the way for the short and long journeys that connect people's lives and make dreams come alive. We believed in the clean energy revolution and the power of innovation, and ventured forth. We believed in our people, who carried their skills and expertise all over the world. We believed that everything new we undertake should create opportunities and bring prosperity to all. Gek Turner Group, investing in Greece, investing in the future.
It is the future that calls us, our history that forms us. It is a passion that drives us for doing now what patients need next. Together as one, we pursue a better tomorrow. An ever-forward evolution of discoveries across boundaries, among partners, beyond failures, around the world. There are countless reasons why we do what we do every single day. But at the core, it is about our most precious gift. Life. Life. in all its beauty and its complexity. Life as moments to be experienced, shared and remembered. Life as possibilities beyond the horizon. Life transformed by science, from despair to hope.
Together to celebrate life.
The wealthiest, the most successful people are generally international.
The world is becoming an ever volatile, ever changing place, changing much faster than it did before. There's a class of person out there now who's actually rapidly adapting to the changing environments.
The world is moving to global citizens.
Henley & Partners is a unique firm that is addressing the needs of this global citizen.
Like so many times in life, you don't get aware of the need until you really ended up in a situation, and then it's too late.
Or it's quite useful to have just options.
Ultimately, quality of life, education, mobility, security, and tax. In this international and global world that we're in, these are the tools you want.
Truly the ultimate symbol of freedom.
Yes, being free.
It's the ability to live where you want, travel where you want, raise your kids where you want, and not subject your family to the fate of where you happen to be born. You actually get to choose.
I find that Henley & Partners are a professional company, but they're also very approachable.
Very open communication. It's like you know somebody for 30 years.
It always starts with an initial meeting where we really establish whether we are the right people to deal with and whether the client is right for us.
Well, from the point of view of the clients, and I've heard this from so many of their clients, the word family just comes up over and over again. It doesn't feel so much like going and talking to a professional services firm. It feels like a family.
And what we found is when we turn to Henley & Partners is we get the answers right away, and it's straightforward, and the timelines are condensed dramatically, and that gives us very much a sense of comfort that we're in good hands and we're with people who know what they're doing. It's a fantastic kind of all-encompassing service that you get when you come to Henley & Partners.
They know what they're doing. They're professional, efficient, courteous.
They are providing a true service to these global high net worth individuals that are concerned about taxes, concerned about their freedom, concerned about the safety of their family.
And that's what Henley & Partners offers our clients, and that's what Henley & Partners helps create and construct for governments.
The fact that they have so much experience actually working with governments to set up these investor schemes means, A, that they understand them back to front, because they've designed many of them themselves. I mean, they're there working with the governments to create them.
Henley & Partners is really the firm that created this industry, pioneering many of these programs.
I'm not aware of any other company that has knowledge of both sides of the equation so deeply, so intimately, that they can really claim to be experts on both sides.
That's what Henley & Partners does, and we do it very well.
Από το τίποτα ξεκινάει η ροή. Χθες ήταν η πέτρα που σκάλισε τον χώρο. Και έμεινε στον χρόνο. Σήμερα είναι το σώμα. Που έχει μέσα του τον κόσμο. Αύριο θα είναι η φύση που δίνει ζωή στη ζωή. Ροή είναι η συνεχής γραμμή που ενώνει το παρελθόν, το παρόν και το μέλλον. Και είναι στο χέρι μας να τη διατηρήσουμε. Γιατί είναι η δύναμή μας. Βίκος. Δύναμή μας, η ροή μας.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Ladies and gentlemen, if you could take your seats, please. So welcome to our gala dinner, the closing event of this government roundtable. Let me just say before introducing our keynote speaker this evening, just a few words about the event and the conversations we've had over the past 3 days. So this event, this conference, has taken place against the background of war in Europe. And we've had very serious and I think very meaningful debate and discussions about the war itself. We heard from President Zelensky right at the start of our conference and about the implications, the impact that it's having through energy, high energy prices, and through inflation. So we've had a lot to talk about. In addition to a rather full room at most times throughout these 3 days, you might be interested to know that today, for example, we had about 12,000 people watching the conference remotely through the streaming of the discussions to talk, as we discussed today, about the economy and business and finance. Yesterday, when we were focusing particularly on energy and business, we had 12,500 viewers streaming. And on our first day, when we were talking primarily about geopolitics, we had over 52,000 people. So it wasn't just the people in this room, but a very wide audience who were fascinated and engaged in what we've been saying. And the fact that we've had so many people following this conversation, I think, is first of all a tribute to the quality of the speakers. So I'd like to thank all our speakers who've made it such a successful event. Please join me in thanking them. This event couldn't happen without our sponsors. There are many of them. I'm not going to name them by name, but we're immensely grateful to you for your support. You enable this to happen, and I've been hearing again and again what an important occasion this is in the calendar of Greece every year. It couldn't happen without you, so thank you very much to every one of you. It wouldn't happen either without the people who attend, so I'm grateful for those who come in person, who've sat through very long days with great patience. We haven't had an awful lot of time for questions this year because the program has been so full, but I'm grateful for your engagement and participation. I'm grateful also to my co-chairs, to Joan and Alistair. Thank you very much indeed. You've done a great job. And I'd like to say a special thank you, as always, but I think you really excelled yourself this year, to the organizer here in Athens of the event, to Hasis and Revis, to Nectaria and all her team who does such a fantastic job. Thank you. So it's part of the tradition of this event, fantastic tradition of this event, that we hear not just from the government but from the main opposition leader. Alexis Tsipras is a familiar figure at our annual conference. By the time we hold this event next year, we don't know the exact timing that this will happen, but there will have been an election in Greece. So we're always interested in what you have to say to us, but we're particularly interested as we go into what will be an election year, and we are very grateful to you for joining us and giving the keynote event speech at this closing event. Alexis Tsipras, you're very welcome.
Θέλω να σε ευχαριστήσω.
I'd like to warmly thank you for the invitation to take part once again as a keynote speaker in the Economist event. It's been many years that I have been receiving and replying positively to this invitation. It's more than certain that next year, I don't know in what capacity I will be here because there will be elections in the meantime. But allow me to talk about issues that do not relate to the daily domestic disputes and conflicts we have, but of general importance. And allow me to start my speech with a topic touched upon by one of the main articles of The Economist of this week's edition, mainly by the finding that the explosion of prices in main commodities, in foodstuff, the energy prices rise, brings humanity in front of massive reactions by the societies, which the author of the article has described as hungry and angry. I think that this is the main thing we have to understand today. Regardless what is the ideological starting point of ours, we find ourselves in front, or actually inside, a boiling pot. Maybe the temperature varies across the world. But what is for certain is that this pot is boiling because of the same reasons. Quite often I have made reference to the main two critical questions, actually questions of life and death that prevail across the world. The first question, how to contain the climate crisis, and the second one, how to contain the consequences of the financial model that has applied over the past decades. These questions have been brought to the surface by the pandemic in the most tragic of ways. The climate crisis erodes both the natural and the social environment. Natural disasters multiply, and mankind is dangerously delaying its green transition while inequalities expand. At the same time, the model of our economy's organization and structure and the model of our society is so outrageously unfair, which is completely unfounded for someone to believe that this might be sustainable. In a world in which 10% of global population owns 76% of global wealth, according to the World Inequality Report for 2021, I think that the last thing we should wait is stability and cohesion. The pandemic turned this gap of inequalities into something even more dramatic. It is quite telling that although global economy goes from the lockdown-induced recession to the current inflation, we have 573 new billionaires added in the list of the richest people in the world since 2020, according to the Oxfam report. Truly, is anyone who believes that this relentless trajectory towards inequalities, towards blatant social injustice, is anyone who believes that this makes our world a more safe, a more sustainable place to live? Is it high time that we put an end to our illusions about the autopilot of the market, to put an end to the unending hunt for profits that ignores the main prerequisite of social cohesion or even the prerequisite of global stability? In this tremendous picture of inequalities that used to apply until yesterday, which I just described, but until yesterday, Today, we have two additional factors which are expected to further expand these inequalities and make the financial and political atmosphere even worse. The first one is the crisis induced by high prices and inflation. After many decades, they are both re-emerging in a very intense way, very acute way, mainly because of imbalances, supply-driven and demand-driven imbalances during the pandemic, showing the weaknesses of how economy has been organized in the context of globalized supply chains and value chains, and of course, the fact that the course of green transition is not in line with the emergency of the current situation. This brought Europe before the spectrum of energy insecurity and induced inflationary explosion. And the second, and because that's the first reason that makes inequalities even worse and makes the atmosphere even worse, the second reason is the war in our wider neighborhood. Russia's invasion in Ukraine, well beyond any understanding of international law, and the fact that they opted for having a conflict with the West, funds the fire of high prices and makes everybody understand that we are not before the end of history, but we find ourselves before the nightmare of potentially a nuclear war, and we all have to be alert. We all have to fight for something that in the past decades we used to believe as something which was a given, peaceful and a safe world. The financial warfare, next to the military warfare, has led us to an unprecedented energy crisis, and I'm really afraid that very soon we will find ourselves before a food supply crisis. Europe experiences these repercussions in a more intense manner compared to the rest of the developed world, and Europe pays the toll for the lack of leadership and the inability to draft a self-sustained course in the long run. Being dependent on Russia for our energy and trapped ideologically in the neoliberal recipes that have failed, and has to deal with the explosion of energy costs and very high inflation rates that directly threaten both social cohesion and fiscal balance. Sadly, for us Greeks, these circumstances we are quite familiar with the circumstances. The crisis that started back in 2008, it was the states that have decided to save banks. Now, instead of banks, we have energy companies in Europe. Within a few years, they see that their business plans are about to collapse, and they have to compete for some minor energy reserves at prices that are 4 times or 5 times higher compared to the prices contracted already for Russian gas. And of course, the countries intervene because they're afraid of potential collapse of these companies in order to secure public interests and energy safety. Nationalization of French EDF, as announced yesterday, it's the power corporation of France. This is, I think, the most vivid, the strongest example of this new direction, and shows a tendency which is completely foreign to the practices of the Greek government, which, in times of energy crisis, the Greek government opted for privatizing PPC, depriving the state from our main tool to manage this energy crisis to the benefit of the public. So we find ourselves at a marginal point, at a critical point for Europe. Last year's 20-year record low of euro vis-à-vis the dollar was both a shock and a reminder of how wrong our continent has been in these quite challenging and difficult times. And this development aggravates the inflation-induced crisis in Europe even more. This difficult conjuncture is further aggravated by the practice of how we dealt with the Ukrainian crisis and dealing with Russia's invasions, because there is no doubt that everybody, we have all supported the sanctions, we stood by them, and we will stand next to the Ukrainian people that is affected by a barbarian attack. But we must not ignore that we haven't been prepared over the past years for that Europe is dependent on Russian gas reserves, and when one implements sanctions, then one does that in order to punish the aggressor, not to affect the ones that impose the sanctions, because sanctions are effective when they deliver in order to find a way out. Instead of doing everything we can in the diplomatic field, together with sanctions, aiming at peace and security, I'm afraid that we accepted a rationale of indefinite participation in a war by financial means, which, as we say in Greece, we use an expression, we have been firing at our feet. These choices have come with a cost, because they are actions, they are forms of reaction. They're not actions based on a plan. Sadly, Europe currently doesn't organize drafts or builds a specific structured strategy that will make Europe safe against crisis and this turmoil in our unstable and multipolar world. And allow me to give you two examples of what I mean by plan and strategy that is forward-looking. In 2015, in Greece, the outgoing government left us with empty coffins. We were off track with respect to the program, because the fifth review was not completed, and some 21 billion euros to be paid in that year only. In 2019, the new government had, amongst other advantages, a cash buffer, 37 billion euros, and a sovereign debt that was fully regulated. Many things have been said about this cash buffer, but not as many words have been exchanged about our work with respect to the debt. I think an outcome that has not been promoted, has not been highlighted as it should, was that great part of our debt has a very low interest rate, 1%, which is fixed. So conservatively speaking, this means some 75% of our total debt, with an average maturity period of 20 years. So if we place the horizon at 5 or 7 years, then we're talking about more than 90% of our sovereign debt. Our financing requirements until 2033, vary from 5 billion euros in good years, as up to 8 or 9 billion euros in the bad years. This number will change very slightly, and of course it's quite lower compared to the 21 billion euros we were supposed to pay back in 2015 when our coffins were empty. I'm saying that because I want to say that the following: that at that time we didn't just think of the period we were experiencing. We wanted also to secure our country's immediate future. We worked in the medium and long run, not just with the horizon of our government's term. We were not interested in monetizing our exit from the bailout agreement, the memoranda. No, we gave a fight. We gave a fight for a sustainable exit. This is something evident right now. After so many years, after those years, in this conjuncture, developing countries, but in other countries like Italy, they are currently facing a huge problem as a result of Fed's decisions to increase interest rates and gradually contain the monetary expansion. And most economists foresee an uprise of interest rates in the coming years. Even the very fear in the Eurozone for the fragmentation of sovereign bonds, which means high interest rates in the south and low interest rates in the north, as dealt with by the ECB, doesn't affect our country that much because there has been such an arrangement in the past. For us, however, the fixed and measurable financing needs allow to free resources for social and developmental policies. So, if the policies are right, the great chunk of the Greek debt may be sustained, while at the same time decreasing the debt to GDP ratio through growth. That's a clear pathway to growth. So, the example of a policy that was forward-looking, that was regulating the debt. The second example is the PRESPA agreement. Foreseeing the risks of volatility, of instability in our wider neighborhood, taking into account the general context of competitions in a European region of critical geostrategic importance, we took a very difficult historic decision for peace, for cooperation, which today, 4 years after, while the war is raging on European soil, turns to be even more important. We knew the political cost, we knew the orgy of slander and smearing that our political foes and rivals and the far right communicating with these rivals of ours that would unleash, but we knew that it would have meant a lot in order to shield our country's interests and restore our role as a pillar of stability and safety and security, so that we don't have third countries, Russia or Turkey, playing a role in our neighborhood. Imagine the kind of position any country, any government in Greece would have been into if they would have to tolerate or put up with the pressures for the accession of our neighboring country into NATO without having an agreement on their constitutional name. I remind you all that because I'm afraid that not only in Greece but also in Europe, the main political tendency is to plan things but not with an eye to the future. What prevails is the trend to kick the bucket, to kick the can down the road. That's why we have reached this dead end. I'm afraid that we have no other option. We have no other option but to turn the wheel to another direction in order to stop the war, to stop the Russian invasion in Ukraine, in order to contain the repercussions of the energy crisis. And for the future, which means to shield ourselves against a potential future fiscal recession, the restoration of our energy safety, the acceleration of fair green transition, the enrichment of the resources and policies that strengthen social cohesion. Allow me to say at this point that for me it's a very positive thing that 3 heads of governments visited Ukraine. I'm talking about the German Chancellor, the Italian Prime Minister, and the French President, and especially the effort made by the Italian Prime Minister on the basis of a specific proposal for peace. If the war continues and fiscal and energy repercussions become more acute, then Europe will be one of the big losers of this war, no matter how it ends. This is why these initiatives have to be one axis of an active and effective European strategy. The second axis is the one that has to do with the emergency measures to contain stagnation and energy poverty. By restructuring the operations of the energy exchange, by establishing a ceiling for the windfall profits of the energy producers, by expanding the escape clause, by reviewing the Stability Pact, and by extending both the scope and the duration of the RRF. The European Union has to take certain decisions in order to have a solidarity-based response to energy crisis and not leave individual states to the mercy of this crisis. To this direction, I think it's quite positive that Commission's President, Mrs. von der Leyen, made an announcement yesterday that mid-July it will be the time when the Commission will present an emergency plan to save the single market and the European industry against the impact of said energy crisis. So I believe that all of us, and mainly the progressive forces of Europe, to exercise pressure to the direction of having these common, sustainable and fair European solutions in place. As far as our country is concerned, the challenges we have to deal with are big. And firstly, allow me to say that under all circumstances, let alone in times of crisis like this one, what we need is the political power to have a plan, to be serious, to have understanding of the need to protect, to the maximum extent possible, both social cohesion and the people's trust to the political system. This is exactly the opposite of from what the current Prime Minister is doing. A government that, sadly, invests in what it invests in populism, in splitting the people and undermining institutions. For instance, the game of Mr. Mitsotakis with the most important manifestation of democracy, elections. He was the one who, let's say, triggered the discussion about slap elections. He made some announcements. He announced candidates for his party. There were leaks to government-friendly media by inviting ministers and MPs to start the battle for getting re-elected. But yesterday, in his split talk, and I think today in his interview he was clearer about that, he discovered and he announced that all the things he was encouraging and preparing until yesterday, snap elections, is not a nationally responsible choice. So I wonder, is there a single citizen who believes that this way, with such a deficiency of seriousness and feeling of responsibility, whether this is the right way to deal with the difficulties we are experiencing with this surplus of multiple crises? In any case, in order to deal with this multiple crisis, what we need is the change of the paradigm, the change of both political and financial paradigm. We need governments with an eye to the needs of our society and to the future, not to political cost. And what it also takes is a set of courageous choices and reforms and disruptions. We have to change course when it comes to our development, and we have to transform our productive model. We should not duplicate or repeat failed recipes of the past that have failed to deal with structural changes of our country, but they have been actually aggravating them. Yesterday, the Foundation for Economic and Industrial Research, EOVE, in their quarterly report, gave a very clean picture of the Greek economy. They warned us that high growth rate is not robust, is not sustained because this growth rate is because of high consumption, not because of a true and sustainable change of our productive model. So, having full understanding of the difficulties we will inherit, We have already drafted, announced, and we keep on elaborating a program of sustainable and fair recovery. Allow me to stick to one point, and that will be my ending remark, about the primordial issue of high prices, of high inflation, and the containment of this explosive mixture created because of energy poverty. Our country needs a government that believes in the regulatory role played by the state by intervening, and not to a government that believes that it is a sin for the state to intervene and regulate markets and of course to protect public interests. We need a government that has the political will to go against vested interests if needed, or big vested interests if needed, in order to regulate the oligopolies of our economy. A government that will strengthen regulatory authorities, that will strengthen its participation in utilities or in companies of public interest like PPC by having a specific management scheme or structure with a specific political mandate to contain prices. Given that the prices, the wholesale prices of electricity are skyrocketing at 300 euros per megawatt hours, and of course with the prospect of having these prices at high levels being quite possible, I think it is an emergency to take immediate and drastic measures, which means suspension of the operations of the energy exchange, a ceiling of wholesale and perhaps retail prices of electricity in order to protect consumers, reduction of the excise tax at the lowest levels provided by the European Commission. These are immediate interventions in order to contain this phenomenon, in order to support social cohesion. As I said, and I want to close with that, what will bring back safety and future prospects for the workers, for the companies, for the households of our country is to be able to organize with seriousness, consistency, and to resolve a robust, alternative, modern political plan for the day after. The prerequisite for that is for a modern, progressive, responsible government to take on, that will act on the basis of public interest, on the basis of preserving social cohesion and protecting the environment. In a few words, the prerequisite is political change, so that Greece may find its space and contribute to the extent it has to a brand new European strategy that will restore safety and future prospects for every citizen of our union. Thank you very much.
Well, thank you very much, Alexis Tsipras, for bringing this conference to a close and making clear that Greece faces critical issues in the year ahead. We look forward to coming back in a year's time or so and taking the temperature once again. So this is my final invitation to you all to come and join us for the 27th Government Roundtable, when we will be discussing exactly the sorts of issues that Mr. Tsipras has mentioned. Thank you for being here this time, and we look forward to seeing you in a year's time. Thank you.
Στις θάλασσες όλου του κόσμου, η Capital Product Partners LP πλέει προς όλο ταχώς προς την πράσινη ναυτιλία με σύγχρονο στόλο 25 πλοίων. Με 15 χρόνια επιτυχημένης παρουσίας στο χρηματιστήριο της Νέας Υόρκης και μακροχρόνιες ναυλώσεις με τις μεγαλύτερες εταιρείες ενέργειας και μεταφοράς κοντέινερ παγκοσμίως, πρωτοπορεί σε μια δυναμική ρότα επενδύσεων σε νέες τεχνολογίες πρόωσης, συμβάλλοντας στην ενεργειακή μετάβαση. Capital Product Partners LP.
Έλα κι εσύ στον κύκλο των ανθρώπων που πραγματοποιούν τα όνειρά τους. Που φροντίζουν και προστατεύουν τον εαυτό τους. Που εξασφαλίζουν το μέλλον τους και αντιμετωπίζουν τα πάντα με αισιοδοξία. Έλα κι εσύ στον κύκλο των ανθρώπων που ξεκινούν με σιγουριά μια νέα ζωή. Που κινούνται πάντα με ασφάλεια. Έλα κι εσύ στον κύκλο της εμπιστοσύνης που πάνω από 1 εκατομμύριο πελάτες νιώθουν εδώ και 130 χρόνια. Έλα στην Εθνική, την πρώτη ασφαλιστική.
Υπάρχουν επώνυμα φάρμακα που φροντίζουν την υγεία εκατομμυρίων ανθρώπων στην Ελλάδα και σε όλο τον κόσμο. Φάρμακα που είναι η λύση για τους ασθενείς, για το σύστημα υγείας, για ολόκληρη τη χώρα. Υπάρχουν επώνυμα φάρμακα ασφαλή και προσιτά που παράγονται με τα υψηλότερα πρότυπα ποιότητας και είναι αποτέλεσμα διαρκούς έρευνας και καινοτομίας. Αυτά είναι τα φάρμακα που αξίζει να στηρίξουμε γιατί μπορούν να προσφέρουν ένα καλύτερο μέλλον για όλους. Αυτά είναι τα ελληνικά φάρμακα. Ελληνικό φάρμακο. Η λύση για την υγεία, την κοινωνία, την ανάπτυξη.
Το δάσος δεν έπαψε στιγμή να μας προστατεύει. Έχει τα μάτια του στραμμένα επάνω μας για να μας προσφέρει στέγη, οξυγόνο, ζωή. Ήρθε όμως η στιγμή να στρέψουμε τα δικά μας μάτια επάνω του. Με την πρωτοβουλία Vodafone Smart Forest δημιουργούμε το πρώτο έξυπνο δάσος στην Ελλάδα που εντοπίζει έγκαιρα τη φωτιά. Αγκαλιάζουμε πιλωτικά περισσότερα από 314.000 στρέμματα στην Πάρνηθα με τη δύναμη της τεχνολογίας και του Vodafone Green Network. Γιατί όταν μπορούμε να προστατεύουμε το δάσος, μπορούμε να συμβάλλουμε σε ένα πιο βιώσιμο μέλλον για τις επόμενες γενιές. Together we can. Vodafone.
What if the past and present